Well, we had thought that the market was getting ahead of itself by pricing in firstly 2, 3, then 4, and then 5, and then 6 rate hikes, even 7 in some cases. I think one sell-side shop was floating the possibility of 9 in this cycle. But we were always on the more conservative side of the fence, and we really struggled to see the Fed tightening rates nearly as much as what has been priced into the market. We've seen a little bit of pullback in recent days on the back of this Russian-Ukraine crisis, but I imagine that Powell would be walking back the prospects of a 50 basis point hike. We are still of the view that central banks are really not apt to deal with stagflationary shocks. They're damned if they do, and they're damned if they don't respond to the inflation and growth shock.
When you look at the trajectory of the narrative in the Ukraine war and the market adjustments we're seeing in price, one can't help but think that could get quite rough in the next few days. Where is a place of equities that build on inflation and so forth, outside of equities and bonds? If I'm looking for a haven, is it gold, is it Bitcoin, is it cash, and how much in the portfolio should it be?
Here's one for you, the US dollar. Among the many transmission mechanisms towards a deeper stagflationary shock, you have the reduced commodity and goods supply angle. You have lower exports to the region hurting net exporters. You have weaker business and consumer sentiment from the spike in inflation. But you also have the risk of tighter financial conditions. And when financial conditions tighten globally, that tends to be very bullish for the US dollar. The market consensus is still towards this chronic bearish bias, looking for some 5 to 6% downside over the next year to 18 months or in the longer term. So I expect that to turn around. And again, investors are not positioned correctly for sustained US dollar strength at this point, and that's a key risk.
Sue, fantastic perspective. Thank you for joining the program. That's Sue Trin, Manulife Investment Management, Head of Macro Strategy for Asia. We still have much more ahead. This is Bloomberg.
Introducing Speechelo, the most natural sounding text-to-speech software on the market. Hey, I'm Joey, and I'm one of the 30 AI voices from Speechelo. You listened to this video until now and you probably couldn't tell I'm not a real human voice. That's because I understand exactly what each phrase is saying, and I know how to put inflections in my voice, just like a real human would do. I was coded in that way that my neuro-linguistic engine will analyze the phrases, and I'll understand when I'm enumerating something, when I have to emphasize a word, or I need to take a deep breath. But you don't have to worry about any of these things. With Speechelo you can generate as many voiceovers as you want with only 3 clicks. Yes, you heard me right. Only 3 clicks. Click number 1. Just paste the text you want to be transformed into speech in our online text editor. Click number 2. Choose the language and voice that you want to use. We offer male, female, and even kids' voices. And finally, click number 3. Click on generate, and in 5 seconds your voiceover is ready to be downloaded. How cool is that? And you didn't have to pay a single cent. And didn't have to wait a week to receive your voiceover. We offer voices that are perfect for training videos, voices that are perfect for presentation videos, and voices that sound like Hollywood movie trailers, and even kid voices that sound joyful and innocent. All our voices have elements that make a voice sound real, and include all the voice expressions needed to make people more engaged in your content and make it sound professional. Actually, 98% of the people hearing a voiceover generated with Speechelo can't tell it's not a real human voice. This video is created with a voice from Speechelo, and you are still here, watching and listening to what I have to say. That proves my point. So here is the deal. For a limited time, you're getting the deal of a lifetime. Normally we will sell Speechelo as a monthly recurring service. But today, because you are in the first 1,000 people to join, you get the special founders offer. You can get Speechelo for a ridiculously low one-time fee and no monthly recurrings. The price you see on this page is the lowest it'll ever be. In fact, the price increases with each minute that passes. If you want to lock in the price, don't refresh the page, don't bookmark it for later, just go ahead and click the Buy Now button below, right now. Once the launch ends, the price shoots way up. But, honestly, even at $500 that's an incredible deal for the power you're being granted. You will make that amount back in no time. Outsourcing the creation of a single voiceover will cost you more than the price of this offering. And you will have to wait after the freelancers, not to mention that you could just don't like the end result. and you will waste hundreds of dollars in vain. I'm 100% confident that you will love Speechelo. In fact, I'm so confident that I'm going to make this a complete risk-free decision for you. If you create a voiceover using Speechelo and you don't like it, I will refund all your money and let you keep the voiceover that you created. So, now that you have no risk, you also have no excuses. Go ahead and click the Buy Now button below and profit from the one-time payment offer, and the huge discount that we have for the first 1,000 users. Let's quickly recap why you should get Speechelo today. You'll be able to transform any text into speech. You'll get over 30 human-sounding voices. You'll be able to create voiceovers in over 23 languages, and you'll be able to create as many voiceovers as you want. Well, what are you waiting for? Click the Buy Now button below and profit from our special offer right now. And remember, you are covered by our 60-day money-back guarantee.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
The capital markets can really help the shift to sustainable and decarbonized global economy. What are you noticing in that as ESG is now the buzzword literally everywhere?
It is definitely the topic of conversation in most meetings I have with company CEOs, with investors, with industry groups. It's amazing.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Let's get you a bit of an overview of a few indexes that have outperformed the negative global sentiment, with higher energy prices bolstering confidence in Gulf equities in particular. The gains led by Qatar, the Doha index up 2.5%. That is the highest level since the end of 2014. Also gains in Abu Dhabi and Dubai. Some of the hospitality and real estate plays lagging somewhat. And then in Saudi Arabia, it was really a materials-driven story that's pushing the benchmark Saudi index up 0.7%. That is the highest level since mid of 2006. Let's get you a quick check of the latest business flash headlines as well. Here's what we're watching. Ford says it's suspending operations in Ukraine, rather in Russia. The automaker told joint venture partners it will halt work immediately until further notice. Ford announced the closure of 3 Russian factories back in 2019 amid a dimming outlook for the market there after waves of sanctions and an economic slowdown. Maersk is halting bookings to and from Russia. It says the war in Ukraine is now impacting global supply chains. Shipping and logistics giant said that sanctions are affecting the stability and safety of its operations. The temporary suspension covers inland and ocean-based transport, as well as all Russian gateway ports. However, shipments of food, medical, and humanitarian supplies will continue. And Apple has halted product sales in Russia. The company is removing the RT News and Sputnik News applications from app stores outside of Russia. It's also disabling traffic and live incident features in Ukraine as a safety and precautionary measure for citizens there. And that is your Bloomberg Business Flash. I want to get to the Russian ruble, the local currency intraday, where we're seeing a little bit of movement here, but nothing like what we saw in the last two trading sessions. Indicated lower than for a third day. Russia has banned coupon payments to foreign holders of ruble bonds. That is weighing on sentiment. Of course, the main focus is going to be whether or not we'll see more pressure, maybe a full incursion from Russian troops into the capital, Kyiv. The market on edge and energy prices elevated. In fact, let's take a closer look at that, because it's really the whole energy complex. It's not just Brent and WTI, where we've seen moves to the tune of about 7-8% for Brent, just shy of $110 a barrel, up 4.8%. But it's also some of the heating oils and gas oil. And that kind of commodity rally is going to affect how a lot of markets understand what might be coming in the second half of the year. Equity futures still called a little bit higher here. Europe in the shadows, though, once again. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Daybreak Middle East, our top stories this morning.
He badly miscalculated. He thought he could roll into Ukraine and the world would roll over. Instead, he met with a wall of strength he never anticipated or imagined. He met the Ukrainian people.
President Biden slams Vladimir Putin's invasion of Ukraine, calling the Russian leader a dictator and warning that the war will leave his country weaker. Brent crude soars past $110, and WTI isn't far behind. That's ahead of today's OPEC Plus meeting, and the IEA is warning that global energy security is under threat. Surging oil prices are, of course, adding to the hottest inflation in 4 decades. Jay Powell is going to try to reassure lawmakers that the central bank will act to curb it. And Middle East stocks gain as higher energy prices support sentiment. Qatari stocks, well, they're off to a blistering start in the first quarter. They're now at the highest level since 2014. Let's circle back to the market action in Asia. Juliet Sali has all the context. Jules.
Hey, Yusuf, yeah, it really is about the surging commodity prices. You mentioned there, Brent at $110. We've got WTI moving towards $109 a barrel. And the impact this is going to have on a number of these Asian countries that are big oil importers. You think of the likes of Japan, China, India. We are seeing a lot of weakness coming through in equity markets today. Asian stocks down for the first time in 4 sessions, a loss of around 1% on the regional benchmark index. You can see Japan's Nikkei 225 is amongst the laggards there. Also dealing with a lot of domestic issues. We've got weakness in Hong Kong as we continue to hear stories about a lockdown in the city and bearish bets against the city's shares climbing to records. We have had a little bit of data out in the region too. You can see a stronger Aussie there, up by about 0.2%. Australia's fourth quarter economic growth rebounding, up 3.4%, most of that coming from household spending, Yusuf.
And then, Jules, the only upside you would expect is in energy players, but there's still some nuances within the spectrum. What are the highlights?
Yeah, absolutely. I mean, we're still seeing weakness, as you probably would expect, on a lot of these airline players in the region. But when we look at the Bloomberg Commodity Index, it is rising the most since 2009. It tracks 23 futures contracts, and we've seen it already more than double from those 4-year lows that we had seen at the beginning of the pandemic in March 2020. We're seeing a big move upside, as you would expect, in a number of these energy players in the region. That index at its highest since January. Let's have a look at some of the big oil producer movements. We've got Woodside Petroleum in Sydney closing out at a 2-year high. A little bit of a domestic story here too. The Supreme Court of Western Australia dismissing an environmental challenge, but you can see a lot of money going into these producers around the region, the likes of Inpex in Japan and producers like CNOOC in Hong Kong. Yusuf.
Thank you very much for that, Jules. Just looking here at the terminal for a couple of breaking lines related to the story in Hong Kong. So this is from Carrie Lam. She is urging citizens to stop panic buying and to stop hoarding food. Also adding that they're working on citywide mandatory testing. So that's just coming through, and we'll wait to see how the market digests that information. What has been a tragically difficult situation in Hong Kong as they try and contain the COVID case numbers. Let's get to Brent crude again, because the commodities extended its relentless rally above $110 a barrel. That's as the IEA warns that global energy security is under threat following Russia's invasion of Ukraine. Gulf bond spreads over U.S. Treasuries have also widened to the most since August of last year. Let's get to Dino Kronfeld, CIO for Global Sukuk and MENA Fixed Income at Franklin Templeton. Dino, I mean, from our coverage this morning, it's clear that there could be quite a bit more pain to come, both for Ukrainians and Russians on the ground, but also for markets. What are you telling clients this morning about regional bonds?
So in terms of the markets, we're starting to see the impact. It's obviously much less pronounced because at the surface, we are obvious beneficiaries from higher oil prices. But these are very sort of short-term implications. Over the medium term, no one really wins from these types of geopolitical escalations. And in higher oil prices, you also lay down the seeds for potential future supply. There will be pressure on governments to increase supply, and it will also accelerate, I think, the drive to find replacements. So, I would caution the sort of enthusiasm people have for now the GCC.
I mean, you talk about how serious the situation is, and that warrants a patient, prudent approach. Just how does that get encapsulated in actual execution of strategy? Where does one do that?
So I think you need to be patient. I mean, we were defensive coming into this just because valuations were already pretty expensive. The GCC has been benefiting, by the way, from higher oil prices over the past 3-4 months. So this is, in a way, an extension of that. And global Sukuk are particularly defensive because they also had very modest duration levels. So we knew we were well placed relative to other fixed income sectors coming into this. But we are not using this as an opportunity to immediately jump in because we think we're in the very early innings. And if you think about the events of the past few days, the market has been frequently sort of assessing and then reassessing their position. And from our perspective, we look at these developments as very worrying, and we're in the very early innings, and we would expect there to be much more challenging decisions and potentially market dislocations. All of these crises, they do present opportunities, but I don't think we're in a position to really start acting on them just yet.
What do you think we're going to get from the Fed chair? Because whatever he signals is going to get fed through the Gulf at a time where it might have its own inflationary issue.
I mean, at a high level, we would think that the path to rate hikes is definitely much lower today than it was just a week ago. I know the market is maybe priced out a hike in March. I'm not so sure that's necessarily the case. But these are extraordinary circumstances, and I wouldn't be surprised if they do delay things. But I think the threat from inflation, is real. I think the Fed went through a lot of pain to sort of signal that they need to start raising rates. The U.S. is still far removed from what's happening in Europe. But without a doubt, what happens, it almost doesn't matter what happens over the next couple of months, right? What you care about really is the end point. And I think that end point today is much lower than before. And there's clearly less risk, I think, attached to duration. And this in itself has caught a lot of investors off guard because a lot of people came into this year really expecting much higher rates.
In terms of the cash that you hold in some of the portfolios, you said that you were defensive going into this. At what point would you say it's time to get even more defensive and maybe sell more into cash? What's sort of the line in the sand here?
Yeah, we don't have a lot of, we'd have to see developments sort of unfold. But right now, the linkages are not direct. We don't have any exposure to Eastern Europe. In terms of, activity, commercial activity, whether it's banks or real estate companies, it's very limited. What you'd really need to see is a very different, rates regime, where you would have to see, very different spread levels to get you to kind of come in. The two areas we're probably looking at the most are rates to decide when to move on that, and then obviously the price of credit. So as things become cheaper or very cheap, then I think that presents an opportunity to start buying. I don't think we're necessarily there yet today.
In the many years that we've known each other, we've spoken many times about a relative complacency that comes up with some of the Gulf oil producers around reform. Yeah. Is that coming back into focus again with $110 a barrel? Where's the incentive?
That's the risk. That's a clear risk. We talked about, supply needing to increase. We think there could be pressure on them individually to raise and support this effort. But that's going to be difficult. But to your point, that's probably the next risk. They've been really good the last few years of maintaining that fiscal discipline, continuing this very impressive pace of reform. But I do agree with you that that does become a risk going forward.
What about the strength of the dollar? At what point does it become a bit of an obstacle for the Gulf?
It doesn't, right? The linkages are strong. They're pegged to the dollar. The dollar will be a beneficiary of this uncertainty in the markets. Again, at some point, some emerging market currencies, I think, could become attractive once again. But I think the immediate reaction to all this uncertainty is strengthen the dollar, and that should persist for the next few weeks.
Dino, I want you to weigh in for me on something, and this is the move that Russia's banned the coupon payment to foreigners on $29 billion in terms of bonds. It's one of the most read stories on the terminal. You speak about emerging markets. To what extent does that maybe taint EM or bring back to the forefront the potential risks around EM that might have to get reassessed?
Yeah, the emerging markets are, the biggest losers, I think, in all of this. If you look at the emerging market bond index, it's down almost 10%. Even investment grade bonds are down 5%, right? And so in that context, you look at global sukuk down 2%. This is what I mean by the relative outperformance. But when you're in this scenario where, you're seeing things develop so quickly, the unintended consequences of them are very difficult to assess very quickly. It will take time. And to your point, now, risk premia or geopolitical concerns, that all is now permanently, or at least for a very long time, will be with us. Yeah. These shifts we've seen are not short term. You don't put on these sanctions only to remove them a few weeks later. You don't change your military policy only to change it the next week. And similarly, when you start making moves to alter a lot of the rules of engagement, it's very difficult to unwind these. This brings back the classic expression, right? You start a war when you want to, but end it when you can. And now everyone's caught up in the frenzy of, counterattacks and attacks. But in the middle of all of this, we're losing the fact that this is a failure of diplomacy. It's a failure for the markets, and it's a failure really for humanity.
Dino, some strong views there. Thank you very much for sharing those. That's Dino Kronfol, the CIO for Global Sukuk and MENA Fixed Income at Franklin Templeton. Well, let's get to the UAE and Saudi now specifically, because they have pledged their commitment to stability in markets and to the OPEC Plus agreement that includes Russia. That's even as much of the rest of the world cuts economic ties to Moscow after its invasion of Ukraine. Simone Foxman, she's been watching the regional response. Simone, a couple of tests that are then on the agenda for Gulf leaders in terms of how they're responding to the unfolding crisis.
Yeah, a tricky day for countries in this region, particularly the UAE and Saudi Arabia, though, because of their membership in OPEC Plus and their key role in that organization is meeting today. Both those countries in the past couple of hours have issued statements expressing their support for the agreement, which of course includes Russia. So that's an uncomfortable happening that's going to be going on today. But what may be more of a litmus test for where countries in this region fall is a UN General Assembly meeting. The General Assembly has been debating for the past couple of days whether or not to pass a resolution that would call for Russia to withdraw its troops from Ukraine immediately. So far, the UAE has abstained from a handful of procedural votes. Other countries really haven't been put to the test, but we may see Gulf as well as Middle Eastern countries have to kind of take a stand on whether or not they support Russia or abstain from everything or support the U.S. and European side. I also want to draw your attention to a couple headlines out in just the past hour because the foreign affairs minister from Turkey was speaking. His name is Mevlut Çavuşoğlu. And he was talking about how Turkey wasn't keen on joining some of the sanctions that we've heard from Europe and the United States over the past couple of days, and they haven't received a request to do so. Turkey in a particularly weird spot here because it's grown closer to Russia over the past couple of years. And then again, we had President Erdogan saying yesterday he believes an expansion of NATO, something that is very adamantly Russia doesn't want. An expansion of NATO is key to world peace. So really unclear where they fall at the moment.
Simone, we just start getting a couple of lines here on Sberbank, which is one of the banks in the crosshairs. So according to Interfax, a Russian news agency, Sberbank is going to leave the European markets. And an additional note here, its European units faced a bank run, and that European units' assets sufficient to pay off all deposits. It comes off the back of Sberbank Europe, which we understand was set to be sold and wound down in the Ukraine fallout. The Single Resolution Board, which handles European lenders that run into trouble, said it decided to transfer all shares in the bank's Croatian and Slovenian subsidiaries to other firms in those countries. The Austrian unit, which is known as Sberbank Europe, will be wound down under local insolvency procedures. So an update there from Sberbank. We keep a close eye on the developments. In the meantime, Simone, where else are we watching out for a reaction to the events in Europe, in regional markets?
Yeah, we were just talking about Turkey, and I think that's the place to watch today. We've watched as the Turkish lira has continually weakened over the past couple of days against the U.S. dollar. But we're also taking a look at the bond market. We have a chart of this that I want to show you. Essentially, we were watching the yields on the two-year bonds rise pretty dramatically over the course of last week. They increased the second most among emerging markets last week, second only to yields on Russian bonds of the same maturity. But this seeming to have a tie-up essentially with rising energy prices. That's what filters into the Turkish inflation that we have been seeing, and that is what's a real problem for the Turkish economy. This is something that may only get worse because news out yesterday, BOTAS, the natural gas operator in Turkey, saying it's going to boost natural gas costs for power plants by 18.3%. This after previous hikes as well, and that could factor in to that inflation number. We get the latest data on inflation for February out tomorrow, and it is only expected to rise. It's expected to top 50% year on year for the month of February, Yusuf.
And then we have more results from regional airline carriers yesterday. What were some of the big takeaways?
Yeah, a note of optimism here. They're really charting the path to recovery from the pandemic. We saw that both from Turkish Airlines, which reported a profit for the 2021 year, less than analysts expected, just slightly. But I mean, after so much damage in the aviation industry, it's just stunning to see a profit there. They also said that international passenger revenues were down 44%. But frankly, that's a number that is just not that bad when we consider how the last last 2 years have been. We also heard from Etihad Airlines. They were not able to eke out a profit, but saw a smaller loss than in the previous year, $476 million. They say their passenger numbers, they expect them to be back to pre-crisis levels come 2023, but they saw a dramatic jump in their passenger load factor in the second half of the year from 30-ish% to 70% in December. Yusuf.
Simone, thank you very much for the excellent roundup. That's Simone Foxman at the Qatar Financial Center in Doha. We still have much more ground to cover, of course. This is Bloomberg. Let's recap some key lines on Hong Kong's COVID-19 crisis, because Carrie Lam has been speaking, and she says that Hong Kong will not do a wholesale city lockdown and that people's needs won't be restricted even in mass testing. Going into this, of course, there were dueling lockdown reports. Understanding was that the testing would go from March 26 to April 3. But again, some clarification now from Carrie Lam on a few fronts. The Hong Kong index at the moment lower in a broadly negative market, with a particular downside in industrials and IT plays. Let's get now to some of the other markets in terms of the impact of the Ukraine invasion, because that continues for Russian stocks, and that's now seeping through to ETFs. Let's get more with our stocks expert, Farah Al-Bahrawi. Farah, what exactly then are you seeing in the liquidity?
Morning, Yusuf. Yes, there's been a lot of developments over the past day alone. We last discussed how MSCI is reviewing how to classify Russian equities on its own indexes, but on the ETFs front, as you just mentioned, the index tracked by the biggest Russia-focused ETF, which is the MVIS Russia Index, they're stopping reviews and rebalances temporarily until the next regular review. That comes after BlackRock also suspended issuing new shares in its own Russia ETF, effectively stopping inflows into that product. So we've had a lot of developments. Even S&P Dow Jones, they said that no equity securities listed in Russia will be added to its own benchmarks. Like you just mentioned, this is really creating an issue for liquidity, and investors are wondering how can they start taking their money out with Russian stocks continuing to be closed even today. We just found out.
And the Middle East stocks soared yesterday. I mean, for Qatar, it was the highest level since 2014. Saudi is the highest level since 2006. What are you seeing under the hood of the indexes?
Yeah, it's absolutely impressive, Yusuf. While a lot of markets were in the red yesterday, Middle Eastern markets were soaring. You rightly mentioned Qatar was a key beneficiary there yesterday, finally catching up with its Gulf peers after lagging last year. In Abu Dhabi, what really caught my eye was First Abu Dhabi Bank up 6%. We had Dubai, which we were just discussing earlier this week, could be affected from the reopening play, but really it's not. And this is all coming down to, yes, of course, the oil price is a really big part. And Goldman, they said that Middle Eastern stocks, they do screen expensively, but with oil prices where they are right now, these valuations are probably likely to remain elevated. But at the same time, that same Russia flows story, if Russia gets deleted from MSCI, Middle Eastern stocks will see inflows in turn, particularly Saudi Arabia.
Farah, thanks for that. Rana, that's Farah Al-Bahrawi there. Still much more ahead on Daybreak Middle East. This is Bloomberg.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Airbnb is offering free short-term housing for up to 100,000 Ukrainian refugees who are fleeing the Russian invasion of their country. The CEO, Brian Chesky, told Bloomberg that he plans to work with neighboring European states to try and provide long-term stays.
We announced yesterday that Airbnb, in partnership with Airbnb.org and our host community, have a goal to house up to 100,000 refugees fleeing Ukraine. Now, since we made that announcement, we've had over 30,000 people visit the page to learn about how to be a host or to donate. And we're just trying to get more word out, because basically the name of the game is the more hosts we have, the more refugees we can house.
What's the feedback you're getting from governments, from border crossings, about the situation that these refugees find themselves in the crosshairs of a war?
Yeah, I mean, we've reached out to 14 different governments in Central Eastern Europe, governments like Poland and Hungary and Romania and Germany. And what they're telling us is mostly thank you, because their last reports I heard, there were over 600,000 refugees that have been fleeing Ukraine. And so these governments need to find a way to house them. And what we can provide is an infrastructure. You know, we've housed 54,000 refugees for free since we started Airbnb, and we've housed over 100,000 people in need for all different events for free. So I think we're being viewed, I hope, as a solution to a problem that they have. We can be a great partner, and I think they're appreciative of the support and the help.
What's been the response from hosts in these countries? Has there been an outpouring of support?
Yeah, I mean, it's just starting, obviously, in the last 24 hours, but we have had a large response so far. Just to give you a point of reference, 2 years ago, when the pandemic initially, of course, broke out, we worked with the French government, for example, to provide housing for workers in the front line. Tens of thousands of hosts stepped up. We had tens of thousands of hosts step up, provide housing for Afghan refugees, and we're expecting a pretty big response. Again, the main thing we need to do is just make sure that in the kind of flood of all the noise going on, that people who have homes that have availability in these countries know that they can take in refugees.
Now, I know Airbnb has a significant number of listings in Ukraine, given the number of short-term rentals I see in Kyiv, in Lviv, in Odessa. Do you have employees in Ukraine? And what is the status of your operations and hosts there?
Yeah, we don't have employees. We don't have a meaningful number of employees in Central Eastern Europe. We're primarily in certain hubs. Now, as you imagine, we have thousands of listings in countries in all over Central and Eastern Europe. And so our big focus right now we're focused on two big priorities. Number one, we were trying to make sure that our hosts and our community is safe. So we're doing a lot of outreach to our hosting guests in countries all over Central Eastern Europe. The second focus we have is try to house as many refugees as possible. And this entire refugee effort, Emily, really started 3 days ago. You know, it was Thursday, Friday, it became apparent that there were going to be hundreds of thousands of people fleeing Ukraine. And so we've worked all weekend through yesterday to be able to mobilize this effort.
The Airbnb CEO, Brian Chesky. I read the headline hitting the Bloomberg again from Hong Kong as we look at live images of the city. Hong Kong is going to report over 50,000 COVID cases on Wednesday. This is according to a media report by Television Broadcast Limited, which is a television broadcasting company based in Hong Kong. That is something we're watching. We're also keeping a very close eye on improving sentiment on U.S. equity futures, specifically on the NASDAQ Mini. We're currently calling as much as 0.5% higher. High energy prices, red hot commodities. The Fed's going to speak later in the day. This is Bloomberg.
We know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccines specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Good morning from Bloomberg's European headquarters. We're just gone 6 a.m. here in the city of London. I'm Danny Berger, and this is Daybreak Europe. Here's what you need to know. Moscow's assault on Ukraine enters a more brutal phase as Kyiv's allies step up sanctions. China edges away from Russia, calling the conflict a war.
he badly miscalculated. He thought he could roll into Ukraine and the world would roll over. Instead, he met with a wall of strength he never anticipated or imagined. He met the Ukrainian people.
President Biden labels Vladimir Putin a dictator in his first State of the Union and says Russia's leader will pay a heavy price for the invasion. Brent crude soars past $110 as the IEA warns that invasion threatens global energy security. Gasoline spikes, OPEC Plus meets today. Well, it's a market that's coming to terms with a war that has entered a more brutal phase and coming to terms with the second-order impact to the economy. Littered throughout this market yesterday were historic moves as the specter of stagflation becomes more real. You're looking at 10-year German bond yields here, which encapsulates this very well, dropping 30 basis points over the past 2 days, the biggest drop since the financial crisis, the fifth biggest move in all of history, nearly unwinding all of the move higher in yields that happened off the back of the ECB's hawkish turn last month. The move is similar across European sovereigns and across the U.S. as well. The issue is this. You have bonds rallying, you have stocks falling, inflation prints still coming in hot, and commodity prices continue to move higher. Check out what oil did yesterday. Brent crude at one point was up 10% yesterday. It's up another 5% today alone, trading at around $110 a barrel. All of this pointing to a stagflationary environment where central banks lose control of inflation. So that's some of the moves over the past 2 days. Let's check out today's markets, where again that commodities move still extremely present. NYMEX crude, I showed you Brent, but this is WTI up nearly 4.5%. Wheat, that's Chicago futures, up above $10 for the first time since 2008. Ukraine, Russia account for a quarter of the global exports of wheat. You still have some weakness in European 50 stocks futures, but yesterday that benchmark in the cash trade fell by more than 4%. So some of the losses easing. I should say U.S. futures have turned positive, and a little bit of steadiness when it comes to your 10-year yield. Those also plunged yesterday. We're still seeing a little bit of buying this morning as markets start to price out the odds of a 50 basis point and indeed start to pull back on their bets of interest rate hikes. Now let's get the latest on the war in Ukraine. And Western military officials are warning that Russia's invasion is entering a more deadly phase, with Russian forces likely to use more indiscriminate tactics to suppress resistance. Let's get the latest from our team in Moscow. So walk us through exactly what the environment looks like and what a more deadly phase of this war looks like.
Well, in short, Ukrainian officials are saying that Russia is targeting and, in fact, bombing residential areas in cities. The mayor of Kharkiv, the second largest city, said that residential areas were being bombed yesterday. And Ukraine in Kiev, Russian military there have said that they've encircled the city, and there was evidence yesterday that they had started striking targets inside the city itself with missiles and artillery.
It is usually during these times when we ask what is the impact of financial markets, the answer often is who cares. But Moscow at the same time, of course, dealing with the financial impact of sanctions put on them. Russia announcing yesterday that they banned coupon payments to foreigners on about $29 billion worth of bonds. What's the thinking there?
Well, they're trying to shore up the economy and shore up the ruble after the impact of Western and international sanctions. The Bank of Russia introduced that instruction to depositories and registries yesterday, last night. And what it means is there's a freeze on local security sales by foreigners, and foreigners are left holding almost 3 trillion rubles of debt, on which they can get coupon payments but not receive them. The bank has said that the payments will be made, but those who hold the bonds won't be able to actually get them.
All right. Thank you so much for the update. Thanks, as always, to our reporting team in Moscow. President Biden has slammed Vladimir Putin's invasion of Ukraine. He called the Russian leader a dictator and warned that the war will leave his country weaker. In his State of the Union address, Biden also pledged to fight inflation and turn the page on the pandemic.
A Russian dictator invading a foreign country. He thought he could roll into Ukraine and the world would roll over. Instead, he met with a wall of strength he never anticipated or imagined. He met the Ukrainian people. I'm taking robust action to make sure the pain of our sanctions is targeted at the Russian economy. We will join our allies in closing off American airspace to all Russian flights. Inflation is robbing them of gains they thought otherwise they would be able to feel. I get it. That's why my top priority is getting prices under control. I have a better idea to fight inflation. Lower your costs, not your wages. The United States has worked with 30 other countries to release 60 million barrels of oil from reserves around the world. And we stand ready to do more if necessary, united with our allies. Under the new guidelines, most Americans and most of the country can now go mask-free.
Bloomberg's Bruce Einhorn joins us now. Bruce, so less than 10 minutes of Biden's address dedicated to Russia, Ukraine. Were there any new announcements made on that front?
Well, we heard just now in the excerpts from the speech that the president announced that the U.S. will close its airspace to Russian airlines. So that was something new. Beyond that, there was a lot of support that the president expressed for Ukraine. He praised the unity among the U.S. and its allies in opposing the Russian invasion. The other two key themes of the speech, the two key sections, of course, having to do with COVID and having to do with inflation. When it comes to COVID, the president talked, as we heard, about how people should be thinking about going back to the office, that it's safe to go back to work. He also touted the arrival of Pfizer's drug, the antiviral Paxlovid, which he said will be available soon in drugstores. So when people test positive, they can immediately get pills. So that is an important part of returning to normal for the U.S. After the Omicron wave. And then he also talked about inflation, as we heard, and outlined a few things that he has in mind to reduce healthcare costs, to reduce the deficit. The deficit point seems like it's one that's catered specifically to Senator Joe Manchin of West Virginia, who in the past has expressed a lot of concern about the Build Back Better plan that didn't make it through Congress last year. So it's unclear, though, whether any of these initiatives in Congress will get anywhere, because ultimately it always comes back to the same issue, that it's a 50-50 Senate. It's very hard to get anything done.
Bruce, thank you very much. And yeah, that conversation on inflation really timely as this market looks towards a potential stagflationary environment. Bruce, thanks as always. That's Bloomberg's Bruce Einhorn. Now, that's the U.S. response. Let's turn to Europe's response. EU ambassadors have agreed to include 7 Russian banks from the SWIFT financial messaging system, and are said to be preparing further measures against Belarus. Joining us now is Bloomberg's European correspondent, Maria Tadeo. So, Maria, we've heard the SWIFT sanctions. Are there more coming?
Well, Danny, what we had yesterday, of course, was the details on the big package that was announced over the weekend, which, of course, as we know, targets the Russian central bank, but also the SWIFT. In terms of the list, we see the VTB is now included, Sberbank is not. But what I would point to, of course, is the picture looking forward and looking ahead. And what we know is that there is a very real conversation happening in Europe about more sanctions, and perhaps at times even including the energy sector, which at this time has not featured in the package. A lot of this has to do with the images that we've seen from Ukraine. Over the past 2 days, this is a picture that has become very severe and very brutal. I had a European official yesterday that told me after the bombing of Kharkiv, this is a completely different war. The nature of this war has changed, and we see that Russia not only targets now military points and military targets, but it really goes after residential buildings, offices, and anything that has to do with local government, including, by the way, at times, Ukrainian monuments that are so important to the history and the legacy of the country. So a lot of concern on that front that over the next 48 hours, we're going to see an escalation purely because this is a country that is fighting, is resisting, and the Russians believe that this was going to be an in-and-out operation very quickly. But what we've seen on the ground is a very different reality. This is now turning into a long, but also, as I said, much more brutal war.
Maria, thank you so much. That's Bloomberg's Maria Tadeo, our European correspondent. Now to China, which says it is extremely concerned about harm to civilians in Ukraine. In the first high-level phone call between China and Ukraine since Russia's invasion, Beijing also called for more negotiations. Chinese Foreign Minister Wang Yi spoke to his Ukrainian counterpart by phone. Bloomberg Opinion's Matthew Broker is live for us in Hong Kong. Matthew, I mean, a phone call between China and Ukraine, does this mean that Xi's commitment of no-limit relationship with Putin, is that over?
I wouldn't say that it's over. Clearly, there are some limits, though. China has been treading, I think, and trying to straddle a very difficult line here. They signed this so-called no limits partnership with Russia only less than a month ago on the eve of the Winter Olympics. And this has been really the first big test of it. China has refrained from condemning Russia. They haven't really stood behind them either. It's been a kind of difficult tightrope that they've been trying to walk. And there are signs now, I think, particularly with this phone call that Wang Yi held and the comments he's made since then, saying that they deplore the conflict. There is some sign of movement there that China is probably under the pressure of the strength of the international backlash against Russia's invasion. That they are feeling a kind of need to move more towards the Ukrainian side and to be more sympathetic.
Well, Matthew, in the discussion of Fortress Russia, which is certainly being tested, if not broken down now, a lot of it had hinged around Russia's reliance on China. Does this change in rhetoric also translate to Russia, which can no longer rely on China, really to help shore up its economy and its financial reserves as the rest of the West pulls away?
I wouldn't expect that at all. I'm sure that China will still be receptive to helping Russia economically. Of course, China itself is going to benefit from this. I mean, China will, if Western Europe is no longer going to be buying gas and oil from Russia, then China will I'm sure, will be only too happy. I mean, China needs oil to feed its own economy, which is the world's second largest. They've also raised limits on imports of Russian wheat. This is all to the benefit of the Chinese economy, so I wouldn't see that changing.
All right, Matthew, thanks so much for joining us this morning. That's Matthew Brooker from Bloomberg Opinion. Now let's get to the first word news. Juliette Sally is in Singapore. Hi, Jules.
Hey, Danny, Brent crude has extended its relentless rally ahead of today's OPEC Plus meeting. This as the International Energy Agency warns global energy security is under threat following Russia's invasion of Ukraine. Futures in London and New York both soared almost 6%, pushing WTI to its highest since 2013. That's despite the US and allies agreeing a coordinated release of 60 million barrels from emergency stockpiles. Yesterday, Russia's flagship Urals crude was offered for sale at a record discount, but received no bidders. The UN is warning that as many as 4 million people could flee Ukraine as the war intensifies, 4 times more than an earlier forecast by the EU. The High Commissioner for Refugees, Filippo Grandi, offered the estimate in a Security Council meeting. He says about 680,000 people have already crossed Ukraine's borders. Apple and Nike have become the latest companies to halt product sales in Russia following the country's invasion of Ukraine. The tech giant is also removing the RT News and Sputnik News applications from app stores outside Russia. It says it's disabling traffic and live incident features in Ukraine as a safety and precautionary measure for citizens there. ExxonMobil has joined key rivals in exiting Russia as pressure grows on energy giants to respond to the invasion of Ukraine. The US company holds a 30% stake in the Sakhalin offshore oil operation in Russia's Far East. It says it will begin to discontinue operations and leave the venture without, though, giving a time frame. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Danny.
Jules, thanks so much. Juliette Sally in Singapore. Now, coming up, we discuss all of the market action with Janet Mui from Bruin Dolphin next. This is Bloomberg.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio. However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
As a company grows, there are more challenges. What do you worry about the most?
The market opportunity for us is enormous, and so our challenge is to continue innovating, driving, and pushing ourselves every single day to go after the most attractive profit pools in this incredible global beauty and wellness market. Welcome back to Bloomberg Daybreak Europe. I'm Danny Berger in London. A quick check on U.S. markets for you. We did have some bond selling to start the morning, but that has flipped yet again into bond buying, ever so slight. Now it's back into selling. It is basically unchanged. This is after a dramatic move in the bond market to start to price out interest rate hikes. You are seeing some reversal when it comes to U.S. stocks, up 0.3% after yesterday's fall of 1.5%. But Brent crude continues to surge, up another 4.5%. Trading at its highest since 2014. Well, let's get into these markets. And with me now is Janet Mui, head of market analysis at Brewin Dolphin. Janet, thanks so much for joining this market. So this morning, two markets, how has your view changed given the increased intensity of this war?
Hi, good morning, Danny. Thanks for having me. Well, at the start of the year, we actually trimmed some of our equity exposure because we feel that this year the headwinds to equities have been building up. And so we have been a bit positioned into the current environment, thankfully. And what we think is that the key concern there is obviously energy prices. And today we have seen oil prices top, $110. So obviously that would put more upside inflation pressure for developed economies in the near term. So this is something that we are closely watching. And I think so far the sanctions have specifically been designed to carve out the energy not to impact the energy flows. And if that is still the case, we don't think that will fundamentally change a lot of the economic picture because I think the concern is the high energy costs potentially, fueling inflation and triggering a recession. So I don't think we will go there yet. So as long as we don't see a recession coming in Western economies, we think that the fundamental case there is not changed. But of course, we are closely monitoring the situation.
Right.
Yeah.
So if it's not stagflation, say, that we're heading into, that's not your base case. Does it make sense then to start to price out some of the moves from the Fed that the market has done over the past few days? I believe about a 5% probability pricing that the Fed won't move at all in March. Is that a mistake then? Is the Fed still able to continue to hike rates in this environment?
We believe that, first of all, the 50 basis point hike is off the table in March. But I think the 25 basis point hike is very likely to go ahead in March because the U.S. is still facing an inflation problem. And I think the Fed has to address that. And I think they make it pretty clear that they care about that. And I think a lot of Fed officials are in line with that view that they have to tighten policy from March onwards already. And so we do think that, previously, there were a lot of strategists coming out and say this year we could see as much as 9 rate hikes. I think it's from JP Morgan. We felt that that's not going to happen. But equally, we don't think the Fed will just stay there and do nothing. So we expect a couple of rate hikes. I think 5 seems fair, 5 to 6, in the base case scenario where we don't see further escalation as in energy supply being cut off.
Well, in that scenario, I do wonder if the American economy is isolated to some degree, and we do see energy prices continue to rise when it comes to oil and really all of commodities. Could that translate into an even more aggressive Fed?
Well, first of all, we think that the Fed cares about the domestic inflation story, obviously, but I think they do also care about the international picture in terms of what's happening elsewhere. And also they have to think about the feed through from the high inflation into the potentially slower economy. So our base case is not going into recession, but it doesn't mean that there won't be a slowdown. I think with real wage growth going into negative territory, there is a case for lower consumer spending and more depressed spending in the economy generally. I think they have to take that into account. So I think they will go ahead with raising rates because they want to signal that they care about it, they want to do something, but equally I don't think they will go too aggressive if oil prices go further up or so I don't think that would be the case.
Right,
and
it's the uncertainty.
Yeah. So I think that basically Western developed market central banks would not be able to tighten as much if we do see a further deterioration in the situation, because that stagflationary scenario would be more likely to happen, which I don't think they want that.
Right. Fair enough. And I think it's safe to say no one really wants that. Janet, thank you so much. You're going to stick around with us. Much more to discuss. Janet Mui, head of market analysis at Brewin Dolphin. Coming up, oil continues to rise. What's next for the commodity sector? We'll have more on that next. This is Bloomberg.
Is this going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And, you know, if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project, initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Welcome back to Bloomberg Daybreak Europe. I'm Danny Berger in London. Oil continues to soar today, and it comes as the International Energy Agency warns global energy security is under threat after Russia's invasion of Ukraine. The wider Bloomberg Commodity Spot Index has jumped the most since 2009 to hit a new record. Commodity prices are rallying with flows of grain, energy, and metals at risk from the war. Still with us this morning is Janet Mui, head of market analysis at Brewin Dolphin. So, Janet, you were talking about how heading into this, you had sort of pulled back on some of your equity exposure, really serving you well. But in this environment, when we are seeing these sky-high commodity prices, how does your geographic mix look?
So first of all, we are modestly overweight on our UK equities. So that has been helpful because we think that the region should benefit from higher energy prices, given some of the largest energy companies are listed in the UK, and also financials, which should do well when interest rates actually are rising. So I think we have good exposure to that front.
Wait, sorry, can I jump in? Financial still, even though there is this risk of, sanctions impacting Russia's financial system and the global one, because they've sold off pretty significantly at this moment. So still a strong financial thesis even in that scenario.
So in terms of the UK market, we assess that the exposure to the Russian market is actually not significant. So it's mainly the European banks, Austria, Italian and French banks that have the most exposure. UK, I think, is relatively limited in terms of its direct exposure to its financial services and also to economic exposure. So we have assessed the risk and we felt we're comfortable with that in the UK market. To answer your question, I think the UK market actually looks relatively attractive because actually valuation is more attractive versus its peers, and it is likely to benefit from the tailwind of higher commodity prices. And the other region that we have a favorite on is US, but obviously the US exposure, we're very selective in that exposure as well. We primarily have exposure to quality companies. So we do a lot of analysis and we like the factor of quality because we think that we are late cycle, and given the current economic environment, we felt that this is the right exposure.
What do you do with European equities right now?
Yeah, European equities, I think, in the near term, we think that European equities are going to underperform because Europe is obviously having the biggest relative exposure to Russia and Ukraine situation, whether you're talking about direct energy reliance, economic impact, the inflation story, or the direct financial linkages. So Europe is likely to underperform. And the thing is, given the market sell-off, we don't think it's the right decision to sell off, just to sell our position in this current environment during times of uncertainty. So we're holding on to the position at the moment.
All right, Janet, thank you so much. Really wonderful to have you on the program this morning. That's Janet Mui, head of market analysis at Brewin Dolphin. Coming up, we continue the commodity conversation with Ole Hansen. This is Bloomberg.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
How difficult was it to go to investors and say, invest, give money, put money into a travel tech company within this environment?
It wasn't that difficult because TravelPerk is doing much, much better than the rest of the industry. In fact, we are at the moment growing at 4 times revenue of pre-COVID numbers.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Good morning from Bloomberg's European headquarters. We're just gone 6 a.m. in the city of London. I'm Danny Berger. This is Daybreak Europe. Here's what you need to know. Moscow's assault on Ukraine enters a more brutal phase as Kyiv allies step up sanctions. China edges away from Russia, calling the conflict a war.
He badly miscalculated. He thought he could roll into Ukraine and the world would roll over. Instead, he met with a wall of strength he never anticipated or imagined. He met the Ukrainian people.
President Biden labels Vladimir Putin a dictator in his first State of the Union and says Russia's leader will pay a high price for the invasion. Brent crude soars past $110, eases off that level, but the IEA warns the invasion threatens global energy security. Gasoline, diesel spike, OPEC Plus meets today. It's a market that has a lot of digesting to do as we monitor and look at the humanitarian impact of a more brutal war and the secondary impact of an economy which is under threat. It is the specter of stagflation that is being digested and priced into these markets. A historic move in European sovereigns yesterday. Just look at the German 10-year yield falling 20 basis points yesterday. That is its biggest move since the financial crisis, the fifth biggest move in history, unwinding nearly all of the bets that have been made over the past month with the ECB's hawkish turn. It's also pricing out of tightness in the U.S. That's the story as well. Stagflation is the word. Our last guest, Janet Mui from Brewin Dolphin, says she doesn't think we're heading towards a stagflationary environment, but oil markets certainly worrying enough people to price that in. I also want to show you the two-day price chart of Brent. This has caught a lot of eyes. We're about to talk to Ole Hansen of Saxo Bank, who's going to walk us through these moves as well. Trading above $110, up 10% over the past 2 days. So bonds rallying, oil higher, all commodities higher, stocks fading. This is certainly far from a bullish environment, and indeed one that is starting to look more stagflationary. On that note, let me show you WTI and wheat, because while some of the moves have eased this morning, the commodities move is not easing up anytime soon. NYMEX crude at 108. Wheat prices in Chicago, that's $10, more than $10 the first time since 2008. Still looking at weakness in European futures, but some of the declines easing from yesterday. And we've been flipping back and forth between buying and selling on your 10-year, but more or less it is flat, unchanged after dipping below 1.8% yesterday. So let's get back to that oil story with Brent trading near $110 a barrel. The International Energy Agency warned that global energy security is under threat after Russia's invasion of Ukraine. The dramatic price moves will be top of the agenda as OPEC Plus meets later today. Goldman Sachs believe oil can go as high as $115 a barrel, with demand destruction being the only barrier. Our guests also weighed in on the energy market.
The energy trade is going to be disrupted. This is not going to be a smooth thing.
This is an enormous amount of oil that has the potential to be disruptive for potentially weeks.
If you start using the SPR early in the multi-year deficit, is shooting yourself in the foot. You need to keep that for the right reasons.
We've done that before. It really didn't make a huge impact, I think, over the long haul.
There's room, if needed, to put sanctions on Russian oil exports.
I think you're going to see, in effect, a sanction on Russian energy just by the behavior of market actors.
We'll probably lose 3 million barrels a day of supply. This is an amount that the world can afford to lose to some extent.
We would like to be engaged with the administration. I think when they first came into office, they had a whole host of priorities with the pandemic, the economy, some legislative priorities, and engagement with our industry was really not one of their priorities.
Joining us now is Ole Hansen, head of commodity strategy at Saxo Bank. Ole, really fantastic to have you on today. So oil markets, commodity markets responding to sanctions in Russia, despite, of course, the carve out in those sanctions for the energy, the oil, the gas sector. Talk to us about the difficulty with these sanctions in being surgical and leaving those unharmed.
Good morning, Danny. Well, basically, the market is just simply still not quite fully comprehending the impact of these sanctions. And that basically means a lot of potential buyers, they're erring on the side of caution. They're basically refraining from buying Russian oil. And I think the main story actually yesterday was not the IEA was a major story, but the fact that one of the largest independent oil company was trying to sell Urals crude nearly $20 below Brent and not finding a taker. That just clearly indicates that at a certain or potentially large amount of the Russian export is currently not finding a buyer. That basically means with global demand not yet starting to show signs of weakness, that oil has to be found somewhere else. And that's why we're seeing Brent as a global benchmark being forced as forcefully high as we've seen over the past 24 hours.
It really is remarkable. Cheaper oil out of Russia, but no one is willing to touch it. Ole, something that really caught my eye, a chart put together by markets editor Valerie Sarasulo, is the extreme level of backwardation in this oil market. Looking at the spread between 1 month and 6 months, I mean, this is Gulf crisis, Gulf War levels of backwardation. Talk us through the tightness of this market and how likely this tightness is going to last.
Well, it all depends on the situation in Ukraine and Russia, how long we're going to see that, what the outcome eventually will be. But what we have to keep in mind that up until recently, or up until this week, the market has been going up in anticipation or worries about a disruption. Now the disruption is real, and we have to see we're seeing the consequences of that. And that basically means we're entering a much more dangerous phase in this oil market, because if we are really seeing a scramble for barrels, then obviously anything can happen. So IEA's release of 2 million barrels a day over a month will obviously go some way to ease the nerves. We may see what OPEC Plus do today. I think they are probably stuck, not really being able to do much. It could be a unilateral decision by Saudi Arabia, but that the signals hasn't really been pointing in that direction. So the disruption is real, and it really all depends on the length of this crisis we're seeing.
Right, so we get this SPR release, and that really fails to satisfy markets, fails to bring down prices. I mean, at some level, you have this finite amount of resources trying to fight an open-ended issue when it comes to Russia-Ukraine. Does that mean that the next step, Ole, or is it realistic at all to call for messaging around demand management to be the thing that helps bring oil prices down?
Well, we've seen some remarkable decisions being taken during the past week, some that we probably wouldn't have thought possible just a few weeks or months ago. That basically means anything is open. Just an example, you could across Europe ask everyone to work from home again for a couple of months, just like we did during the pandemic. That obviously would kill some of the fuel consumption that we're seeing right now. Other measures could be put in place as well. But as Golden's mentioned the other day, we are entering the phase where we probably need to see demand destruction before we can see this market balance properly. We've seen that starting to happen already in the gas price in Europe. Yesterday, carbon contracts dropped 16% in Europe. It's down 30% from the peak. Obviously, a very, very speculative market where a lot of people saw this as a one-way bet for higher prices. But it is an indication that we are starting to see gas or power consumption in Europe starting to suffer as a consequence of high prices. And that eventually will happen to oil as well if this continues.
Ole, you briefly mentioned OPEC a moment ago, and of course OPEC Plus meets today. They, for the most part, Saudi and the UAE have sided with Russia, but of course it's also in their interest to have a stable oil market. Is there any scenario where diplomatic pressure could cause them to up their quota from current levels?
I'm not a diplomat, so I haven't got that much of a deep insight into their thinking. But we've seen before. We've seen before how Saudi Arabia can go in and surprise the market by supporting it for a period of time. You can obviously argue that this could be the time, because we have seen several producers struggling to reach their quotas in recent months, and that's part of the problem. That, yeah.
Can I jump in real quick, because we're running out of time, but before I let you go, I want to get your call on prices in oil. Bank of America says they could get to $200 a barrel in the most extreme scenario of sanctions. What's your thinking? And quickly here.
150 is not out of the question, but clearly, hopefully, we're never going to get to that kind of level.
Ole, so great to have you on. So 150, what is going to be the thing that brings us there?
Basically, a prolonged period of sanctions, Russia not being able to sell its oil.
All right, Ole, thanks as always. Again, wonderful to have you on the program. Get your calls this morning and your outlook. Ole Hansen, head of commodity strategy at Saxo Bank. Coming up, 4 million people. That's the UN's latest estimate of the number of refugees likely to flee Ukraine as Russia pursues war in the country. We're live from the region next. This is Bloomberg.
U.S. has announced it's moving 8,500 more troops to Eastern Europe. If they're not being deployed to Ukraine specifically, why is that so important, and does that risk further provoking Russia?
Well, there's two things going on. So what the United States recently announced is that we are going to put 8,500 troops that are part of the NATO response force on high alert. That means they'll be ready to deploy on a moment's notice should we need those forces anywhere in Europe to protect NATO territory. In addition, the United States is also looking at possible additional moves that they might make to move U.S. force posture into Central and Eastern Europe. The reason we're looking at that is because a lot of the members in that neighborhood in Central and Eastern Europe feel concerned. And so we are looking at what measures we might take in the name of reassurance and deterrence.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to Bloomberg Daybreak Europe. I'm Danny Berger in London. The UN estimates that up to 4 million people could leave Ukraine as the Russian invasion intensifies. The UN High Commissioner for Refugees estimate represents 300% increase from earlier EU forecasts. It says nearly 700,000 people have already left Ukraine. Aggie Cantrill is at the Medica borders crossing in southeast Poland, and also joining us on the phone is our Moscow reporter. Aggie, let's start with you. What is the situation on the ground there?
Currently, Danny, it is freezing here on the ground in Medica, and we see that there are still quite a few people crossing the border, but the amount of people here has actually dropped significantly than yesterday, as many of the people have moved on. The volunteers who are here on the ground have told me this morning that a lot of people have been able to now leave the border crossing and be able to be moved to other places in Poland. And also a lot of the people left here are people who don't have Ukrainian nationality and are finding it harder to then move on from this location.
So what is Poland doing to support the refugees, Aggie?
So currently they're trying to facilitate the waiting times to decrease. At the moment, the waiting time at this place has decreased significantly since yesterday. It was 60 hours that people were waiting in their cars yesterday to get across the border. It is now closer to 25 hours. However, we are also seeing that, like with the border crossings, they're also trying to open up new border crossings in order to facilitate more people coming over. And the UNHCR has been on the ground in this area since February 24th, and they're still here today.
All right, Aggie, thank you. And let's get over to Moscow, our reporter on the phone there next for the situation there. So what is the latest on the ground there in Russia?
Well, Russian forces claim to have surrounded Kiev, and they were warning residents in the city yesterday that they were intending to target what they called military targets inside Kiev itself, and there were strikes on the city during the day yesterday. Also, the authorities in the second largest city, Kharkiv, have been reporting heavy shelling of residential areas of the city, and Ukrainian authorities have been appealing to International Red Cross and others to help create humanitarian corridors, particularly in the east, so residents can leave if they want to.
We've also had restrictions coming out of Russia on bond payments to foreigners. Walk us through what was announced there.
Yes, what happened there was that the Central Bank of Russia has banned coupon payments to foreign owners of ruble bonds, which are known as OFZs here. They claim it's a temporary measure, but it could take as long as 6 months. And what that means is that foreigners who already can't sell these bonds may get the payments on the bonds, the coupons, but they will not actually be able to receive them, according to the central bank. So the payments can be made into depositories if they're due, but those who own the bonds won't be able to receive any money.
Right. Continued moves really to try to shore up the economy and financial system in Russia. Thanks so much to our reporters in Moscow and in Poland near the Ukrainian border. Now, I want to mention what Brent prices are doing because they're near the high for today's session. So we are looking at 111 on Brent crude right now. So that's a gain of nearly 6% today. Over the past 2 days, a gain of 10%, easily at the highest since 2014. Our guest just in the past 20 minutes, Ole Hansen of Saxo Bank, saying 150 could be where oil heads to in the case of prolonged and strict sanctions. 150, what does that mean for inflation? What does that mean for the economy, especially if there are concerns about a slowdown and slowing of growth? Again, we continue to see markets under pressure as commodities trade near the highest in over a decade. Coming up, it's the corporate fallout for Russia continuing. Apple and Nike announced plans to halt production sales in the country. More on that story next. This is Bloomberg.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
The capital markets can really help the shift to sustainable and decarbonized global economy. What are you noticing in that as ESG is now the buzzword literally everywhere?
It is definitely the topic of conversation in most meetings I have with company CEOs, with investors, with industry groups. It's amazing.
We announced yesterday that Airbnb, in partnership with Airbnb.org and our host community, have a goal to house up to 100,000 refugees fleeing Ukraine. Now, since we made that announcement, we've had over 30,000 people visit the page to learn about how to be a host or to donate. And we're just trying to get more word out, because basically the name of the game is the more hosts we have, the more refugees we can house.
What's the feedback you're getting from governments, from border crossings, about the situation that these refugees find themselves in the crosshairs of a war?
Yeah, I mean, we've reached out to 14 different governments in Central Eastern Europe, governments like Poland and Hungary and Romania and Germany. And what they're telling us is mostly thank you, because their last reports I heard, there were over 600,000 refugees that have been fleeing Ukraine. And so these governments need to find a way to house them. And what we can provide is an infrastructure. You know, we've housed 54,000 refugees for free since we started Airbnb, and we've housed over 100,000 people in need for all different events for free. So I think we're being viewed, I hope, as a solution to a problem that they have. We can be a great partner, and I think they're appreciative of the support and the help.
What's been the response from hosts in these countries? Has there been an outpouring of support?
Yeah, I mean, it's just starting, obviously, in the last 24 hours, but we have had a large response so far. Just to give you a point of reference, 2 years ago, when the pandemic initially, of course, broke out, we worked with the French government, for example, to provide housing for workers in the front line. Tens of thousands of hosts stepped up. We had tens of thousands of hosts step up, provide housing for Afghan refugees, and we're expecting a pretty big response. Again, the main thing we need to do is just make sure that in the kind of flood of all the noise going on, that people who have homes that have availability in these countries know that they can take in refugees.
Now, I know Airbnb has a significant number of listings in Ukraine, given the number of short-term rentals I see in Kyiv, in Lviv, in Odessa. Do you have employees in Ukraine? And what is the status of your operations and hosts there?
Yeah, we don't have employees. We don't have a meaningful number of employees in Central Eastern Europe. We're primarily in certain hubs. Now, as you imagine, we have thousands of listings in countries in all over Central and Eastern Europe. And so our big focus right now we're focused on two big priorities. Number one, we were trying to make sure that our hosts and our community is safe. So we're doing a lot of outreach to our hosting guests in countries all over Central Eastern Europe. The second focus we have is try to house as many refugees as possible. And this entire refugee effort, Emily, really started 3 days ago. You know, it was Thursday, Friday, it became apparent that there were going to be hundreds of thousands of people fleeing Ukraine. And so we've worked all weekend through yesterday to be able to mobilize this effort.
Airbnb CEO Brian Chesky speaking to Bloomberg's Emily Chang. Let's stay on the war in Ukraine and the corporate impact for Russia. Apple and Nike have joined the global boycott, both announcing plans to halt product sales in the country. Joining us now is Bloomberg's Benedict Campbell. Benny, bring us up to date with the companies that are boycotting Russia.
Yeah, so what we saw happening over the weekend, this sort of first trickle of companies leaving, has really turned into a real flood now, a torrent of companies coming out. You mentioned two of the arguably biggest and most iconic US corporate names, Apple and Nike. They are both basically retreating from Russia. Apple said that it will stop shipping its products there. It will also stop Apple Pay in the country. It will ban some Russian news outlets from its Apple sites. So really a wholesale retreat there. And while it might not have a huge financial impact for the company, what it does do is it will probably, hopefully, that's at least the thinking from these companies, turn a younger generation against what's happening in Russia, what's happening in the war. The people will start questioning this fallout and will start ultimately rising up against what's happening there. So here are two examples, but there are many more. We saw Ford, for instance, saying they will stop their work with a joint venture partner. We've seen companies in the energy field join the exodus. So really, it's across the board that this is happening, and it's early days, and this will likely continue as the war intensifies.
So if that's who is boycotting Russia, pulling back from markets there, who are the notable holdouts?
There are a couple out there who are sort of tiptoeing around the subject. Total, the French energy giant, they have said that they are staying put for now. The French government is in a bit of a bind here. We had some pretty salty words from the French finance minister, Bruno Le Maire, who called for what did he say, an all-out economic and financial war on Russia. At the same time, one of his big companies is staying put. The country said, the government said, for now, it's for the company to decide which way they want to go. We might end up seeing them leaving in the end. It's unclear at this point. The unwinding of these operations is much harder than the announcement, and that's something that will play out in the next couple of weeks. We heard from BP and the potential massive write-down that they'll have to take on this. Glencore, the big commodities trader, they said they are reviewing their operations. So they sort of stopped short just from of saying they're going out. So some are sort of tiptoeing around it, some are pulling out. The actual unwinding is unclear at this point.
Benny, thank you so much. That's Benny Campbell there on the corporate fallout for the war in Ukraine. I want to bring us some breaking lines on WTI crude. The rally continues to extend itself. We're now looking at WTI that has rallied past $110 a barrel and then slightly pulled back. We're at 109.9. When it comes to Brent crude, we are above $111 a barrel. Now, as we're watching oil continuing to rally, the fear for the economic impact and stagflation is playing out through this bond market. Take a look at what the 2-year yield is doing just in the past 20 minutes or so. This strong bid has come through. Over the past 3 days, it's a drop of about 30 basis points. Yesterday, it was this really wide, broad buying of the bond market space. Today, it is very, very pronounced in the front end. So at the moment, 2-year yields lower by about 4.5 basis points, even easing off some of the worst of it. At one point, yields were lower by about 6.5 basis points. A remarkable move nonetheless. So again, let's look at the broader markets here. This does seem to be moving in tandem with the pickup in oil prices. What this means for central banks, how bad prices are going to get in general for this economy. We are now, because of that, looking at S&P futures start to turn into the red ever so slightly, but they were up as much as 0.3% earlier this morning. So markets turning more ugly as oil marches higher. Bloomberg Markets Europe up next, going to walk you through all those moves. This is Bloomberg.
It's almost the end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada, tapi nggak kayak dulu. Kalau dulu rame sekali, sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 itu nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
From New York City,
in London, in Sydney,
In San Francisco.
9 a.m. in Beijing and Shanghai. Good morning, everyone.
Have a great evening.
To recap the headlines.
You do not want to miss this
How
story.
are you thinking about those dynamics?
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Good morning. Welcome to Bloomberg Markets Europe. I'm Anna Edwards, live in London. Mark Cudmore, our Markets Live managing editor, joins us in Singapore to take us through all of the market action this hour. The cash trade is just less than an hour away. Here are your top headlines. Moscow's assault on Ukraine intensifies as Kiev's allies step up sanctions. China edges away from Russia, calling the conflict a war.
He badly miscalculated. He thought he could roll into Ukraine and the world would roll over. Instead, he met with a wall of strength he never anticipated or imagined. He met the Ukrainian people.
President Biden labels Vladimir Putin a dictator in his first State of the Union and says Russia's leader will pay a high price for the invasion. Brent and WTI soar past $110 as the IEA warns the invasion threatens global energy security. Gasoline spikes. OPEC Plus meets today. Welcome to Bloomberg Markets Europe, everybody. It's just gone 7 o'clock here in London. It's later than that in Singapore. Mark is with us, of course, from Singapore. Good morning to you, Mark. What are the markets saying to you?
Good morning, Anna. Well, yesterday's MLive question of the day was, will the impact of the Russia invasion of Ukraine be stagflationary or inflationary? And over the last 24 hours, there's been a resounding answer from markets that at the moment, they're trading it as stagflationary. It's negative for equity prices, and yet commodity prices are surging, and so are bond markets with yields plunging.
OK, so stagflation fears to the fore. Let us check out where we are on the equities futures picture, an hour away from the start of cash equities trading here in Europe then, Mark. And this is the picture right now. At let's remind ourselves of where we were yesterday, down by 4% on the Euro Stoxx 50, more than 3.5% to the downside on more than at least four big European markets. The US down by more than 1.5% on all of its three major indices. And so with that as the backstory, with that as the context, with a focus on stagflation, this is the picture for European stocks then. So European futures a little more muted perhaps, but really we're just seeing divergence based on the sector breakdown and perhaps a little bit of a reflection of geography. But the FTSE 100 futures up 0.1%, DAX futures and much of the rest of the continent, no doubt, to the downside, down by 0.8% on Euro Stoxx 50 futures. So stagflation fears to the fore then, Mark. US equity futures looking a little bit more negative than they did just half an hour ago or so. They were suggesting a little bit of a bounce. It wasn't much, but now they are suggesting a little bit of a retreat at the start of the trading day. And the bond market seems to be readjusting to sort of be in line with what we saw yesterday. Ongoing strength in commodity prices, and yet yields go weaker. 109 on WTI, 111 is where we trade on Brent. What do you see on the GMM, Mark?
Well, it is exactly that, Anna. It's this column here, the commodities column. This is the cause of everything. Yesterday, I talked about how looking at commodities is the macro way of interpreting this kind of Russian invasion of Ukraine. The micro is still very, very complicated and is still evolving picture about how Russian assets will trade. But the macro, you just got to look what's happening in commodities. And they are all surging. And it's not just oil prices. Yes, Brent crude up almost 6%. So is WTI crude. But we're seeing it in palm oil. We're seeing wheat prices. We're on here a few minutes. Gas oil, which is used in agriculture and industry across Europe. Heating oil, which is used across the northeast of the US. So this is a real impact on consumers and on industry. It is inflation. Yet despite that, we are seeing bond yields come lower. 2-year yields down almost 6 basis points again today. More than 30 basis points off from the highs only a couple of weeks ago. Really extraordinary. Seeing 11 basis points down in 10-year yields. That is a catch-up on the move that happened yesterday in the US. And of course, this stagflationary theme comes through as being losses in most equity markets. Saudi Arabia, a notable exception there, but we all know why that is, because of oil prices being higher. And we are seeing dollar flows, haven flows still continuing, and therefore weakness in other currencies.
OK, so that's the backstory when it comes to markets. That's how markets are reacting to what is happening on the ground. Let us think about the war in Ukraine and the developments on the ground. Western military officials are warning that Moscow's invasion is entering a new, more deadly phase, with Russian forces likely to use more indiscriminate tactics to suppress resistance. Joining us now is Bloomberg's Europe correspondent Maria Tadeo to take stock. Maria, good morning. Where do officials see this going in the next 48 hours then?
Well, Anna, as you say, there is now a very real concern that this war is going to escalate. And we've seen the pictures over the past 24 hours. These are some of targets that are not just military anymore. You're looking at local government being targeted, at monuments, of course, that are very connected to the history and the legacy of Ukraine, but also residential buildings and office space. This is unrelated to what a normal war would look like. It's not just military targets, as I say. And a lot of this, of course, officials say responds to the fact that we're now stretching into a week-long war. The Russians, of course, had predicted that this was going to be a quick military operation. We're now running, as I say, into a lengthy conflict. And of course, the longer you stay in Ukraine without achieving or reaching the targets that Russia says it wants, then it means that you're running into a conflict that is becoming more expensive, that your troops can run out of fuel, that they can run out of food. And this, of course, means that the Russians have every incentive right now to go more brutal, to be more severe, and to try to achieve these goals, as I say, as quick as possible. The West, of course, says the more severe and brutal you are to civilian populations, the more repercussions that Russia, which is already pretty much in isolation across the world, will suffer.
Good morning, Maria. Are there any more sanctions likely to come soon?
Well, Mark, this again takes us back to the point we were referring to. If you are brutal to the civilian population, if we do see cities where there is no access to food, water, and we see this military escalation, I guess it's very fair to say that the conversation is already changing into more sanctions and more forceful response on Russia, and perhaps now a debate around what to do with the energy sector and what to do with those very particular but very key industries that still connect Russia with the Western economy. An official told me this war is changing nature, and it also means that the repercussions on the package will also probably get bigger in the next few days.
Maria, thank you very much. Bloomberg's Maria today with the latest on the ground in Ukraine and the latest political, financial, sanction-based response. Let us talk about the markets then, Mark. Let's start the clock and reflect a little more on what we're seeing here. European equity market futures at this moment, Euro Stoxx 50 futures extending their declines to minus 1.1%. It seems with that and the surging commodity prices and the fact that yields have sort of resumed that move to the downside, today starting to look a little bit like yesterday in terms of that crucial and perhaps not seen very often relationship.
Yes, I think it's seeming actually more gloomy than yesterday because it seems like a more logical risk aversion. Yesterday kind of started with a bit of a panic, and then we started kind of recovering during the session, and it seemed like the early selling was indiscriminate, and that's why it was easy to recover. Today we have a narrative. Now, I'm not saying this narrative will ultimately prove correct, but we have the market coalescing around a narrative, and that is a stagflationary narrative. It is bad for risk assets, but it is seeing commodities surge, and it is seeing bond yields come lower because it is saying central banks will not be able to react to the strong inflationary impulse that we are seeing from commodities markets.
Yeah, and is that why we are going to be able to see then yields falling and oil prices going to the upside? Is that going to continue? I know on the question of the day you've been asking this question because it doesn't necessarily look logical if oil prices are going to drive inflation higher.
I don't think it can continue for too much longer. I don't know when the exact turning point is, but the central banks around the world are too far behind the curve to look through this inflationary impulse, even though it is the wrong type of inflation, as that's called. It is a negative growth shock, supply-side driven inflation. They're still too far behind the curve, and therefore they must react to it. So I think that central banks will hike aggressively, as Goldman and Bank of America are still insisting. The Fed will stick to their plan, their aggressive rate hikes this year. When we go back to trading that narrative, I don't know, but I expect it to happen relatively soon. We're in the process of cleaning out excess positioning in the short end of the bond market. Once that is cleaned out, we can go back to trading the fact that central banks will have to hike rates. So I think that we're going to start trading this as inflationary, not just stagflationary.
OK, so maybe it doesn't last for all that long, that relationship between the two, Mark. Where is the latest thinking on havens at this point? Or maybe not even havens, but markets that are relatively unscathed by this? I know some colleagues writing about whether there can be resilience in Asian stocks, for example.
The longer-term theme here is all about what's happening in commodities markets. Russia is not relevant to the global economy apart from its military, which we're seeing, and apart from commodities. Now, the commodities angle cannot be underestimated. It is massive, which is why we are seeing this explosion in commodities prices. But beyond that, there's not a direct economic impact. So therefore, we got to look at inflation, and therefore we got to look at the yields impact. So the biggest driver of risk aversion this year, barring the more extreme military scenarios for the global world, is the fact that we're going to see tightening financial conditions. So you've got to be worried about expensive stock markets that are going to be most affected by that. US stocks will be very, very vulnerable for the rest of 2022. Never talk about the next few weeks. Whereas havens like Hong Kong might actually do better because they're already discounted.
Right, despite the fact that we are seeing, of course, concerns around the latest dealings on COVID-19 there, but we'll keep that in mind. Remember, you can get up-to-date analysis and insight from Mark and the rest of the Markets Live team. MLIV Go, that is the function to use on your terminal. Let's get a Bloomberg First Word News update. Laura Wright has that for us this morning. Good morning, Laura.
Anna, Brent crude has extended its relentless rally ahead of today's OPEC Plus meeting. That's as the International Energy Agency warned of a global energy security. It's under threat following Russia's invasion of Ukraine. Futures in London and New York both soared almost 6%, pushing WTI to its highest since 2013. That's despite the US and allies agreeing a coordinated release of 60 million barrels from emergency stockpiles. Yesterday, Russia's flagship Urals crude was offered for sale at a record discount, but received no bidders. China has reportedly told Ukraine it's extremely concerned about harm to civilians in the country. In the first high-level phone call between the two nations since Russia's invasion, Beijing called for more negotiations. China's foreign minister also acknowledged the conflict was a war rather than a special military operation, Russia's preferred description. The UN is warning that as many as 4 million people could flee Ukraine as the war intensifies, 4 times more than an earlier forecast by the EU. The High Commissioner for Refugees, Filippo Grandi, offered the estimate at a Security Council meeting. He says about 680,000 people have already crossed Ukraine's borders. Global News
Got a hot tip the market's going to crash? The recent sell-off may have had you questioning whether you should have taken that hot tip.
I get it. That's why my top priority is getting prices under control.
President Biden there speaking during his State of the Union address. That was just last night, of course, early hours London time. Joining us now is Pooja Kumar, Toronto Dominion Bank Senior European Rates Strategist. Pooja, really nice to have you with us. And let's think not about Europe, let's think about US rates, because we see this morning, once again, the same picture as we saw yesterday, really. Yields falling across the curve, but in particular at the 2-year horizon in the US on the Treasuries curve, but oil prices on the rise. Do you see that as a sustainable trading pattern? Does that seem to make sense to you, or do you think that will change? The market's thinking on the relationship there will change?
Good morning. Yes, we have seen unreal moves in markets in the last couple of sessions, and definitely markets are pricing a stagflation scenario. Now, in terms of the move that we are seeing in 2 years, is basically because markets have actually shaved off more than 25 basis points in hikes from oil curves, and this is not just US, but also with respect to ECB, BOE. I think we are in a very tricky scenario because markets are pricing in stagflation. You have higher commodity prices, tighter financial conditions, and that really makes it harder for central banks to actually tighten that quickly. So I think that's why I don't think many market participants are looking for a 50 basis points hike from Fed. I think 25 is also being questioned right now. And we will be looking to Powell's speech today to get further insight.
And in the meantime, markets on the move because of what we've heard from China. Mark?
Yes, and we're just seeing headlines saying corn futures jumped to the highest since 2013, really emphasizing why we're seeing this stagflation theme be traded in markets, as you say, Pooja. Can I ask you, for how long do we trade this stagflation theme? And if we exhaust that theme sometime soon, where is the opportunity? Because obviously, if it's not correct to trade stagflation, then there must be something that is getting mispriced at the moment.
No, certainly. Right now, the only certainty that we have is that everything is uncertain. And that's why from prices that we are seeing, from commodity prices that we are seeing, markets are just pricing in the stagflation scenario. I think what would be key is going into different central bank meetings, starting from BOC today. And next we'll hear from ECB as well as Fed and BOE, that how exactly they are looking at their forecast right now. How do they see that the impact will be on growth as well as inflation, and more about consumer and business confidence right now, because with swift actions being imposed, the financial sector is really getting impacted. And that in this morning's session, we did see S&P further tanking just because EU has added 6 more crucial banks to these sanctions, and that could really have an adverse impact on growth. we did hear something around 0.4 to 0.5% growth impact from central bankers, but I think it's too early in the stage to actually pinpoint that this is the number, just given the fact that it needs to end for central banks to actually see where all things have gone wrong.
You talk about different risks that we face right now, and clearly you're assessing credit risk because of the exposure to Russian assets. We've seen European banks, for example, some European banks labelled as having more exposure and therefore sold off. But you're not that concerned about liquidity and funding risks, which is something that Mark and I have been debating since the beginning of the week, and whether we'd start to see those signs of stress. Some people seeing early signs, others saying no, it's not going to come through there. So are you seeing any signs of stress in those markets?
Yes, the market seems pretty stressed right now. When we look at the bond liquidity, the volumes that are being traded, they are at very low volumes. We don't have that much of, with respect to funding, even though in Europe, for example, we have so much excess liquidity. Similarly, in Fed, all channels are open, but if you look at cross-currency swaps, if you look at FRA OIS, which is basically an indicator of how banks are doing with respect to their interbank lending, they are all stressed right now. And that is the biggest risk, that how will central banks tackle this situation, given the fact that they have used their QE tools, they have used their rate tools, they have used every single tools during the COVID crisis. And that's where we think that at this point, the key action might be taken by the fiscal side to actually provide oil subsidies to companies, to give fiscal support to countries, and also trying to look for more sources of commodities as well as oil, just so that this is a crisis that we all need to act together.
Okay, so if this is about bank stress, not like March 2020 when it was about when banks were coming from a position of strength, perhaps, then, Pooja. Thank you very much for joining us. Really good to get your thoughts on these markets and the fast-moving developments this morning. Pooja Kumar, Toronto Dominion Bank Senior European Rates Strategist. Coming up on the programme, as crude soars, the IEA warns that global energy security is under threat following Russia's invasion of Ukraine. This ahead of today's OPEC Plus meeting. All the very latest on the oil markets, that very much in the process of moving around this morning still. We'll get to that next. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
at the Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. There's a big celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
In crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Welcome back to Bloomberg Markets Europe. Half an hour until the start of cash equities trading here in Europe. And after we lost substantial amounts yesterday, down 4% on the Euro Stoxx 50 in yesterday's session, European equity market futures looking really quite negative when it comes to continental Europe, certainly. CAC futures down by 0.7%, DAX futures down by more than 1%. Let's just quickly check US futures as well, because here we've also seen deterioration in the last half hour, an ongoing focus on what we're seeing in treasury markets. We've certainly seen an ongoing drop in the 2-year horizon on those treasury yields, and we continue to see commodity prices going higher. Oil prices, yes, but also the broader story, and all of that is weighing on the futures picture in the United States. With commodities in mind then, Mark, let's have a think about what is on your mind. And I know you've been thinking a lot about commodities, because $111 on Brent, that's not actually a record Brent price, is it? Because we've been higher than that in what the year around the financial crisis, around the late 2000s. But the Bloomberg Commodities Index is a much broader gauge, and we're seeing something more history making there.
Yes, absolutely. So we've got an obvious human news story at the moment that is where our focus is. But when it comes to markets, this is the whole story. Commodities have been the source of everything we've seen in markets over the last 18 months or so, and they're also getting an extra jolt from the Russian invasion of Ukraine at the moment. So in the last 25 years, commodities were only a dominant part of the macro story twice. During the great financial crisis, leading to that summer when we saw oil prices surge to 150, the last inflationary wave as a squeeze that kind of prompted some poor policy decisions as we went into a credit crisis, and again in 2010 for the Arab Spring. We are seeing it now. You can see since the Arab Spring, for the past decade, up until 2020, up until the pandemic, commodities were irrelevant. Slightly deflationary, helped the whole deflationary theme. Suddenly we got the record stimulus in the pandemic, so we got that drop there, and we've just seen this incredible surge. This is a surge that outpaces what we saw in the Arab Spring. It outpaces what we saw back before the GFC when we saw oil go to $150 a barrel. This is going crazy. This year already, the Bloomberg Commodity Spot Index is up another 20% year to date. That's after the surge we already seen. Today, it's looking on track to be up another 2%. This move is just not stopping. And as you mentioned, Anna, it's not just about oil prices. Sure, we're seeing oil prices above $100 a barrel, but that's not a record. The record's here, and it's not, by the way, in gold or precious metals. They are, in fact, lagging commodities. We're seeing the most extreme moves here in the ones that directly affect consumers and industry and agriculture most. We are seeing it in heating oil, we're seeing it in gas oil, we're seeing it in wheat, we're seeing it in corn. So we're seeing it in the products which consumers really need, not the financial, not the speculative ones like gold and silver. This is the problem in the world, and this is why we've got an inflation problem. And in 6 months' time, assuming there is hopefully peace soon and we get moved beyond the war, markets will be caring about the inflation problem and not about any growth impact.
Okay, that's an interesting, bringing it back to the markets and what we're seeing in that relationship between commodities and Treasury yields. But lingering on the commodities theme, we've seen corn prices spiking this morning. We've seen corn prices trading in Chicago at their highest since 2014. And bringing it back to what you said there about agriculture, I was looking at the Bloomberg Commodities Agricultural Sub-Index yesterday, which also shows quite a substantial spike. And now we hear that the Chinese are looking to load up on some of the commodities that they might be short of. Does that suggest then that this focus on higher commodity prices and specifically around agriculture, maybe that carries on from here?
Yes, and there's a reason why China is focused on this. So part of the CPI basket, the Consumer Price Index basket, food is a larger share of that for Asian economies, and it really, really directly impacts. And this is where they're worried about social disruption. If you get consumers at the lower end of the income scale that are massively squeezed by food prices going higher and energy prices going higher, that's where you get social disruption. That's why we got the Arab Spring, and that's what governments are worried about, which becomes self-fulfilling and is going to drive higher. So I think that's really important what we're seeing in food prices in particular. Remember, last year's energy crisis will become this year's food crisis.
OK, Mark, thank you very much for those thoughts. Interesting chart to talk about, trends in the markets to think about. Let us get to a sector that is very much in focus for us because of what we're talking about here. Higher commodity prices away from the food. We started on oil, of course, and we see Brent prices at $111 a barrel. Jet fuel, no doubt, not all that far behind. Let us talk about the aviation sector in Europe. It has come through the coronavirus challenge, if you like, and now finds itself with another challenge to deal with. Let us get now to the CEO of Ryanair, unveiling a new summer schedule. We'll talk to Michael O'Leary of Ryanair. Very nice to speak to you then, Michael. You've announced this morning your largest summer schedule for London with 14 new routes. We're talking here a lot about the cost of living, though, not just in the UK, but elsewhere, the way that consumers are going to be squeezed. Do you think that your schedule will stand up to that kind of cost of living pressure?
Good morning, Anna, and to your viewers. Yes, we think it will. We're seeing a dramatic recovery in bookings over recent weeks, particularly as the UK and Europe emerges out of the coronavirus pandemic. I think there's a huge pent-up demand for travel, particularly short-haul to the beaches of Europe. We've seen it in the school midterm break last week. We see it again recurring at Easter. People are more price sensitive. That's why I think they're switching to Ryanair. We have the lowest fares of any European airline. We've hedged our fuel. We're 80% hedged out to March 2023 at about $63 per barrel. So we're in good shape to pass on extraordinary savings and low fares to people. And we're seeing that in our bookings. Now, clearly, our bookings have been impacted over the last 5 days by the events, the tragic events in Ukraine. But I think, that will be that disruption to bookings, we think, will be short-lived. And people, while obviously concerned about developments in Ukraine, will, I think, return to booking their holidays for Easter, for summer. And we see a very strong recovery, particularly in air travel in and out of London this summer.
OK, Michael, just on that, what kind of impact is this having then right at the coalface, if you like, of aviation? What kind of hesitancy are you seeing? Can you quantify that? How reluctant are people to book, or how much more reluctant than they were?
Well, I mean, last Friday morning, for example, last Thursday and Friday, our bookings were down about 20% on the previous week. Over the weekend and yesterday, that has softened down about 10%. But that's down 10% against what were record bookings over the past 3 or 4 weeks. We see our forward bookings into Easter and summer recovering very strongly. The other big impact, obviously, will be fuel. I mean, spot oil is now above $100 a barrel. There's a huge number of airlines across Europe who are unhedged, and I think they will be under enormous cost pressure. There'll be huge upward pressure on airfares this summer. But thankfully, Ryanair is extraordinarily well hedged, and we'll be able to pass on that the benefit of those hedges to our customers in the form of lower fares. But we see passengers booking and booking strongly at the moment. I think there is a bit of a not just pent-up demand, but I think a concern that if people don't book early, they won't be able to fly to the beaches of Europe this summer. Long haul will clearly be affected, obviously, with the no-fly bans across Russia, Belarus and Ukraine. Asia is going to be an extraordinarily difficult place to travel to. COVID, I think, will mean that there will be a much slower recovery in long-haul travel. But short-haul, European break, city break destinations, we think will do very well, as long as, and I think we all hope that the situation in Ukraine is resolved quickly and in favour of the Ukrainians.
Good morning, Michael. Obviously, 14 new routes from London is a very impressive expansion. I assume that these routes offer a much lower return on investment from a business point of view, or otherwise, if they don't, why weren't they incorporated years ago?
Well, I mean, we're taking delivery of 65 new aircraft from Boeing over the last 4 months and over the next 3 months. So this is all new capacity on very fuel-efficient new Boeing MAX aircraft, 4% more seats, 14% less fuel. And that has allowed us to emerge out of this pandemic, I think, in a much stronger position. We're well hedged on oil. We'll be able to pass on lower fares to our customers all summer long. And I think we will see a very strong performance. We're willing, as we have always been, if there's, we've gone through 2 years of COVID, and if we have to go through many months of the tragic events in Ukraine, we will lower fares. We will always take the pain on fares and yields, and we'll worry about the return on investment over the medium to longer term.
Okay, so Michael, you've outlined the fact that you've had a very aggressive hedging strategy in oil, which has been very beneficial to you. It's proved very prescient. At what point do you have to start reacting to the fact that much higher oil prices now, they're elevated all throughout the curve? So I guess not only at what point do you have to start aggressively changing your hedging strategy, when is that going to feed through to higher fares?
It all depends on, as you well know, Mark, it all depends on what happens to oil prices. Like prior to last Thursday, we had hedged 9% of our summer 2023 fuel requirements at about $74 a barrel. The market was in backwardation, high short-term prices, but out into summer 2023, reasonably low prices. We've 9% of summer 2023 hedged, but the rates took off last weekend. Whether they are sustained up, I think you can, the rates into summer 23 are now about $95 a barrel. We do believe that over time those rates will come down. US shale manufacturers, at these price levels, there will be more production. But it's impossible for us as an industry or anybody to know what's going to happen with sanctions on Russian oil and gas and what those developments will be. All we can point to at the moment is that we're 80% hedged out to March 2022. The underlying price is $63 a barrel. We also have some caps in there as well, which means we can secure low fares for customers who want to get away with their families at Easter and this summer. And that's why we're opening up 15 new routes from London. That's why we're expanding so strongly this summer.
How are you changing your schedules, Michael, based on the war that is now taking place in Ukraine? I mean, clearly not flying there anymore, and you weren't flying over Belarus airspace, I think, after the forced landing of that Ryanair jet in Minsk just last May. So perhaps you've been avoiding that particular airspace for a while. But how are you having to rethink routes or replan schedules as a result of what we're seeing, the geopolitics, the war in Ukraine?
Yeah, I think it's a good question, Anna. We were Ukraine's largest airline. Now, we don't have any aircraft based in Ukraine, but we were flying to 4 airports in Ukraine: Kiev, Kharkiv, Odessa, and Lviv. We've clearly abandoned or cancelled those routes as of last Thursday morning when the Ukraine airspace was closed by the European safety authorities. We think that was the right decision. We will pivot that capacity for the next 6 weeks, and probably, I think, for this summer, that capacity, which generally originates in Poland, in Romania, in Germany, and in Italy, will pivot away from Ukraine. We'll reverse those aircraft assets and start flying more flights to beach destinations in Greece, in Italy, in Spain, and in Portugal. We think it will not have, because we've no aircraft based in Ukraine, while we'll lose about, we would have expected to carry about 2 million passengers in a full year to and from the Ukraine. We will pivot that capacity and carry those 2 million passengers elsewhere from those Central and Eastern European markets, where Ryanair is the #1 or the biggest carrier right across Central and Eastern Europe.
Given that Ryanair has proven itself resilient to such shocks and disruptions because you don't rely on government subsidies and you have a little bit more flexibility, you're prepared for this outcome, what will you use with your better position, your better resilience? Will you be looking to acquire some weaker rivals over the next year?
I don't think so, Mark. I think what we expect to do this summer is to grow very dramatically. We're taking delivery, as I said, of 65 new aircraft from Boeing over this winter period. The fleet in summer 2022 will be about 15% higher than it was pre-COVID in summer 2019. We expect to see our traffic, which was 150 million in 2019 pre-COVID, grow to about 165 million in the coming year, which is our year-end March 2023. And we think that growth will be hinged on our ability to offer lower fares and undercut competitors who are simply unable to compete with either our cost base or our exceptional fuel hedging position, which I should add is not really prescient, it's more dumb luck. But we're happy to pass on the benefits of our good luck to our customers in the form of lower fares.
That is very honest of you, Michael. Thank you very much for joining us. Very good to speak to you,
Thanks,
Michael
Anna.
O'Leary,
Thanks,
the
Mark.
Ryanair CEO. Thanks for spending time with us here on Bloomberg TV. Now, coming up on this programme, we'll get back to the serious business of covering what's happening on the borders of Ukraine. We'll follow the migrant story. That's as the UN's latest estimate of the number of refugees likely to flee Ukraine as Russia pursues war in the country. That estimate is rising. We'll be live from the region next. This is Bloomberg.
This chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high. Prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to Bloomberg Markets Europe. 15 minutes to go until the start of cash equities trading. And we see FTSE futures a little range bound, if you like, but DAX futures and CAC futures certainly expecting to move further to the downside. This after moves of more than 4% on many of the major markets in Europe yesterday, or more than 3%, sorry. We do see the Brent price continue to climb. 112.51 is where we trade on the Brent price right now. Now, the United Nations estimates that up to 4 million people could leave Ukraine as the Russian invasion intensifies. That represents a 300% increase from earlier EU forecasts. It says nearly 700,000 people have already left Ukraine. Our colleague Aggie Cantrell is at the Medica border, that crossing into southeast Poland. Aggie, give us an update on the situation on the ground.
Is that there have been a lot of people that have crossed. This has been one of the busiest border crossings between Ukraine and Poland in the last couple of days. And currently we see, as you say, there's about 660,000 people who have already crossed the border into Poland and other neighboring nations to Ukraine. And as we're seeing the fighting get more severe in Ukraine itself, as you say, the UNHCR is expecting more and more people to continue crossing. In order to deal with this, the Polish authorities have been working with the Ukrainian authorities to open up new border crossings as well, to let in foot passengers as well. We're seeing now here that the waiting times for people who are arriving in their cars have managed to decrease overnight. It was 60 hours that people were waiting yesterday, and now we're seeing it as closer to 25 hours. Obviously, the waiting times are still very long, but a lot of the people here have now been able to already be moved on into other parts of Poland, have been able to be relocated from here.
Aggie, thank you very much. Agatha Cantrill in Poland with the latest. We're just looking at images of Poland and indeed elsewhere, because, of course, not all of the Ukrainian refugees moving to Poland, others going to other parts of Europe as well. Now, let's pivot to another really interesting angle on this story. China says it's, quote, extremely concerned about the harm to civilians in Ukraine. China's foreign minister also acknowledged the conflict was or is a war rather than a special military operation. That was Russia's preferred description. Joining us now is Bloomberg's Greater China editor, Jenny Marsh. Jenny, good to get your perspective on this. How is Beijing reacting then to the escalation of this conflict?
Yes, I mean, the response from Beijing so far has been extremely cautious. I mean, Xi Jinping himself took over a day to comment on this at all. But Wang's call with his Ukrainian counterpart last night was the clearest sign that China's position on this is hardening. As you said, Wang called it a war, not a special military operation, and made it clear that he didn't want to see a big loss of life as Russia tries to take Kiev. So it's certainly a hardening of China's position as the civilian casualties continue to mount in Ukraine.
Good afternoon, Jenny. Is it the expectation now that China will take a more active role in trying to seek peace?
Ukraine last night, in their statement, they called for China to mediate as it seeks some kind of ceasefire. China has a long-standing policy of non-interference when it comes to other countries' international affairs. So I think it would respond to any requests like that with extreme caution. And it would, of course, need to come from both the Russian and the Ukrainian sides. But there's a huge risk for China in getting too deeply involved in those kind of conflict resolutions, as any failure will then reflect poorly on Beijing. At the same time, after Xi Jinping has so recently joined hands with Putin at the Beijing Olympics, they have a vested interest now in making sure that Russia does not go any further than it already has done in this conflict.
Jenny, thank you very much. Bloomberg's Greater China editor, Jenny Marsh. And we were just hearing there how China has been calling for conversations and negotiations and talks, at least, to continue between Russia and Ukraine. Of course, the last talks broke down with the only achievement being to have further talks. But we are seeing the Interfax news agency, of course, in Russia, saying that Russia-Ukraine talks are possible at the end of this week. They are citing an unidentified official on those Ukrainian-Russia talks. But we'll see if that does indeed come to pass. Interesting to think about China's role in this. Coming up on the programme, we'll get back to the markets, and Brent and WTI continue to soar as the IEA warns that global energy security is under threat following Russia's invasion of Ukraine. And despite the fact we saw the IEA and a number of countries releasing from strategic petroleum reserves. We'll discuss that next. This is Bloomberg.
I think it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
As a company grows, there are more challenges. What do you worry about the most?
The market opportunity for us is enormous. And so our challenge is to continue innovating, driving, and pushing ourselves every single day to go after the most attractive profit pools in this incredible global beauty and wellness market.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Just a few minutes ago until the start of cash equities trading then here in Europe, and futures have been pointing to the downside, certainly for continental European markets, Mark, and also for US markets. US futures down 0.4% on E-minis and NASDAQ futures. We look set to be continuing to focus on commodities and concerns around commodities then, do we, through this European session?
Definitely. Oil prices really are rising extraordinarily. Brent crude, WTI, both up about 7.5% of the day, almost 12% of the two-day session. Now, this is really important because only a few weeks ago, we covered on this show how there was a lot of topside strikes sold in the market, and that if we got a sharp upward move, we might get a market get caught short gamma. And I think we're seeing a bit of that at the moment, where we're seeing people in the market makers, have to chase this move higher, which is why you start getting irrational, almost, and self-fulfilling moves. Except I hesitate to use the word irrational, because there is a fundamental driver here, and we don't yet know how much Russian supply will be taken off the market for a sustainable period. This is a market that could go a lot higher still in the weeks ahead.
Right, so there's the positioning, there's also the fundamentals, and both of those combining to drive Brent to, well, what looks like nearly $113 a barrel now. 112.94 is where we trade, up by 7.5% just in today's session alone, Mark. Looking at treasuries, though, we had seen a sizable move to the downside in Treasury, two-year Treasury yields. Now we're just down by we're down by a fraction of a percent, which looks less than it was. Are we back to thinking about inflation and not stagflation? And actually, what's the difference between trading the two?
It's very important, I guess, to define the difference. So I think in an inflationary environment, equities can still do well. Essentially, you want to buy assets to protect yourself against inflation. Now, it's not a great inflationary environment because obviously it's expensive for their cost process, and costs change at a different pace to their pricing. But overall, equities, many financial assets can do well in inflation. In stagflation, it's a much more of a problem because you've got the negative growth impact as you're also seeing their costs rise. So there's a real difference for trading it, and bonds do well in stagflation. They obviously do badly in inflation. We are still underlying trading in stagflation hit this week, but a bit less strongly than we were only 45 minutes ago.
OK, indeed. We'll continue to focus on gold as well. We got some lines coming through from the Russian finance minister. This is according to the IFX agency in Russia, seeing gold as an alternative to the US dollar. We'll continue to focus on how Russia is responding to the sanctions environment. Thanks to Mark for spending the past hour with us. It's been a busy hour when it comes to commodity moves, watching corn move in Chicago, watching oil prices move here in London. The Open is up next. Futures points to the downside. Eurostoxx 50 futures down by just over 1%. FTSE futures perhaps a little more resilient. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
How difficult was it to go to investors and say, invest, give money, put money into a travel tech company within this environment?
It wasn't that difficult because TravelPerk is doing much, much better than the rest of the industry. In fact, we are at the moment growing at 4 times revenue of pre-COVID numbers.
Welcome to the European Market Open, everyone. A minute to go until the start of cash equity trading. I'm Francine Lacqua here in London, and here are your top stories. Moscow's assault on Ukraine enters a more brutal phase as Kyiv's allies step up sanctions. China edges away from Russia, calling the conflict a war. The corporate exodus continues. Apple and Nike halt product sales in Russia, while Exxon takes steps to exit an oil and gas project. And Brent crude passes $110 per barrel as the IEA and warns that the invasion threatens global energy security. OPEC Plus meets today, and global commodities surge. We speak to Fortescue Metals Chairman Andrew Forrest this hour. Now, let's also take a look at the futures. And of course, there's a little bit more angst out there when you look at the global commodity crunch, or certainly a lot of investors looking at what that could mean for their portfolio. So the global commodity shock is hanging over, of course, these markets today more than yesterday. Haven demand is supporting bonds as Fed rate hike bets are also being scaled back. This is a picture for the Eurostoxx futures. They're down. They're opening pretty much flat. Now, it will play out more on the commodities with, for example, Brent 112, gas oil also gaining some 8%. There has definitely been a move to a lot of commodity producers realizing the impact this could have. Of course, Russia's invasion of Ukraine imperils flows of crops. So we look at wheat, which should be, of course, gaining the most since, I think, in 14 years, since 2008. But it also imperils the flows of energy and metals. Now, some of these equity indices, okay, the FTSE is gaining some 0.4%. That's probably supported by companies such as BP. You can see the IBEX is down 0.2%. And then if you look at the foreign exchange, there's not that much of a bid for some of the Haven assets, but really it's the commodities right here where we need to keep an eye on. Gold spot, 1,943. Now, this is your cross-asset check, the wheat. And we have been trying to figure out exactly who will suffer the most from these wheat prices. You can see just in the last 12 hours, wheat gaining some 7.6% through our Bloomberg analysis. And I urge everyone to check out our MLive blog, but also our stories on the website and on the terminal. If you look at wheat prices and the longer forward contracts, it could be the Middle East that will suffer the most food inflation. Now, let's also get over to our Bloomberg MLive managing editor, Mark Cudmore. Mark, good morning. You're looking at the impact that we're seeing across commodities.
Yes, absolutely, Francine. You've been talking about commodities there, and that's absolutely the focus in markets. On yesterday's show, we talked about how the economic impact of this Russian invasion of Ukraine was pretty small outside the commodities channel, but the commodities channel is massive. So obviously there's a bigger humanitarian story here, but this is the Bloomberg Markets Open, and therefore we're focused on markets. And when it comes to macro markets, commodities is the only thing we need to care about. It's been the driver of the story of the last 18 months from the kind of post-pandemic bounce, but it is getting a nitro boost this week. Now, in the last 25 years, commodities were only a relevant part of the story twice. Going into the GFC, when oil prices rose to $150 a barrel, which was that last inflationary impulse going into the crisis, and again for the Arab Spring in 2010. The surge over the last 2 years was more than we saw in either of those two times. It was incredibly rapid. And it's after a decade between 2010 and 2020 where commodities were kind of irrelevant as a driver. If anything, they were deflationary. So this is why the market is ill-prepared for this. This is why we've seen the change in central bank reaction function, the surge higher in yields. Now, we've suddenly got into this underlying story of the last couple of years of a massive amount of stimulus going into commodities that are unprepared for this increase in demand. We suddenly got this Russian invasion of Ukraine. Ukraine is the breadbasket of Europe. Russia is one of the world's largest supplier of commodities. And we have seen the Bloomberg Commodity Index do another 20% this year alone, after the surge we'd already seen. Today already, it's up another more than 2% already. This is a story which is going crazy, and this is ultimately the big market story. Hopefully, we eventually get peace in Ukraine and we move on from the politics and the humanitarian issue. When it comes to markets in 6 months' time, this is what we'll care about.
But we knew that actually a Russian invasion imperils flows of crops, energy and metals, Mark. So why is it? It seems to be playing out in the markets more today than it was yesterday. Is it a catch-up from the markets, or is it realization that actually this conflict could last for a very long time and be more deadly than expected?
That's a great question, Francine. There's a few elements to it. One is the real outperformers in this commodity surge are the really, really inflationary ones. It's not gold. It's not silver. Yeah, sure, they're doing fine. It's not the precious metals. It's energy. It's food prices. It's the thing that affects consumers and industry most. It's the worst type of inflation out there. And that's the second element. Today, we're really grasping the narrative of a stagflationary impulse. I don't think that'll last in markets. I think we'll go back to trading an inflationary theme at some point. But at the moment, the market is trading a stagflationary theme, and that's why I'm more shocked. And the third element is we've only just realized the amount of uncertainty we have about Russian oil. Remember, most of the world aren't commodities experts, so they just look at the headline prices. And when we saw the reaction of oil prices come down on Friday, we're like, oh, obviously the invasion was priced. Oil prices have already risen enough. This is past. Now we're suddenly going, wait, this isn't near priced. We don't know how many billion barrels a day of Russian oil will not reach the market in a week or two. This problem could get a lot worse.
Yeah, it's a secondary effects, of course, of some of the sanctions. Mark, thank you so much. As always, our Bloomberg MLive managing editor, Mark Cudmore. Now, President Joe Biden has slammed Vladimir Putin in his State of the Union address, calling him a dictator and saying he will pay a high price for his invasion of Ukraine.
That he badly miscalculated. He thought he could roll into Ukraine and the world would roll over. Instead, he met with a wall of strength he never anticipated or imagined. He met the Ukrainian people.
Well, that's as Russia is pressing forward with its military advances. Western military officials are warning that the invasion is entering a new, more deadly phase, with Russian forces likely to use more indiscriminate tactics. Let's get across our reporters in Europe. Maria Tadeo, of course, joins us with the very latest on Ukraine. We also have Benny Camel looking at the corporates. And with me here in London is our Christina Kino for the latest market moves. So, Maria, where do officials see this going for the next 48 hours?
Well, Francine, as you say, there is a real concern that this is going to escalate in the next 48 hours. We have seen already, and by the way, the Ukrainian officials putting out a new report saying that Russia is becoming more aggressive, but also more indiscriminate on the air because they do not want to fight on the ground. On the ground, as you know, Francine, they faced resistance from the Ukrainian army, but also potentially civil and social unrest. They have problems with fuel and they have problems with food. This is now entering into its 7th day. This is a war that's going on for longer than Russia initially anticipated. Remember, they thought this was going to be a quick job in and out of the country, and is now becoming a much lengthy conflict. All of this means that for Russia, A, they're running out of patience, but 2, they're also seeing a war that could become more expensive the more it draws on in time. So that makes officials here in Brussels, Francine, concerned that we could see more indiscriminate attacks. If that is the case, and we do see civilian population being attacked, we also see residential and office buildings that we have seen over the past 2 days being under target, then there will be a very real conversation, Francine, about what to do next with the sanctions. So, what else can the West do, especially if civilians come under attack?
Maria, meanwhile, Ukraine's also doubled down on its intention to be part of the EU. How feasible is that?
Well, yesterday we heard it from Zelensky. It was a very emotional speech at the European Parliament when he said this is really the time to show us that we are one of you. And this is all of this going back to a Sunday interview from Ursula von der Leyen, the head of the Commission, who said Ukrainians are Europeans and we want them in. But Francine, we're being told at this point this is a very long process for a country to join the European Union. To fast track in real terms is not feasible, particularly in the context of war. What we could get next week when European leaders meet in France stands for a meeting is a declaration on paper that kind of gives a political hint and a clear message that there will be a path in the future. But an overnight accession into the European Union, we hear that this is incredibly difficult. This is just not how the EU works.
Maria, thank you. Benny, we continue, of course, to track the corporate response to this. Which other companies have exited Russia since yesterday?
So the great sort of uncoupling from Russia continues. We had the first wave that started with BP over the weekend, the commodities, the oil, the energy companies retreating, and now we're sort of seeing a more forceful response, and it's now going into the field of the consumer companies, Apple, Nike, two of the probably most iconic US brands out there, both said that they are retreating. Apple said that they will stop shipping its products to Russia. They will stop Apple Pay. They will no longer make some of the Russian news outlets available on its sites. So really a wholesale approach here from many companies. We've had companies like Ford, Harley-Davidson come out and say, we will stop working with our partners there or working on the ground. The question really is, how do you do this uncoupling? It's one thing announcing something, but then following through that will be much harder, especially if you are a consumer company, you have shops, you have outlets, you have production on the ground. That's a story that will remain with us in the next couple of weeks to see how that plays out, as well as the response on the ground. How are Russians responding to this? We're getting some anecdotal evidence that people are actually buying things like jewelry, like technology, because their rubles are turning, worthless, and they're trying to put it into something hard and tangible. So those are the things we're continuing to watch, but the exodus really is in full swing right now.
Yeah, Benny, thank you so much. And also just moments ago, DHL suspending deliveries to Russia and Belarus. Christine, the Russian Central Bank, of course, also banning coupon payments to foreign owners of ruble bonds. So what's the impact? I mean, the numbers are staggering. It's some $29 billion.
Absolutely, Francine. And really, the question at the heart of all of this is this. Our investors are wondering whether this could lead potentially to a technical default, because the mechanics of this current ban is very, very hard to understand in terms of the real-world implications at the moment. From what we understand from the documents that came through late yesterday is that it could potentially not be a default technically, because they could be still making those coupon payments. It's just that the payments will not be leaving the country because of the sanctions that are currently in place. But, for investors, is there really a difference between, the technicalities and the realities on the ground? And that is the question that all of them are asking at the moment.
Yeah, and again, this could seep through further, right? So you could see a little bit more anxiousness on the markets. What does this all mean for commodities? Like, it definitely will impact the flows of wheat, metals, energy, and it doesn't look like it could abate anytime soon.
Absolutely, Francine. I think, what Mark was saying earlier, for instance, what is different now is the time element here and the realization that this conflict could prolong much longer than investors were initially anticipating. And I think now we're seeing that really come through to the commodity prices, which, of course, is going to make it very, very difficult for a number of central banks who are meeting in a couple of weeks. And, that's already also something that we're seeing in terms of the anxiety playing out in a bond market, because, of course, yields are going the other way in commodities and really falling massively. We saw some of those moves yesterday were some of the biggest in years, if not decades. And so this kind of tension between lower bond yields and higher commodity prices really poses a problem and quite the conundrum for central banks meeting in the next couple of weeks.
I mean, this changes everything. And of course, it changes the inflation equation, also, changes the growth equation. Valerie put together a great chart looking at the 2-year break-even inflation continuing to surge to new all-time highs. I don't know if we have that chart, but if you look at real yields, they're sinking deeper into negative territory. I mean, this is, not good for a central bank to look at. This is like their nightmare chart.
Absolutely, Francine. And, we know that real yields are usually seen as a canary in the coal mine when it comes to how markets are pricing inflation versus growth. And so that downturn is really potentially worrying for them. And yeah, I think it really will be the question of, how they conduct monetary policy. Is it still the priority to address inflation that is showing signs of really de-anchoring and running away completely? Or do they pause to take into account the potential growth hit from these geopolitical tensions? Very difficult situation.
Very difficult situation. Christine, thank you so much. Maria Tadeo, our Benny Camel, and Christina Aquino looking at the roundup, of course, of the fallout of this invasion. Coming up, with oil continuing to rise, what's next for the commodity sector? We'll have more on that shortly. This is Bloomberg.
What do you think is the impact of the Prime Minister on the market?
As Mr. Suzuki, who is the Financial Services Minister, he mentioned at his own press conference, and share buybacks is widely used to return profits to shareholders and improve ROE. And how to share out the profits from growth is totally the decision of the management of each company after carefully taking all the stakeholders into consideration. And I believe Mr. Kishida has a quite cautious stance on the uniform regulation of share buybacks. And I think because he is giving a consideration to each company's individual circumstance and decisions.
The capital markets can really help the shift to sustainable and decarbonized global economy. What are you noticing in that as ESG is now the buzzword literally everywhere?
It is definitely the topic of conversation in most meetings I have with company CEOs, with investors, with industry groups. It's amazing.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Welcome back to the Open, everyone. 15 minutes into the European trading day, and you can see European stocks down some 0.3%. The FTSE actually holding strong thanks to the fact that the index is quite commodity rich. If you look at the CAC 40 and the DAX, they're down some 0.7%. Now, it's very clear that Russia's invasion of Ukraine imperils flows of crops, energy and metals, and so it's all the commodity space, of course oil, but also wheat, that's impacting some of the anxiousness that we're seeing amongst traders today. Now, oil soaring. This comes as the International Energy Agency warns global energy security is under threat after Russia's invasion of Ukraine. Now, the wider Bloomberg Commodity Spot Index has jumped the most since 2009 to hit a new record. Commodity prices are rallying with flows of grains, energy and metals at risk from the war. So let's get straight to Fiona Boll, head of commodities and real assets at S&P Dow Jones Indices, who joins us. Fiona, thanks so much for coming on. How long can this disruption, or certainly markets being afraid of this disruption, last?
Markets hate uncertainty, and the commodity market, is at the top of the list there. I think, we can't really know how long this might last, but what we need to first get a handle on is what sort of volumes are we talking about, and then to think about how long might we be without those volumes of oil or wheat or some of the metals.
So if there's, and Fiona, I don't know if the market is also pricing in a potential of this escalating, of course, in warfare, and we constantly think about, the loss of human life, but also an escalation in terms of sanctions, which means that Russia could actually, turn off the flows of oil and gas, or whether this is just if things stay as they are, this is what happens to commodities.
I think in the physical oil markets, if we take them as an example, market participants are already avoiding Russian oil. They're avoiding it for moral reasons, of course, but they're also avoiding it because of issues around trade finance, insurance, shipping and transport. So while there's not officially an embargo, I think we're almost at a point where we have some type of pseudo-embargo in place anyway.
Yeah, and what's the impact of a lot of these corporates? I'm thinking of Shell, BP, Exxon, just the latest, exiting Russia.
That has short-term implications, but I think more importantly are the long-term implications. These companies make multi-year investments. They have very long time horizons when they think about making new investments. So in terms of availability of conventional oil and gas in Europe, this has, it could have an enormous impact over quite a long period.
Any chance of a surprise at OPEC Plus today?
We can never quite know what OPEC Plus are going to do. Certainly, based on what we've read and seen this morning, they don't appear to have any intention to change their path. But I'm never surprised by an OPEC decision.
Fiona, what can you tell us about wheat? So it's soaring to a 14-year high. How much higher can that go?
Well, traditionally, the region of Russia and the Ukraine has been referred to as the breadbasket of Europe. We're talking about 30% of world wheat supplies come out of there. This is a real dislocation story. In both countries, the wheat harvests have been very good. The wheat is there. But again, if we can't get it to the market, then, there could be ongoing strains in terms of wheat availability. And that flows through, directly to consumers' pockets because, we're always concerned about food prices, and we know, central banks will be keeping an eye on that as well.
Of course, the war has given another boost to crop prices that were already struggling because of droughts and labor shortages, Fiona. So do you have a call on the price of wheat, or is it just too difficult to know the outflows at the moment?
I think it's a bit too soon to really know what the worst case scenario would be. I mean, wheat trading at 14-year highs overnight gives you an indication of how concerned the market is. But we have seen prices of wheat higher than this. We go back to, previous droughts, previous embargoes on Russian wheat exports, which we've seen. And so, we are not at all-time highs for things like wheat and corn.
If the war, Fiona, is likely to continue, and of course, workers could be drafted into the army, which is another thing that we need to look at. Some of the transport and logistics, you're saying, is in chaos. So what does that mean for corn and some of the other soft commodities?
We've already seen that most of the ports where the soft commodities leave, both Russia and the Ukraine, are closed. Commercial ships aren't going to those locations for obvious reasons. And we would expect there is already sort of massive disruption and dislocation of infrastructure. So again, as is the case for oil, this is not necessarily an issue of there being none available. It's that we can't get to what's available.
All right, Fiona, thank you so much for joining us. Fiona Boulder, head of commodities and real assets at S&P Dow Jones Indices. Now, coming up later, we have more on the commodities outlook with the chairman and founder of Fortescue Metals Group, the world's fourth biggest iron ore producer, Andrew Forrest. That interview later this hour in about 20 minutes from now. This is Bloomberg.
为开春的时候为各国运动员和随队官员提供热情周到的服务。
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Welcome back to the Open, everyone. 24 minutes into the European trading day, and the European stock 600 actually seeing a bit of a turnaround, gaining now some 0.1%. U.S. futures also turning positive. Now, it's still not a pretty session when it comes for commodities because of the concern, of course, we have about the flows, about labor shortages, about just the way of getting things out of Ukraine and Russia, for example, wheat. So we'll keep an eye on that. But for the moment, we're also seeing the NASDAQ gaining some 0.3% for the futures. Now let's get straight to the Bloomberg Business Flash. Here's Laura Wright. Hi, Laura.
Hi, Francine. Apple and Nike have become the latest companies to halt product sales in Russia following the country's invasion of Ukraine. The tech giant is also removing the RT News and Sputnik News applications from app stores outside Russia. It says it's disabling traffic and live incident features in Ukraine as a safety and precautionary measure for citizens there. ExxonMobil has joined key rivals in exiting Russia as pressure grows on energy giants to respond to the invasion of Ukraine. The U.S. company holds a 30% stake in the offshore oil operation in Russia's Far East. It says it will begin to discontinue operations and leave the venture, though without giving a time frame. Baidu shares have surged in Hong Kong after its revenue and profit beat estimates, signaling the Chinese online giant's efforts to monetize AI technology is really paying off. Revenue for the December quarter rose a better than expected 9%. China's internet search leader blamed the country's slowing economy for weakening ad sales at its core search advertising division. That's the Bloomberg Business Flash. Francine.
Thank you so much, Laura. Laura Wright in London. Now, we did see in the last 4 or 5 minutes a reversal, actually, when it comes to European stocks. Also, U.S. futures pushing forward and gaining. Now, the war in Ukraine and sanctions on Russia did trigger a surge in commodities, fueling concern about the economic outlook. Treasuries are rising. We need to look at real yields to look at what the growth prospect is. And, of course, a reminder that the war also imperils flows of crops and metals, with Russia and Ukraine accounting for about a quarter of the global grains trade. However, if you look at the S&P futures, they're gaining some 0.3%. Watch out for OPEC Plus today. Brent, $111, and also wheat surging some 7.6%. It actually hit a 14-year high. We'll have plenty more, of course, on commodities. Also coming up as the war in Ukraine escalates, how should investors respond to the crisis? We'll get the views of Dan Kemp, Global Chief Investment Officer at Morningstar next. This is Bloomberg.
nuestro estudio, en nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes. Según las modificaciones, nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Welcome back to the Open, everyone. 30 minutes into the European trading day, and here are your top stories. Moscow's assault on Ukraine enters a more brutal phase as Kyiv's allies step up sanctions. China edges away from Russia, calling it the conflict a war. The corporate exodus continues. Apple and Nike halt product sales in Russia, while Exxon takes steps to exit an oil and gas project. And Brent crude passes $110 per barrel as the IEA warns the invasion threatens global energy security. OPEC Plus meets today and global commodities surge. We speak to Fortescue Metals Chairman Andrew Forrest this hour. Now, this is a picture of the latest assets. If you look at some of the European stocks, they were down quite significantly. Now, overall, they're gaining some 0.3% for the European stocks 600. Actually, we're seeing a bit more of a reversal. They're pretty much undecided about whether they want to have a small gains. The FTSE gaining some 0.7%, largely supported by commodities. The biggest story is on commodities. But a reminder, we've also seen a reversal in U.S. futures in the last couple of minutes, so they're now gaining a little bit. The war, of course, imperils the flows of crops, of metals and energy, which is why we're seeing some of the sectors moving the most, including energy, metals, Brent at 110. Remember, there's OPEC Plus also meeting later today. So let's straight go to the sectors that are moving the most. You can see energy getting some 2%. That's what's giving some of the commodity-rich indices an idea or supporting them. If you look at, for example, Brent oil topping $110 a barrel, wheat hitting a 14-year high, that's, of course, giving a bit of support to basic resources, auto parts, telecoms, chemicals, some of the sectors that are losing the most. Now, real yields, often seen as a proxy for growth expectations, are plunging further into negative territory. You're looking at the 5, 10, and 30-year U.S. real yields, flashing warning of stagflation as inflation pressures continue to rise, but growth expectations actually flag. Now, we do see the impact of the invasion in European bonds as well. German two-year yields completely unwound their shift higher from earlier this year and have returned to December lows. It raises, of course, the question, is the ECB now on hold until we see peace? Meanwhile, in the UK, the market is starting to lose faith in the BOE's hawkish signals, with the two-year real yield plunging the most since the Brexit vote. Now, let's bring in to talk about all of these signals in the markets Dan Kemp. He's Global Chief Investment Officer of Morningstar Investment Management. Dan, thank you so much for joining us. The market readjusting to this new reality. I know it's a very difficult call to say how long and how bloody this war is, and our thoughts constantly, of course, with the loss of human life. But what does it mean for central bank inflation expectations and how quickly they can hike?
Well, hello, Francine, and you're right. You know, I think we have to put into context everything that we're talking about with the horrendous suffering that's happening for people in Ukraine. And so the situation certainly makes the job of being a central banker much more difficult. If we roll back a couple of weeks, the future path seemed fairly clear. We know that central banks were keen to address the rising inflation pressure we've seen across the world, would stop talking about transitory inflation so much and really try to give that impression of stronger action. Of course, now what we're seeing is a change in market sentiment. We're seeing enormous volatility as people try to understand what the impact of the situation is, not just right now, but longer term. We expect...
And Dan,
Sorry, go ahead.
Yeah, no, Dan, this is the biggest question, right? Is if you're a big financial that has exposure to Russia, when do we find out? When do we find out the linkage? So, how long do you think it will take the markets to go through everything, and we have a better picture of actually what the sanctions and what the Russian war means?
Well, I think the challenge there is it's not just finding out what the exposure is now, but of course, as the sanctions evolve and as the response to sanctions evolve, then the impact will change as well. So we know that analysts across the world are ferreting around in companies to look at not only the direct exposure, but also where Russia's integrated into supply chains and what that might mean for companies as well. So it's going to take a little while for that to come through. And that's why it's so difficult for investors right now, because the temptation is to find a narrative to try and do too much.
Dan, we're also looking at live pictures, of course, from Europe. We're trying to follow everything that's happening at the EU Council with the Polish Prime Minister and Charles Michel. When you look at some of the things that have changed in your portfolio construction, Dan, what are your biggest convictions?
Well, our biggest convictions right now are outside the immediate situation we're seeing in Europe. We prefer UK equities and Japanese equities over US equities, but we know that US equities are becoming more attractively valued because of the falls we've seen this year. And so the focus now is not on trying to maximize returns in any one direction, but making sure you have a robust portfolio. That's been a focus of ours for the last year or so as we saw stock prices rise so dramatically. Making sure you have a portfolio that can deal with a wide range of opportunities and not anchoring on, or wide range of situations rather, and not anchoring just on one outcome.
So what do you do with gold right now, Dan? How do you protect your portfolio?
So when we're thinking about protection, we typically focus on government bonds, and we saw that, of course, yesterday in the very sharp falls in 10-year government yields, particularly in the UK. So we still think that government bonds are the best way of protecting a portfolio from volatility. We don't have gold generally in our portfolios, and that's because it doesn't generate a cash flow. In fact, it has negative cash flow, and so we don't think you can value it as an investment asset. And so we prefer to have assets that you can value.
Dan, when you look at some of your exposure to fixed income, particularly on the emerging market side, do you go local currency, or is it just too risky given the inflation expectations now?
Well, we do like local currency bonds. We've liked them for a long time. Of course, Russia is one of the companies that are included in those indexes and therefore in those funds. And so people who've had local currency bonds have a small exposure to Russia. It's probably about 7% in the local currency index until last week. It's now probably more like 1%. But we see in the rest of that market some good opportunities as those markets act more like traditional developed markets in the way their central banks work, the quality of their finances. So we're seeing some good opportunities given the valuation there.
What needs to happen for you to have more risk appetite?
Well, I think what we need to see is a discount to a reasonable estimate of fair value. And the challenge is that we're seeing a wide range of potential fair values at the moment because of this uncertain situation. So as we see prices fall, as we see the situation become maybe a little clearer, but certainly fair values settle, then when we see a discount of that, then we'll become much more aggressive. So it's really when markets appear to be at their worst, that's when the best opportunities are.
Yeah, but presumably not Russia. And we're just getting some breaking news. You know, Russia plans to pay the OFZ bond coupon today. This according to an official who spoke to Bloomberg on condition of anonymity. The same person speaking to Bloomberg saying that foreigners' ability to access coupon payment not clear. I don't know whether you had any exposure to Russia and what you would do with that right now. I mean, you can't trade it.
that's right, you can't trade it, and you're right, there's a lot of uncertainty about whether that coupon will be paid to foreign owners, and so that will be an important event this week as we work through that. And so yes, the key when looking at assets like Russian equities and bonds has always been that focus on diversification, not just having one exposure in emerging markets, but reflecting the broad opportunity set there. And of course, investors now aren't able to change their positions, but the exposure of Russia in those indices, in those funds, has fallen dramatically, of course, as the prices declined.
All right, Dan, thanks so much. Dan Kemp there, Global Chief Investment Officer of Morningstar Investment Management, joining us this morning. So we'll have plenty more, of course, on the latest headlines crossing the Bloomberg terminal on this Russian bond coupon. A Russian official speaking to Bloomberg on condition of anonymity. I think the most significant part of what he's told us is that foreigners' ability to access coupon payment is unclear for the moment. Coming up, we speak to the founder and chair of iron ore producer Fortescue Metals Group. We'll discuss the war in Ukraine, commodity prices, and of course, renewable investments. That's coming up shortly, and this is Bloomberg.
Is this going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project. Initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials, find people, analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Welcome back to the Open, everyone. 42 minutes into the European trading day, and you can see U.S. futures are actually rising. We'll get that board in a second. European stocks wiping out some of the earlier losses, now only down some 0.2%. Now, a couple of things you need to watch out for. First of all, OPEC Plus meets today. We're not expecting a huge amount of news. Even with that extra release of barrels, it hasn't done much to cool down the price of oil. Maybe OPEC can do something, but there's a little appetite. We could be surprised if you look at Brent. It's still above 110, and then wheat also at the highest in 14 years. Now, as the fallout from the war in Ukraine continues, Fortescue Metals is among a growing number of firms and institutions retreating from Russia. The world's fourth largest iron ore producer is pulling back on its renewable energy investments, and the chairman, Andrew Forrest, told ABC News that the company is retreating from green hydrogen projects underway in Russia. He joins us now here in London. So, Andrew, thanks so much, and welcome to the studio. I mean, we've been through a week, and of course, we constantly think about the people in Ukraine and the horrendous things they have to go through. But the market is really roiled because we don't really know how deep these sanctions go, the second round and third round effects. Should all chief executives just quit Russia on moral grounds or on reputational backlash grounds?
Yeah, I think it's absolutely like investing heavily into the most polluting form of fossil fuel, something which is going to help destroy the lives of your children, would be to keep investments in Russia now.
So what does that mean for the global commodity complex? I mean, we're seeing flows and wheat is being hit, oil is being hit, any kind of form of energy is being hit. Is that because of the sanctions, or is it because people are pulling out of Russia as well?
Look, it's both. But I would say to all my fellow chief executives and chairmen around the world and major shareholders, if you're making $1 from Russia right now, I'd call it blood money, because the people of Russia, they're not hearing what we're hearing. People of Russia are being told that the Ukraine has been shelling Donbass for years. They've killed thousands of people, hundreds of children. All this complete rubbish. I mean, if that had happened, what I know for sure, organisations like Bloomberg would have spread it all over the world. It hasn't happened, yet the wise, intelligent business people of Russia are believing this.
Okay, why? And actually, so you're talking about then a war on misinformation that the West can't. I mean, what does the West do to counter that?
Well, look, I think the worst thing you can do as a leader is completely lie to your people. You know, in order for you to maintain power or for you to fulfill your personal objectives, you've had to get your population to come with you on a lie. That, I think, is the absolute height of criminal irresponsibility for a political leader or for any form of leader. So I would say to all chairmen, chief executives and shareholders, I think it's time you got real and you left Russia.
Okay, what does that mean for the world economy? So how inflationary is this going to be? What does it mean for commodities going forward? What are you looking at?
Look, there'll be some turbulent waters, but I can tell you they won't be hurricanes and typhoons and cyclones. If we don't stop the breach of morality that you can invade another country and get away with it, then what you're looking at is typhoons, cyclones, and unimaginable consequences. I'd much rather have turbulent waters now and completely stop the economic growth of someone who's taking oil and gas dollars from all over Europe, from mums and dads who switch on their gas stoves and use it to pummel innocent citizens of another country.
Andrew, you understand the commodity complex like almost no one else in this region. How can Europe sever its dependence from Russia on that?
As Germany and other countries are doing, they're weaning themselves off. But if you ask me, this is a little bit late now for Russia to have done this. Move a year or two ago before the great technology and the huge projects have broken for green energy, and maybe you would have had Europe by the throat. Maybe you would have had the global commodity market by the throat as a result. But you now have green energy, which is proven, which is being developed and can be ramped up at a scale. If we start putting the capital we'd put into fossil fuel into green energy, we will become energy independent from Russia very, very quickly.
Yeah, but there's a timeline problem, right? Very quickly is what, 2, 3 years, 5 years?
Oh, I think 2 or 3 years. I mean, if Europe and the world got serious about it, you could become energy independent completely in this decade.
Andrew, let's just go back to something that you said, and you're basically calling for all chief executives, all billionaires to get out of Russia now, otherwise it's blood money. But do you think that helps in the war of misinformation? If you believe that Russian citizens don't understand what's going on or think the war somehow is justified because of the actions in the past, does your action pulling out of Russia help in that?
Yes. My heart, in fact, the inner tears of myself and my family and my friends for the people of Ukraine are palpable. We can see their suffering. You report on it. We get the phone calls in the middle of the night. But I also get phone calls and all sorts of communication from really wonderful Russian friends. People with that famous, wonderful Russian soul are fantastic people. And they're telling me point blank that they believe that Ukraine has been bombing Donbass, that they've been absolutely destroying communities, killing children, and they believe this. And it's just absolute propaganda like we haven't seen since the start of World War II. And I'm just reaching out to the Russian people and say, please watch media other than your own governments. Please know that this is unprovoked aggression and this should be done over a table, not over a battlefield.
How does this end? I mean, there's now a threat of nuclear war. The Western allies are very much speaking with one voice. Are we looking at disaster?
There's easily enough power in the world, if we wish to use it, to put this to an end overnight. Now, we're not coordinated. We're spasmodic. Some nations are even neutral on it. They don't know which way to go. I'd just like to say to every leader in the world, imagine if this was your country, imagine if this was your people, what would you do? And then please do imagine that, because you could be next if you're allowed.
Have you spoken to world leaders, and what have they told you?
Yes, I've spoken to leaders, and I've said, look, we need to remove Russia from the monetary system, we need to cancel them out of SWIFT, and we need to cut off the demand for Russian energy.
So you would cut Russia, everyone, so all the banks out of SWIFT. What if it backfires?
Yeah, look, I wouldn't cut Russia off because they're Russia. I love Russia. I love the Russian people. It's a fantastic country and a fantastic people. I'd cut off any country who's going to use military aggression for political ends. If you can't resolve things politically, get out of the game. But reaching for your armies, reaching for your navies, reaching for your air forces to achieve political ends, you've just lost.
Andrew, thank you so much for joining us today. Andrew Forrester, founder and chairman of Fortescue Metals Group. Now, coming up, 4 million people, that's the UN's latest estimate of the number of refugees likely to flee Ukraine as Russia pursues war in the country. We'll be live from the region next. This is Bloomberg.
Soaring energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down, the manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
City. Here in London, in Sydney,
in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
To recap the headlines.
You do not want to miss this story.
How are you thinking about those dynamics?
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology.
This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Welcome back to The Open. Still with us, Andrew Forrest, Fortescue Metals Chairman. Andrew, we were talking, of course, about the implication of the Ukrainian invasion of Russia and what it means for energy security. I know you're working on Infinity Train, which is what a self-charging train to move iron ore. Like, how close are we to something like that?
Oh, we're close. I mean, this is for trains all over the world who go from altitude to sea level. Just for us, it's 100 million litres of diesel a year, but for other trains, it's billions of litres. If we just think differently, we can put a battery in a train which can give you more power than you need to go back up the hill than what you generated down the hill.
You have the technology for that?
We have the technology today. It's one of the reasons why we invested in Williams Advanced Engineering. We have the technology today.
And it's not too expensive?
No, it's going to save us $160 million a year.
But initially, right, to make sure that this works, the initial investment, is it going to be prohibitive for certain countries or companies?
Let's unpack that quickly. It'll cost us about $50 million to change over. We'll save $160 million a year.
All right, Andrew, thank you so much for joining us. Andrew Forrest there, founder and chairman of Fortescue Metals Group. Now, the UN estimates that up to 4 million people could leave Ukraine as the Russian invasion continues. We'll have plenty more, of course, on that throughout the hour. I think we also have Aggie Cantrell over there at the border. Aggie, if you're joining us, what's the situation like on the ground?
So right now, Francine, we're seeing quite a lot of more people coming through the border now that the morning has started. And we're seeing that while the temperatures are still very low here, they're trying to get as many people across the border, not just at this position, but in other places, not only in Poland, but in other countries that are bordering Ukraine. And this is obviously not just a question that affects the Eastern European nations. We hear from the European Commission this morning that they're looking at finding ways to incorporate these refugees into the labour market in Europe by providing them with temporary residence permits so that they can make sure that this isn't just a pressure that is put on Europe's eastern borders, but is also something that the rest of the European Union can support Poland and Romania and Hungary and the like.
Aggie, what is Poland actually doing to support the refugees?
So Poland has been in close contact with the Ukrainian authorities as well, trying to make sure that they're reducing the waiting times for people on the border. We saw them open 2 new border crossings for pedestrians. A lot of the people crossing over the border are trying to come in cars, but there's also a lot of people coming on foot. And we're also seeing NGOs and people like the Red Cross and the UNHCR on the ground here in Poland and in other parts of Eastern Europe to help people get across the border.
Aggie, what's the most immediate effect, and actually the one thing that leaders are asking for is what right now?
So what they're most concerned about is making sure that once the people arrive here, that they're able to then find the proper location to go to. And also, as I said, the European Commission is looking at these, trying to perhaps find residence permits for people so that they can then have access to education and the labour market, and that this is not just a pressure on the eastern flank of Europe, but these people are able to be rehoused elsewhere as well.
Aggie, thank you so much. Aggie Cantrell there in Medica, Poland. Now, in the meantime, we also look at natural gas. One of the most significant increases, of course, that we've seen that goes directly to the livelihood of a lot of households. The highest level of natural gas this year is what we're seeing right now, actually surpassing the closing highs in December. At the same time, a lot of the focus is on commodities, but U.S. futures rising. European stocks wiping out some of the earlier losses, signaling that the market sell-off is easing after the slide we saw yesterday. That's it for the European Market Open. Surveillance Early Edition is up next. This is Bloomberg.
U.S. has announced it's moving 8,500 more troops to Eastern Europe. If they're not being deployed to Ukraine specifically, why is that so important, and does that risk further provoking Russia?
Well, there's two things going on. So what the United States recently announced is that we are going to put 8,500 troops that are part of the NATO response force on high alert. That means they'll be ready to deploy on a moment's notice should we need those forces anywhere in Europe to protect NATO territory. In addition, the United States is also looking at possible additional moves that they might make to move U.S. force posture into Central and Eastern Europe. The reason we're looking at that is because a lot of the members in that neighborhood in Central and Eastern Europe feel concerned. And so we are looking at what measures we might take in the name of reassurance and deterrence.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
As a company grows, there are more challenges. What do you worry about the most?
The market opportunity for us is enormous, and so our challenge is to continue innovating, driving, and pushing ourselves every single day to go after the most attractive profit pools in this incredible global beauty and wellness market.
A Russian dictator invading a foreign country has cost around the world. I think I have a better idea to fight inflation. Lower your costs, not your wages. I can announce the United States has worked with 30 other countries to release 60 million barrels of oil from reserves around the world.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Moscow's assault on Ukraine enters a more brutal phase. Kyiv's allies step up sanctions. China edges away from Russia. Biden calls out Putin. The U.S. president uses his State of the Union address to brand his Russian counterpart a dictator and says that he will pay a high price. Brent crude soars past $110 per barrel. The IEA warns the invasion threatens global energy security. Gasoline spikes. OPEC Plus meets today. And stay with Bloomberg Surveillance Early Edition. This hour we speak to the chief executive and founder of the world's largest crypto exchange, his CZ from Binance. He joins us shortly. Send in your questions on IB Plus TV Go. Now, first things first, let's check in on the markets. Now, in the last 30 minutes or so, we actually see a reversal. The European stock 600 still in negative territory, but the S&P futures over in the U.S. in positive territory. Of course, the brunt of the rise is going on to energy, partly because, no pun intended, it's on Brent 111. We'll have to see what OPEC Plus decides to do. For the moment, it looks like they're staying put. Auto parts, the biggest losers in terms of the sectors overall. It's all playing out in commodities for a number of reasons. First of all, that region is really called the breadbasket of the world because of the reliance that the rest of the world has in terms of their wheat exports. Bonds in Europe also trading lower. And of course, one of the things that we're watching out for is the second and third round effects of some of these sanctions. So natural gas futures not only at the highest since December, but at the highest in intraday since December. You can see 49% higher. Wheat, also one we're watching out for because, of course, this leads to fuel inflation. It could have a huge impact on household spending, and that has an impact on what the central banks can and can't do. And then again, corn, 2.8% higher as well. Now, President Joe Biden slams Vladimir Putin in his State of the Union address. The U.S. president has called his Russian counterpart a dictator and says he will pay a high price for his invasion of Ukraine.
He badly miscalculated. He thought he could roll into Ukraine and the world would roll over. Instead, he met with a wall of strength he never anticipated or imagined. He met the Ukrainian people.
Well, that's as Russia is pressing forward with its military advances. Western militia officials are warning that the invasion is entering a new, more deadly phase, with Russian forces likely to use more indiscriminate tactics. Maria Tadeo joins us from Brussels with the latest on the international political reaction. So, Maria, where do officials actually see this going in the next 48 hours?
Well, Francine, unfortunately, and of course, we don't want to speculate with this, but the information that we have from officials, particularly here in Europe and the European Union, that are looking at what's been happening over the past 48 hours, they worry that this war is going to take a very ugly turn for two reasons, Francine. One, of course, is that we are seeing impatience from Russia. They're growing impatient at the idea that they thought this was going to be a quick military operation, that the government would be toppled quickly, and we're now on day 7. They are spending a lot of money on this war, and they worry that the longer it goes, the more difficult it becomes for Russia to manage. The other issue, and we had a Ukrainian official this morning telling us this, is that the more time they spend fighting on the air, the more aggressive and indiscriminate they become too. The Russians do not want to fight on the ground because they feel they will encounter, of course, resistance from the Ukrainian army, but also the Ukrainian people, civil unrest and guerrilla-style tactics on the ground. They also worry about food and fuel shortage. So all of this means that Russia is trying to accelerate these operations to do it in a way that is more brutal for the civilian population, but in a way that could advance their military targets for the Europeans. What they worry about is that this is going to turn into now a very ugly face of the war that has an impact on people, and we're seeing that, of course, already with the refugees trying to flee war.
I mean, already those pictures are just so horrific, it doesn't even bear thinking about how much worse it could get. Our Europe correspondent, Maria Tadeo, there. Now, Russia's assault on Ukraine is having a severe impact on markets across the board, from a corporate exodus from Russia to multi-year highs in commodities, and even a case where foreign bondholders of Russian OFZs may not get their coupon payment. Now, to break all of these angles down, we're joined by our managing editor, Benny Camel, our executive editor for commodities, Will Kennedy, and our markets editor, Christine Aquino. Benedict, let's start with you. We continue to track the corporate response to this. Which other companies have exited Russia since yesterday?
So after the first wave of, should we say, sort of the commodities space, we're now seeing a second withdrawal, a second sort of uncoupling from Russia. And this is the consumer space and the brands that people know. Most notably, we had Apple, we had Nike, we've had Disney come out overnight saying they will stop doing business. Apple said they will stop selling their products in Russia. They will stop offering Apple Pay. They will stop using some of the Russian websites, news sites on their website, and this obviously carries huge symbolism. These are iconic US brands. These are brands that not too long ago rushed into Russia, into the ex-Soviet Union to win business there, and now they're all scrambling to get out. The question really will be, how quickly can they unwind the business over there? It's one thing announcing this, it's another thing if you have a physical presence there, if you have shops there, if you have employees there. How do you actually go about pulling out of a country? Do you just take a big hit and close up shop, or do you sort of do this more slowly? There's obviously political pressure from governments to unwind operations you have over there. So this is something we'll have to watch over the next couple of weeks, how the announcements actually turn into action, how these companies actually pull out of Russia.
Yeah, a lot of chief executives, of course, in crisis mode, trying to figure out how to extricate themselves from Russia. Well, not only do commodities such as wheat and oil a record-breaking surge, but the natural gas suddenly at a record high on concerns over supply.
What we're seeing across the commodities industry, Francine, is that buyers are really reluctant to trade with Russia, and that's cascading through all our markets and driving highs from everything, as you say, to gas, to oil, to wheat. There aren't specific sanctions on commodities, but many traders are unwilling to trade Russian commodities. Many banks are unwilling to finance them, and importantly, many ship owners are unwilling to carry them, and that's really having a big effect.
I mean, at what level does this plateau? I mean, what are the chances that, of course, there's also a supply shock in terms of turning off the taps? And are we expecting anything from OPEC Plus?
I think OPEC Plus meets this afternoon. They're going to be under huge pressure to do something. Oil traded at $113 a barrel this morning. That's the highest since 2013. But at the moment, all the signals we're getting is that they're going to adopt a steady-as-it-go approach and just stick with their plan to increase by a rather marginal 400,000 barrels a day.
Christine, talk to me a little bit about some of these payouts to foreign owners. We thought it was banned, but then we also spoke to an official who said it's a little bit less clear than that.
Absolutely, Francine. And I think that is the gist of it for investors as well. It's really not clear how this is going to play out in reality. I think, yeah, I saw the same headlines just before I got here, basically saying that we are getting an indication from Russia that they will be making these coupon payments. But again, if you're a foreign investor who is holding these bonds, it's still not entirely clear how exactly those payments are going to get to you, especially if you're outside of Russia. Because again, we still have this issue of even if technically Russia makes those coupon payments, the question is, will those payments actually be able to reach overseas and get to these foreign investors?
Yeah, and the other question is, we look at real yields, like there's an inflation problem. We have a great chart, which I think we'll get up for you in a second. So we have inflationary pressures really increasing like quite incredibly. At the same time, growth prospects could also fall off a cliff. So we're looking at stagflation.
Absolutely, Francine. And you can really see the confusion in the bond markets as they try to work this out. I mean, yesterday's moves in yields were really incredible. Those declines were some of the biggest that we saw in years, if not decades. And then today, the turnaround is equally incredible because I think, you know, we're coming up to Eurozone inflation data in just an hour and a bit. And then we also have some indications from the Bank of England as well that they still intend to hike, at least according to some officials. And so it really is markets trying to work out what is the inflation growth balance here, and we're taking it day by day, Francine. It changes so much.
Yeah, it's so quickly. Christine, thank you so much. Everyone, thank you so much for that team effort. Managing editor Benny Camel, of course, head of commodities Will Kennedy, and our markets editor Christine Aquino. Smart Conversations continue on Bloomberg Surveillance Early Edition. This hour we speak to the chief executive and founder of the world's largest crypto exchange, CZ, from Binance. He joins us on a little bit later in the program. You can send in your questions on IB plus TV Go. This is Bloomberg.
The Omicron variant and the latest wave have an impact on not only consumer trends, but your business. And do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida. And I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that a peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
Tonight, I can announce the United States has worked with 30 other countries to release 60 million barrels of oil from reserves around the world. America will lead that effort, releasing 30 million barrels of our own strategic petroleum reserve. And we stand ready to do more if necessary, united with our allies.
Well, that was Joe Biden in his latest State of the Union speech, talking about the release of more oil from the strategic reserves. If you look at oil, and actually that 60 million barrels of oil did not really do much to help the energy situation. Brent is still at $111. The picture is that we're not sure we could get a surprise, but for the moment, OPEC Plus not really meant to do anything, but they start meeting this afternoon. Some of the other commodities, and again, it's not only about energy, it's metals being impacted, some of the softer commodities because of the place of Ukraine and Russia in the world. Of course, it's also impacting corn, natural gas prices. You can see 38% higher. It's actually pretty incredible on how fast and the market's looking at the situation and saying, well, this will have a longer term impact maybe than they thought yesterday. Now we're joined by Trevor Greetham, head of multi-asset at Royal London Asset Management. Trevor, thank you for joining us. When you look at some of the commodities, I mean, I'm a little bit uneasy about, the market is certainly U.S. futures increasing, but then you see energy also falling off a cliff. I don't know whether it's two narratives or whether one has to play catch up to the other.
Well, commodities broadly have been very strong. I mean, prior to the conflict, we were seeing sterling-based returns from the low of a broad commodity index, like the Bloomberg Commodity Index, of about 40%. And now we've seen this extra move up, really triggered by the potential disruption to oil supplies around the Ukraine crisis. There's a broad commodity surge that was happening already because the world's growing too strongly for its supply-constrained snarled up supply chains. Then you add this on top, and you're seeing this extra massive kicker to commodity prices generally. And bear in mind that most commodities involve using energy to produce the commodities, so they're very linked back to oil. To harvest corn, there's a lot of driving tractors around.
So, Trevor, how does this continue? I mean, if you look at, the market and the economic fallout from this possible sanctions, let's say it doesn't escalate, but we actually don't know what happens. But given where we are, what are the second and third round effects of these sanctions? Could they backfire?
Well, I think the sanctions are much stronger than the markets were expecting and much stronger than Putin was expecting. There's a lot of shock around at the moment, not least in Russia, about what's happening. I think you could see by the collapse in the Russian stock market last Thursday that the domestic Russian investors weren't expecting this either. And obviously we're seeing this terrible humanitarian catastrophe, which the world's really focused on, including China. And so you've got China saying they deplore the loss of civilian life. So I think you're going to see a lot of volatility is the first thing for the next few days and weeks, as the expectations of an early end or a late end to the conflict come backwards and forwards. Central banks are in a real quandary because they didn't raise interest rates last year when growth was strong and inflation was rising. They're playing catch up this year. There was even talk, as you know, of a 50 basis point Fed hike in March. And now they're looking at the level of oil prices that's likely to sap consumer growth. And so you're beginning to see those rate hikes coming back out of the market. For stocks, this is quite a bad combination. You've got slowdown in growth, rising inflation. And central banks are not likely to slash interest rates here, let's be clear. It's just a question of how quickly they raise rates.
So, Trevor, what does that mean for your portfolio management? Are you unwinding some of the position in equities, or do you want to be fully invested?
Well, there's a two-way pull. So in a stagflation stage of the business cycle, stocks tend to do quite badly because you've got the slowdown with the risk of tightening policy. But on the other hand, investor sentiment's already deeply depressed. It's the most depressed we've seen since the onset of COVID. And that means a lot's in the price. So at the moment, we're just slightly in Europe below the lows of Thursday, but not very much further down. We've neutralized positions. We went into this with a very small overweight in equities. We've cut that down to neutral. We still have the biggest overweight in our portfolios in commodities. And commodities are providing a really great diversifier at the moment to the losses you might be seeing in other parts of the portfolio. So it's an important asset class to include, and it's something which we're tactically overweight. And at some point, you would expect to see commodities come back down if the conflict ends sooner, and stocks would go back up. And that would be the point where you would want to move back to stock markets. But at the moment, I think discretion's the better part of valor, and we want to stay neutral.
But how quickly, actually, could if there's a de-escalation of the conflict, and of course, as sad as it is, it doesn't look like it this way, but we could be pleasantly surprised. How long does it take for commodity markets to readjust?
I think it would be instant, and we're all praying for an early end to the conflict. I mean, let's be clear, this is the thing that matters above everything else. But if you were to see an early end to the conflict, I think commodity prices would come back down, not that far back down, but back down maybe to January levels, and stock prices would immediately react positively, because none of us can really predict how this will work through. I think it's a bad idea to be selling shares at this stage. So we're kind of sitting neutral. We've got the overweight in commodities, and if we think the time is right, we'll be buying shares rather, I think, than selling them.
Trevor, what does it mean for second and third round effects on large financials? I know, we always think about Lehman Brothers. It's a very different situation because now we're essentially G7 countries are trying to, make a country almost default or at the brink of that, financially freezing assets. But have we figured out, or how long does it take to figure out the second and third round effects to make sure that there's nothing systemic where we just don't have enough liquidity in the market?
Well, the markets already have moved the share prices of banks with lots of Russian exposure. And obviously countries like Cyprus have got lots of exposure to Russia, some of the Italian banks. That's moved very quickly. I do think it's possible we'll see some kind of difficulty in liquidity in the payment system with anybody interacting with Russia, and the second round effects can come from that. But I would expect central banks, if necessary, to provide liquidity. It even might get to the stage where the Fed starts offering dollar swap lines to European banks. That doesn't mean they're going to cut interest rates, though. You can provide liquidity and still think inflation's a problem and still keep interest rates going higher. So don't mistake, a liquidity injection with a rate cut. They don't have to come together. But obviously it's a fast-moving situation in terms of the economic impact, and bond yields are dropping very rapidly, and that's signaling at the very least there's quite a prolonged pause that's likely in central bank activity. But it's very like the 1970s. We've got this big inflation surge. We've got central banks way behind the curve. We've now got the geopolitical stress as well. It's a really hard thing to manage, but the longer central banks don't raise interest rates, I think the more they have to raise them later. So loads of difficulties out there, and one thing's for sure is inflation is proving much less transitory than people thought it was a year ago.
Trevor, thank you so much. Trevor Gritham there, head of multi-asset at Royal London Asset Management, joining us, of course, on some of your portfolio positioning. Now, Smart Conversations continue on Bloomberg Surveillance Early Edition. This hour, we also speak to the chief executive and founder of the world's largest crypto exchange, CZ, from Binance. He joins us later on in the program. Send in your questions on IB plus TV Go. This is Bloomberg.
At the Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. There's a big celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
How difficult was it to go to investors and say, invest, give money, put money into a travel tech company within this environment?
It wasn't that difficult because TravelPerk is doing much, much better than the rest of the industry. In fact, we are at the moment growing at 4 times revenue of pre-COVID numbers.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
I would say to all my fellow chief executives and chairmen around the world and major shareholders, if you're making $1 from Russia right now, I'd call it blood money.
Well, that was the Fortescue Metals chairman, Andrew Forrest, speaking to Bloomberg a little bit earlier. Now we're back with Trevor Greetham, head of multi-asset at Royal London Asset Management. Trevor, we spoke a lot about commodities. If you look at some of the other sectors, of course, impacted by freezing out Russia because of this horrific war in Ukraine, where do you find value? How does it, have we quite figured out, for example, what certain companies leaving Russia means for their bottom line?
Well, some big cross currents going on in equity sectors at the moment. I mean, the sector that's been strongest, you won't be surprised to hear, is the energy sector. That's been a strong outperformer. Financials have been a little bit hit, not so strong. Utilities are doing quite well, so it's the defensives and the commodity plays that are strongest. And what's really interesting and different is, for example, yesterday the technology sector led the US market lower, even though there was a big collapse in real bond yields. And we've been told for the last 3, 4, 5 years that every time real bond yields drop, that can mean a higher PE multiple on tech and on growth stocks. And it's not happening. I think the reason it's not happening is that if the real interest rates are dropping for some technical reason, sure, that's a valuation boost to the growth sectors. But if the real interest rates are dropping because of fear of a hard landing, then I think tech becomes a cyclical. And it's a very expensive sector, and that generalized risk aversion can hit the tech sector.
Trevor, have you changed actually the way you think?
Underweight technology.
Yeah, okay. Have you changed the way you think about how many times the Fed can raise rates this year?
Yeah, the pencil has sharpened, and our economists are looking at that. I mean, certainly a 50 basis point rise in March is really out of the question at this stage. I don't know if I'd change the total interest rate rises for the year. And again, it really depends. Massive uncertainty here. But if this conflict can end in the next few weeks, then I think you'd see consumer confidence and markets bounce back. You've got very tight labour markets. Inflation would still be high. I think you'd probably see still the same sort of number of interest rate rises later on. The most positive outcome would be is if the supply chains can also ease up, if the pandemic fades away, then you could get fewer rate rises, and then you would get a tech-led recovery.
Trevor, thank you. Trevor Greetham there, head of multi-assets at Royal London Asset Management. Now, Smart Conversations continue on Bloomberg Surveillance Early Edition. Up next, we speak to the chief executive and founder of Binance, CZ. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA. which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is the picture for the markets. If you look at the impact, of course, of Moscow's assault on Ukraine, it enters a more brutal phase. Kiev's allies step up sanctions. China edges away from Russia. Biden calls out Putin. The U.S. president uses his State of the Union to brand his Russian counterpart a dictator and says that he will pay a high price. Brent's crude soars past $110 per barrel. The IEA warns the invasion threatens global energy security. Gasoline spikes. OPEC Plus meets today. And stay with Bloomberg Surveillance Early Edition. Up next, we speak to the chief executive and founder of the world's largest cryptocurrency exchange, CZ, from Binance joins us. Send in your questions on IB Plus TV Go. Well, good morning or good afternoon and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. So first thing is first, as promised, let's check in on the markets. We did see a bit of a reversal in the last 20 minutes or so. This is on the impact, of course, that commodity prices could have. European natural gas actually surging to a record high on concern that the war in Ukraine could disrupt Russian supplies even further. At the same time, we're seeing a repricing of some of the inflation expectations. Stocks dropping in Europe as oil, Brent oil is at $110, and that is sowing fears for growth. However, if you look at the S&P futures in the U.S., they're actually gaining. You can see crude oil, 110 for Brent, auto parts, the biggest losers, and energy as expected, the biggest gainers. So let's also delve deeper into some of the natural gas, but also wheat and corn because of the reliance of the whole world from Russia and Ukraine. Now, if you look at the disruption in gas supplies, they're more likely to damage the infrastructure in Ukraine or more likely to come from that. But the risk of sanctions applying to energy remains also a real possibility, which is why we're seeing natural gas futures actually soaring some 25%. Now, President Joe Biden slams Vladimir Putin in his State of the Union address. The U.S. president has called his Russian counterpart a dictator and says he will pay a high price for his invasion of Ukraine.
He badly miscalculated. He thought he could roll into Ukraine and the world would roll over. Instead, he met with a wall of strength he never anticipated or imagined. He met the Ukrainian people.
Well, that's as Russia is pressing forward with its military advances. Western military officials are warning that the invasion is entering a new, more deadly phase, with Russian forces likely to use more indiscriminate tactics. Let's return now to the war in Ukraine. Ruble plunging, trading volume of Bitcoin and so-called stablecoins have surged in Russia and Ukraine's local currencies on Binance. Well, we're joined by CZ. He's Chief Executive Officer and founder of the world's largest crypto exchange, Binance. And I'm also delighted to be joined by Hazlid Amin, who's been following Binance like me from the very beginning. So thank you both for joining us. CZ, we have a lot of questions, of course, on Binance. I know yesterday you said that, the Binance exchange is blocking the accounts of any Russian clients targeting by sanctions. What kind of flows are you seeing in and out of Russia in terms of cryptocurrencies, and why not ban morally all clients from Russia?
Thanks for having me. First of all, I would like to say we're deeply troubled by the escalating conflict in Ukraine, and this is far beyond a political issue. It's now a historic humanitarian crisis in the region. Many people, including our users, are being put in harm's way. And we were doing everything we can to provide support to the Ukrainians suffering today, which includes $10 million donations to charity organizations like UNICEF, focusing on helping children, UNHCR, focusing on helping the three-something million refugees, ISANS, people in need, Red Cross, Save the Children, etc.
Yeah.
And they're all offering active refugee intake centers in multiple neighboring countries, including Poland, Slovakia, etc. So I'm back on the topic of the sanctions. Binance follows sanctions rules very strictly. Whoever's on the sanction list, they won't be able to use our platform. Whoever's not, they can. So we work very closely with international regulators very closely to apply sanctions. So, but we view that we do not have unilateral decision power on our own to freeze normal people's accounts. I think that would be, that's unethical for us to do.
CZ, why not a ban completely? Are you concerned perhaps that all the users that you ban may gravitate towards your smaller rivals perhaps?
No, I just think it's not our decision to make to freeze user accounts, etc. So, for example, Facebook has not banned Russian users. Google has not blocked off Russia, etc. United States have not done that. So we just follow rules. We don't make them. And also, just from an ethical point of view, many Russians do not support this war. So I think we should separate the politicians to the normal people.
But CZ, if you don't go a step further, do you worry that this explicitly puts crypto on the wrong side of the law and on the wrong side of international norms? I mean, morally, are you comfortable with your position?
We are following the position supported by governments all around the world, including the UN. We do not make the sanction rules. They are organizations who make those rules. We follow them. So we are doing exactly what the recommendations are.
CZ, are you seeing sanctioned oligarchs trading on your platform? We know that you can't buy or sell on Binance anonymously.
No, Binance.com is a full KYC platform. So there's many smaller exchanges, crypto exchanges that do not have a full KYC tier, but Binance don't have that. On Binance, everyone has to go through a mandatory KYC, and there's no way to avoid that. So we do full KYC, and there's not. Yeah, I do not know of any ways for people to get around that.
Have you frozen anyone yet? Have you frozen any account yet?
So to be honest, I'm not sure exactly how many we've frozen or not. We have a very experienced compliance team that come from traditional law enforcement and compliance backgrounds. They're extremely good. We now have world-leading experts in this field working in our team. Many of them are ex-law enforcement from the top law enforcement agencies all around the world. So I would imagine that there probably are some funds that was frozen, etc. But I don't know the details. But we have experts following this process very, very strictly.
Can you give us a sense, CZ, of the number of flows or outflows out of Russia since the sanctions were imposed on Saturday? And again, if you don't go a step further, do you think you'll be more regulated by regulators who see still crypto as a bit of a dodgy way of moving money around?
So I think this is not a crypto-specific issue. The sanctions apply to banks and crypto at the same time. We're following the same rules. That's what we're following. So banks are following exactly the same sanction list as we follow. So this is not a crypto-specific thing. This is just, we are following exactly the rules established by the regulators. So so I don't see this as being a crypto-specific issue.
We know that Ukraine wants a complete ban. What are you hearing from the Biden administration? What kind of conversations are you having right now? What are they asking you to do?
So yes, we are. We are trying to get accurate information in as timely manner as possible, and we follow all those recommendations. And so we are following the rules established by governments all around the world. And so it's not for us to decide to unilaterally freeze some Russian citizens' bank accounts that's not on the list. So and also unilaterally doing that as a platform doesn't, number one, hurts the most vulnerable groups of people that have very little impact on international affairs. And you probably just move those users to other smaller platforms that are less compliant and may not even have mandatory KYC, etc.
But Cici, at the same time, I mean, we're getting quite a lot of viewer comments, okay, and this is mainly traders saying we're not allowed to trade Russian stocks. So you as an entity, you're still doing business with Russia. Is not that against, sanctions? And a lot of people are writing in at the moment, and so we thank our viewers. They want to ask a question, is there a rule for crypto and another for regulated traders? That you're doing business with Russia, but they're not.
So the banks follow the same sanction rules. Just because there's a restaurant in London or in UK or in New York, those restaurants may still be servicing Russian citizens, and I don't think that's anything wrong per se. But just because that restaurant's in New York, it may not service a lot of Russian citizens, doesn't mean that they are different in principle. So certain businesses are location driven, certain businesses are not. Most banks are limited to one country, but banks do handle international transfers. And right now, I believe most banks follow the sanction list as we do.
Cici, we heard from Mike Novogratz. He says that Bitcoin was created because people just don't trust governments. Do you see this all leads to an expedited pace of de-dollarization?
I'm not sure about that, to be honest, but Bitcoin, so there's another, I would add to that, there's another common misconception that many people use crypto through centralized exchanges. That's actually not completely true. With blockchain technology, anyone can download their wallet, create their own keys, and transact with people using the blockchain, sending Bitcoins, receiving Bitcoins without going through any exchange. In that regard, blockchain does offer that a high degree of freedom and flexibility, but and the blockchain does not reject any transactions. So that part is technically feasible, and there's a lot of transactions in that way. I think many people are overly focused on a very narrow part for centralized crypto exchanges, which actually is not the whole crypto industry. So I think most people are overly focused on a very narrow part of it.
Yeah. Cici, can I just go back to, have you noticed any unusual crypto flows or price flows coming in from Russia and Ukraine in the last couple of weeks? You must have the answer to this, or you must have researched this. So we don't see country-specific flows being too different from before, but we see overall there was a sharp decline when the war just starting. Everyone's getting worried. And many people probably still don't understand Bitcoin or crypto. They think it's going to go down together with the market. And then if you look at the Bitcoin price, it's actually the very similar curve. It goes down first, and now it's ramping up again. So we're seeing volumes almost identical to that. Yeah, but we do not see too many. So we actually do not see too much volumes in those specific countries because most people think they will be like trading, but guess what? This is the war. People are worried about the war, right, and not trading crypto. Cici, you can tell me with confidence that you don't think any sanctioned Russian money or money from oligarchs or the people around Putin have transited through Binance in the last weeks.
I'm very confident that we implement the sanction list very, very strictly. So I do not think that happens.
All right, very quickly on the headquarters, where will it be?
So we do. I spend quite a lot of time in Dubai these days, but we have a corporate headquarters registered. We'll announce that very soon. So that's already communicated with many regulators around the world. So it's no longer. But I'll wait for the official announcement to announce that.
All right, hopefully we'll see you back on Bloomberg then. CZ, thank you, the Chief Executive and founder of Binance. And of course, thank you as always, Haslinda Amin as well. Now, we're just getting some breaking news out of Kremlin saying that the Russian economy will withstand sanction pressures. The Kremlin also saying that it is not clear yet if Ukraine is ready for the new talks. This is according to the spokesperson Dmitry Peskov speaking on a conference call. Now, we'll have plenty more, of course, on the invasion. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists. Coming up, we'll have more on sanctions. We'll look at Abramovich's assets. We'll be talking to Russia's Tom Keating, who doesn't expect sanctions to fix the UK's systemic illicit finance problems. This is Bloomberg.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
In crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Chelsea Football Club owner, billionaire Roman Abramovich, is selling his London properties over sanction fears. That's according to the British MP Chris Bryant. The UK has sanctioned more than 100 Russian individuals and entities in response to the invasion of Ukraine. But Abramovich has so far remained off the list. Well, we're now joined by Bloomberg's David Hillier, who writes, of course, on sports, who's broken a number of stories on Mr. Abramovich, and Tom Keating, he's Director of Financial Crime and Security Studies at RUSI. So thank you both for joining us. David, first of all, what do we know about what Roman Abramovich wants to do with Chelsea and what he's doing with his properties?
Well, I mean, obviously, everything's up in the air at the moment, but Abramovich would love to keep Chelsea, but I think he feels that things are drawing in on him now and closing in on him. Chris Bryant, the MP, the Labour MP, who reportedly has access to security sources, has revealed that Roman Abramovich is trying to sell some of his properties. In itself, that might not be so significant because he hasn't really been living in London for about 3 years since he had visa problems. But what's going on at Chelsea is probably more significant and more dynamic here.
Yeah, and David, through your reporting, I mean, what do we know and what could we find out? So is there a danger? Well, I know he's put it in a trust. It's not really a blind trust, but he's put it in a trust. If he gets sanctions, which he very well could, what does it mean for the possibility of transferring this club to someone else? Could we see owners? Is he ready? He's always said he would not sell Chelsea. Could he this time?
I mean, I think he has always said he doesn't want to sell Chelsea, and I just talked to a would-be buyer just now who called them on Saturday and was told it's not for sale. But the problem is that he feels, and this is why I think he put it into a trust, that the controversy and the disdain and general disgust over the invasion is doing untold damage to Chelsea. So I think he's being advised by people that he needs to either make this trust arrangement work, and that's problematic, or sell it. In fact, when I spoke to Chelsea on Saturday, when they were talking about the trust arrangement, one of my sources said to me, we know that this move will give a glimmer of hope to would-be buyers. Yeah. So I think, it's very predictable that the whole spate of speculation about people wanting to buy Chelsea.
David, thanks so much. David Hillier there, of course, our sports reporter. Let's get now to Tom Keating. Tom, first of all, in the UK, how difficult is it because of privacy laws to go after even the people that are sanctioned, and how much wider could these sanctions become?
Well, it's clear that the government is finding it challenging. We hear from the Foreign Secretary regularly that she has a hit list of 500 names. Yep. I think MPs on both sides of the House in London are asking, where are those names? Right. We hear that the Foreign Secretary is being challenged by law firms on behalf of certain names. So I think they're struggling, frankly. I think they're struggling to come forward with the names at the speed at which everyone is demanding.
But, I mean, what could they do? If history, I mean, there's a lot of, one of the biggest investors, foreign investors are, of course, Russian nationals here in the UK, specifically London, in certain of the posh areas. There's a number of their kids also here in the UK. Like, what can they go after and how?
So the new sanctions law, just to be technical for a second, which came in a couple of weeks ago, is very broadly drawn. Yeah. So if you are supporting the Russian government, if you're benefiting from the Russian government, then you are in the crosshairs. And I think that the attitude in Parliament at the moment is such that it's not just going to be the name on the list that is going to find their assets frozen, it's going to be those who are associated. So yes, it might be the daughters, it might be the kids at school, it might be the wives who are shopping in Bond Street. But frankly, at the moment, we need to make it clear that that money, that dirty money, is not welcome in the UK and needs to leave or be frozen.
Do we have an idea of how much that money represents in the UK? Or again, is it quite opaque?
But this is the huge problem. I mean, the UK government, over successive governments, has been asleep at the wheel on this. So actually, our knowledge of where the assets are, how many assets are here, is very, very limited. And I think that's why the government is scrambling to demonstrate action, because it's quite hard to know what to take action on.
But why is it so difficult? So we know, when you go around some of the places in Highgate, people tell you, oh, this is the house of so-and-so, of this oligarch. Is it because on paper it's through a blind trust or through a company resident in one of the British islands?
Yeah, I mean, these individuals have always known that they are vulnerable to being attacked by law enforcement or by sanctions. So, yes, they structure through trusts, they structure through front companies. So what the government needs to be doing is demonstrating that it knows what companies are associated with Sergei Lavrov or Vladimir Putin or any of these individuals, so that banks and others actually know who the targets are. Because Vladimir Putin does not have a bank account in London.
Tom, what do we know actually about, Mr. Abramovich? I mean, it's unclear. There was talk about him helping with peace, but then that wasn't confirmed. I mean, where does he stand?
Look, I think a lot of these guys are starting to feel the heat. They will say what they can to try and avoid pressure. We've seen their daughters posting on Instagram, no to war. They want to distance themselves from Vladimir Putin, but frankly, it's too late.
All right, Tom Keating, thanks so much for joining us, Director of Financial Crime and Security Studies at RUSI. Now, coming up, 4 million people, that's the UN's latest estimates of the number of refugees likely to flee Ukraine as Russia pursues war in the country. We'll be live from the region next. This is Bloomberg.
this chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high. Prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, the UN estimates that up to 4 million people could leave Ukraine as the Russian invasion intensifies. That represents a 300% increase from earlier EU forecasts. It says nearly 700,000 people have already left Ukraine. Let's cross over now to Bloomberg's Aggie Cantrell near the Polish-Ukrainian border. Aggie, the situation, looking at social media, following reporters such as yourself, is absolutely horrific. Is it getting worse?
Hi, Francine. It's difficult to say that it's getting worse, but definitely as the fighting is intensifying, there is still definitely a lot of people who are going to be coming over this border. But it's not just a question of what is happening at the border, but also how Poland and the rest of the EU is reacting to it. And right now, Poland is trying to work in close cooperation with the Ukrainian authorities as well to open up border crossings to allow for more people to get through the border. But this is also not just a question about Poland, but also this is the same. We're seeing the same things in Slovakia and in Hungary and in other places that border Ukraine.
So, Aggie, what is Poland actually doing now to support the refugees?
So we see that the Polish authorities are not only in touch with the Ukrainian authorities, but also we're seeing that the European Commission is now looking at options to allow for the people who are coming here to the European Union to be able to get temporary residencies, which means that they would have access to the labour market and to education once they arrive. And it's worth noting as well that this is very much an international concern. It's not just about Ukrainians crossing. There are people from all over who were living in Ukraine who are also trying to cross the border.
Yeah. Aggie, thank you so much. Aggie Cantrell there on the Polish-Ukrainian border, joining us, of course, on this humanitarian crisis as well. Now, this is the picture for the markets. A lot of anxiousness on commodities. We'll see whether OPEC Plus does something this afternoon. Bloomberg Surveillance Early Edition continues in the next hour with Matt Miller, Kaylee Lyons, and Anna Edwards. This is Bloomberg.
We know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccines specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
A Russian dictator invading a foreign country has cost around the world. He thought he could roll into Ukraine and the world would roll over. Instead, he met with a wall of strength he never anticipated or imagined. And we stand ready to do more if necessary, united with our allies.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong on this Wednesday, March the 2nd. Our top stories: State of the Union. President Biden speaks about the conflict in Ukraine. He also says he will make inflation his top priority. Russia says its forces have captured a key port city in the Black Sea, but China distances itself from the Kremlin, warning that Beijing is extremely concerned about harm to civilians. And it's a relentless rally in the oil market. Crude tops $110 a barrel. OPEC Plus meets today, but is expected only to agree to a modest increase in supply. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. Just very brief details there about the State of the Union. We'll get to that in more detail shortly, Kaylee. But a real turn in sentiment, it seems, rather unexplained perhaps, when you look at what's going on in equity markets, certainly from the Asia session into Europe. Europe now looking a little more positive.
A little more positive in Europe, a little more positive when it comes to U.S. futures, but that positivity did not arrive in time for the Asian session overnight. It was a broad down day in the Asia Pacific. That benchmark MSCI Asia Pacific Index was down by about 1.25%. You had Hong Kong actually underperforming within that, and that was partially due to weakness in technology. The Hang Seng Tech Index down 2.7%. That was down partially to one stock in particular, Kuaishou, which is an online platform subject potentially to more regulatory scrutiny, a story we often hear in China. So that was dragging on those shares. In other asset classes, though, I would point out that what we're seeing in bond markets globally, a repricing of central bank expectations, the idea being saying maybe they won't be as aggressive, leading to yields moving lower across the world. That was evident in Australia, with the 10-year yield there coming in 11 basis points to 2.075%. And finally, I would note in foreign exchange, the Chinese yuan once again acting as an unusual haven. The offshore yuan actually the only currency in Asia stronger against the dollar today, even if it is relative fractional strength. But right now, dollar yuan trading at 631.73, Matt.
All right, and really currencies are for me front and center today, Kaylee, as well as oil, which is an asset that maybe some people are using as a store of value. S&P futures are up a little bit, but I don't really think that means people feel it's a risk-on market. We had a down day yesterday, and admittedly the VIX is off of its highs, but still trading around 32 and change. You've got to watch out for the volatility in this market. Crude was amazing yesterday, and it's still holding. This is Texas Intermediate at 109.03. This may be, for some investors, a place to put money if they're concerned about the dollar. The dollar concern, though, although it's theoretical and I think an incredibly fascinating topic today on the Odd Lots podcast with Joe Weisenthal and Tracy Alloway, Zoltan Poser is talking about the fact that the U.S. dollar may see its world reserve currency reserve status hurt by this. Nonetheless, the dollar index is up as people see it as a haven around the world still, and that should be the case for years, but I'm just saying you could see a little inflection point here, at least according to Zoltan Poser. Bitcoin right now at 44,000. Up a little bit, but really around the same levels we saw yesterday. And this is all part of that currency story right here. And you could throw gold in there as well, but it's not moving very much right now. And the question is, where do people go when someone else can turn off your currency? And a lot of people are saying Bitcoin is a possibility. Yeah. Oil certainly is a possibility for a country like Russia, and gold as well.
Yeah, and wherever that money goes, how quickly do regulators catch up with it? Let's talk, Matt, about what we're seeing here in European markets. We've got a slightly more positive picture than we had at the start of the trading day here in Europe. I should also get to some breaking news here in Europe, and certainly for the euro area. February inflation, the inflation rate rising to 5.8%. That's against an estimate of 5.6%. So once again, we see inflation numbers coming through above estimates. It's that same old story. And that is even before, of course, we see any of the impact of the geopolitics of this war on inflation rates globally. Back to the markets then, as we're seeing them right now, and European equity markets are making those tentative moves to the upside. The FTSE 100 up by 0.7%, but of course it's oil stocks and mining stocks that continue to do well there. Let's roll on and show you where we are on Brent crude. Matt's shown you where we are on WTI. Brent up by another 5.4% today, 110, once again the handle when it comes to the Brent price. And again, we've got the OPEC Plus meeting taking place today. What will the Saudis do, if anything? Expectations low that we'll see a big change, big pivot in policy coming through there. More on that shortly. This is the German 10-year yield, and yes, we do still have a negative yield. That's a fairly recent development, once again back into negative territory. But the story today is actually yields going higher, as here in Europe the conversation is shifting to how that inflation problem is tackled by central banks, and the market's back to thinking about that as a priority. Ericsson down by 10.8% for the telecom equipment company. This because the DOJ says that the company did not reveal just enough information when it comes to its dealings in Iraq and who it sold or whom it sold telecom equipment to. Rocky and Renka, which has the best ticker, which is tires, tells you exactly what this company does. This is based in Finland, and 20% to the downside earlier on their share price, now just down by 6.5%. But the reason for that is a 20% sales exposure to the Russian market, and we're seeing a lot of those kind of stories playing out this week, Kaylee, for European stocks.
Yeah, and a lot of companies just exiting Russia in general due to some of the reputational and financial risk that is present. Now let's take a look at what else is ahead today. On the oil story, OPEC Plus will be meeting via video conference. The group is expected to agree to another modest increase in oil production, even in the face of the war in Ukraine and potential disruptions to Russian energy supply. Then Fed Chair Jerome Powell will be taking the hot seat later today. He'll deliver his semi-annual testimony before U.S. lawmakers in the House around 10 a.m. Eastern time. What does he make of the market's sudden repricing of what they expect the Fed to do this month? Finally, Citigroup will be hosting its Investor Day. It will be held virtually after two members of senior management tested positive for COVID-19, because yes, we are still in the middle of the pandemic. And elsewhere in the world, EU finance ministers will hold an emergency video call at 9 a.m. New York time. That's to discuss the economic impact of the war in Ukraine, Matt.
All right, very interesting stuff to watch for sure. In his first State of the Union address, President Biden had a range of things to talk about as well, vowing to confront Russia over the invasion of Ukraine, warning Vladimir Putin that the war would leave his country weaker and more isolated.
A Russian dictator invading a foreign country has cost around the world. And I'm taking robust action to make sure the pain of our sanctions is targeted at the Russian economy.
Bloomberg Washington correspondent Joe Matthew joins us now in studio. And Joe led our special coverage of Biden's address last night. So he seems focused on the Ukraine issue, but he says inflation for the voters here at home is his top concern.
That's right. We heard a lot of that before. It was an interesting address. He spoke for about an hour, almost to the minute, as a matter of fact. And it was really broken up into chunks, a full-throated condemnation of Russia at the top. And when you think about the history of states of the Union, a little bit strange for the commander-in-chief to actually begin the speech with foreign policy. But that, of course, is the overriding story right now. And he got both sides of the room on their feet. You know how this normally goes. Democrats stand up for some things. Republicans stand up for others. The president really captured the room when he called Vladimir Putin a dictator and turned to a new effort to chase Russian oligarchs. He said, quote, "We're joining with our European allies to find and seize your yachts, your luxury apartments, your private jets. We're coming for your ill-begotten gains." The room went wild. When he actually transitioned to domestic issues, it was kind of a different tenor. We heard a lot of this before. It was a repackaging, Matt, of a lot of the issues from Build Back Better that never saw the light of day, that never got passed, that apparently he'll try to breathe new life into, but not entirely likely in a midterm election year. One of the biggest statements of the night, though, was something that was not said. Look at that image. The President of the United States with no mask, a House chamber full of lawmakers hugging, shaking hands, talking to each other, largely with no masks. It was an opportunity for him to say that we're turning the corner. We may not have beat COVID, but we're turning the corner. Look at that image. It's something we certainly have not seen for a long time.
Yeah, of course, the pandemic, though, was not what really was front and center in the speech last night, Joe. And while there was a rare moment of bipartisanship, it's not something we often get in Washington. President Biden talked a lot about action he has already taken in retaliation to Russia's aggression in Ukraine. Are we expecting anything further out of Congress in this rare moment of unity?
That's a great question. You wonder if there's some momentum from last night, because they certainly have not been able to see eye to eye on this. The Treasury's been on its own. The administration is working through Treasury to implement the sanctions we've already heard about. There was a concerted effort to get this done through legislation in the Senate. The Foreign Relations Committee got within the 1 yard line, as Chairman Bob Menendez likes to say, but they couldn't see eye to eye. If you think back to that point in time, the argument was about timing. Do we trigger sanctions now? Do we wait for Vladimir Putin to invade? Now, as we look back, Republicans still say we waited too long. Whether Congress will codify any further sanctions in terms of legislation, we'll have to see if they can see eye to eye on anything now. I do think that this rallying cry last night might add a bit of fire to that effort.
Joe, thank you very much. Bloomberg's Joe Matthew with the latest on the State of the Union. And you can listen to Joe Matthew every weekday on his radio program, Sound On. That's at 5 p.m. Eastern Time on Bloomberg Radio. Now, Russia's war on Ukraine has now entered a more brutal stage. Ukraine President Zelensky implored the European Parliament to allow Ukraine to join the bloc.
We have proven our strength. We have proven that, as at a minimum, we are exactly the same as you are. So do prove that you are with us. Do prove that you will not let us go. Do prove that you indeed are Europeans. And then life will win over death.
Let's get more with our European correspondent, Maria Tadeo, who joins us now from Brussels. Maria, the latest then, this was Zelensky, President Zelensky of Ukraine, speaking to European lawmakers. They keep coming back to this call to join the European Union, but other voices suggesting not so fast.
Well, Anna, to join the European Union, this normally takes years This is a very tedious, very long process. It's a lot of criteria that you would have to meet to be able to qualify as a full EU nation. What I'm told is that overnight, this is not going to happen. But European leaders next week will debate whether to send a written statement or a written hint that could boost morale in Ukraine, saying there is a path for this country to join the European Union. And in the meantime, we're going to continue to supply weapons and financial aid. But an overnight membership, this is incredibly difficult and is simply just not how the EU works. The other thing we should note, there is confusion about this oftentimes. If you're an EU country, it won't make you a member of the NATO. These are two completely different things. Being a member of the European Union does not make you a member of NATO. So again, it's unclear to see how that would dissipate tensions with Russia at a point where Russia says our military goals are still the same. We want to complete our mission, and that means no weapons in Ukraine, no NATO, no EU, and a different government in Kyiv. The other thing I would point to, Anna, is that we're seeing a lot of concern from European officials who are worried, and they believe that the next few hours it could get very ugly in the country because Russia is growing impatient. We're seeing them operating on the air. This is becoming more brutal. It's becoming also indiscriminate. We've seen housing offices and civilians being hit by this, and they really do fear that this impatience from Russia and the fact that Vladimir Putin wants this done quickly could lead to a huge escalation overnight that could now really affect people. And of course, as we've been reporting the whole morning, there is now a wave of refugees trying to flee war in Ukraine.
Yeah, absolutely. Maria Tadeo back in Brussels, continuing really 24/7 coverage of this war. Let's talk about oil right now, extending its relentless rally above $110 a barrel for Brent before today's OPEC Plus meeting. That's as the International Energy Agency warned that global energy security is under threat following Russia's invasion of Ukraine. Let's get more with Bloomberg's Danny Berger. So, Danny, the moves yesterday were shocking to watch, and we're seeing these levels hold.
Exactly. At the moment, for the two-day period, we are up more than 12.5% on Brent. It's remarkable to think in just 1 month's time, we're going to be at that 2-year anniversary from when WTI prices went negative. We are so far from this. What's causing it is, despite this carve-out of the energy complex in Russia from sanctions, it is an embargo on Russian oil in everything but name. It is a toxic commodity that both traders and shipping companies alike are unwilling to touch. You can see that by the difference in price in oil coming from Russia versus Brent. We have a chart for this one for our radio listening audience, which we will get up shortly. This is what we're seeing. We are essentially seeing Brent prices taking off. Urals, which is the grade from Russia of oil, is far below that. Even so, reports from Trafigura are that they offered this oil from Russia at an $18 discount, easily a record. Not one single buyer willing to take it. OPEC Plus also, we've seen Saudi and the UAE siding with Russia, so they're unlikely to amp up output more than they've said before. And of course, this goes beyond oil. Grain is 25% of the global export of it comes from Russia and Ukraine. So at the same time as oil prices skyrocket, wheat, corn, all setting decade-plus highs.
All right, Bloomberg's Danny Berger with a great commodities roundup for us. Thank you so much. Now, as for what we're seeing on the individual company level, Apple and Nike are the latest to join the corporate boycott of Russia, cutting off the country to the most valuable technology company and the biggest maker of athletic wear. And as for how that's translating into the action pre-market for these companies, Apple is a little bit lower. Nike not yet trading before the bell. And I would also add another name to this list, and that is ExxonMobil. Actually, now Nike is actually trading and is higher by about 0.4%. But ExxonMobil joining some of its big oil peers and announcing it too will be exiting Russia. But with the move higher in oil prices Danny was just detailing for us, Exxon is moving higher by about 1.8%. A big move to the downside, though, for First Solar. This is the solar energy company. Gave a really disappointing earnings forecast for the full year, thanks in part to supply chain issues. That stock is down about 16% before the bell. But more positivity coming through for SoFi. The online finance vehicle gave an upbeat forecast. Analysts overall positive on the quarter they reported, and as a result, that stock moving higher by about 13% before the bell, Anna.
Coming up on the program then, Kaylee, Wei Li, BlackRock Global Chief Investment Strategist, joins us, and Leslie Vinjamuri, Chatham House Head of US and the Americas program. We'll get into the geopolitics as well. This is Bloomberg.
What do you think is the impact of the Prime Minister on the market?
As Mr. Suzuki, who is the Financial Services Minister, he mentioned at his own press conference, and share buybacks is widely used to return profits to shareholders and improve ROE. And how to share out the profits from growth is, totally the decision of the management of each company after carefully taking, all the stakeholders into consideration. And I believe Mr. Kishida has a quite cautious stance on the uniform regulation of share buybacks. And I think because he is giving a consideration to each company's, individual circumstance and decisions.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Last month's jobs report caught everyone off guard.
A massive upside surprise.
Just an astounding number.
The most stunning miss I've ever seen.
This Friday, count on Tom, John, Lisa, and Mike to get you the numbers and analysis you need fast.
A labor market that looks increasingly tight.
The economy is shaking off this pandemic.
And that's going to continue to keep the pressure on the Fed.
The February jobs report. Everything you need here on Bloomberg Television and Radio.
Welcome back to Bloomberg Surveillance. This is the early edition. We are simulcast on Bloomberg Radio and Bloomberg Television. I'm Matt Miller here in New York with Kayleigh Lyons, Anna Edwards with us out of London. Now, we are watching oil very closely, and over the last 3 days, so in trading this week alone, Brent crude is up 18%. What was most stunning, though, I think, is that yesterday, even after a big rally, the IEA came out and said they would release globally concerted 60 million barrels out of reserves, 30 million from the SPR here in the U.S. and the rest from around the world. That powered the rally even further. You would expect that buyers would say, okay, we're getting more here. I don't need to stock up. But the opposite happened. They took that as a warning. Will Kennedy joins us right now, our executive editor for energy and commodities. Will, what's happening here in terms of the price buildup? When you have reserves released, you would expect that to let a little pressure out of the trade.
Indeed, but what's happening here is that traders are increasingly refusing to buy Russian oil. There are no direct sanctions on Russian oil, but for a variety of reasons, fears about falling foul of banking sanctions, oil tanker owners refusing to go to Russia, some people having moral objections to buying Russian oil. There isn't enough oil coming out of Russia, and that's really sparking panic about the supply situation. Russia, after all, accounts for 5% of Russian exports account for 5% of global oil trading.
And so there's some self-sanctioning going. Good morning. Will.
Yeah.
Self-sanctioning going on when it comes to Russian product
Yeah.
here. So with that in mind, you might expect OPEC, maybe not with the plus, but OPEC to come forward with more barrels. But that's not the expectation, not in any big sense.
They will come with more barrels. They'll be sticking to their plan to release 400,000 barrels a day of extra oil into the market.
But no more than that is the expectation.
Our understanding at this stage is no more than that. Speaking with OPEC delegates over the last few days, we expect steady as she goes. But you don't know. I mean, oil prices have risen dramatically, and there's no doubt that many OPEC members will be coming under acute political pressure from Washington and other consuming countries like India, China, Japan to raise production more quickly. Whether that happens today, we'll see.
OK, 110.91 is where we trade on Brent. Thanks very much to Will Kennedy, our executive editor for energy and commodities. Coming up on the programme, more on oil with the Atlantic Council senior fellow, Ellen Wald. That is a little bit later on this morning, actually, at 6:30 a.m. in New York, 11:30 a.m. in London. This is Bloomberg.
Is this going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project. Initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
The capital markets can really help the shift to sustainable and decarbonized global economy. What are you noticing in that as ESG is now the buzzword literally everywhere?
It is definitely the topic of conversation in most meetings I have with company CEOs, with investors, with industry groups. It's amazing.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lines with Matt Miller in New York and Anna Edwards in London. Well, money market expert Zoltan Pozsar warns that the Russian invasion of Ukraine could be a turning point for the U.S. dollar. The global head of short-term interest rate strategy at Credit Suisse spoke on Bloomberg's Odd Lots podcast. Pozsar said with Russia losing access to its foreign currency reserves, it may make less sense for global money managers to hold dollars for safety, since they could be taken away. And I know you have your eye on this story, Matt.
Yeah, absolutely. Following this very closely, especially since it jibes well with the Bitcoin conversation that Matt Levine has been writing about over the past few days. But I will say Pozsar's prediction that the Fed would have to rush in with emergency funding because of Russian defaults didn't exactly come true this week, at least not yet. So maybe this is also a little bit of drama.
Yeah. Yeah, a lot of people contrasting the short-term and the long-term implications for the dollar when it comes to this narrative. Coming up on this program, we'll get the thoughts of Wei Li, Global Chief Investment Strategist at BlackRock. She can weigh in on the dollar too. This is Bloomberg.
It's almost the end of the year, but Bali is still quiet and empty.
I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping. But many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada, 1-2 itu ada. Tapi nggak kayak dulu, kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 tuh nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. In his State of the Union address, President Biden vowed to confront Russia over the invasion of Ukraine. He warned Vladimir Putin that the war would leave his country weaker and more isolated. The president also said that his top priority would be to fight rising prices. The war is entering a new phase, one that could be more deadly for Ukrainian civilians and soldiers. Officials from the US and allied nations expect more indiscriminate tactics. Meanwhile, Russia says its forces have captured a key port city on the Black Sea. But China distances itself from the Kremlin, warning that Beijing is extremely concerned about harm to civilians. And the rally in the oil market just keeps going. Prices in London and New York both jumped above $110 a barrel in the last 24 hours. The severity of disruption to Russian supplies showed signs of growing. OPEC Plus meets today, but it's expected to only agree to a modest increase in supply. I'm Anna Edwards in London with Matt Miller and Kaylee Lyons in New York. And European equity markets recovering some of their poise in the early part of the trading day. What do you focus on ahead of the US session then, Matt?
I mean, I'm really focused on the dollar, the Posar interview on the Odd Lots podcast and comments from Mike Novogratz. But I will say, if you just take this at face value and look what's going on in the market, it does look pretty risk on. S&P futures are up 0.7%. There's no bid for treasuries. Bitcoin is up about 0.5% right now. So not so bad until you get to crude. I mean, this is what drove the market down yesterday, is the incredible rise in crude. And we're seeing it up again. NYMEX crude up 5% to $108.63 a barrel. So the question is, how do markets deal with that at the open? We also see a little bit of a haven bid in the dollar. It's back up the Bloomberg Dollar Index to 1188, and this is where investors go for a little bit of safety, even more so than the Swissy and the yen. And the dollar is stronger against those currencies today. So you are seeing a bit of a haven bid there, but otherwise, Kaylee, it looks like investors are ready to bounce back from yesterday's drops. What do you see in the pre-market?
Well, where we didn't see a drop yesterday, Matt, was in the energy complex. Thanks to the continued rally we are seeing in oil, that once again is the story today, with energy players among the outperformers in early hours. That's especially true for some of the E&P shale players here in the U.S., the likes of Occidental Petroleum and Devon Energy, each higher by around 2% or more. And you have the oil majors moving to the upside as well. Chevron up by around 2%, as is ExxonMobil, which has now joined its big oil peers in saying it will exit its Russia business. That includes a 30% stake in the far east of Russia. That stock moving to the upside as well by around 2 percentage points, Anna.
Let me pick up on what Matt was saying about energy prices, and indeed, Kaylee, you were referencing as well. We are continuing to see that as a big story here in London. So Brent crude up by 5.2%. And what that does to other asset classes is really interesting to think about whether we trade this as just, quote unquote, inflationary or stagflationary. And that, according to my colleagues on the Markets Live blog, leads to different impacts on other assets, notably stocks. Interesting to see the euro is down, but this is really a dollar strength story, the haven status of the dollar playing out here. 110.90 is where we trade. What will the European Central Bank make of these kinds of levels? A lot of the talk in bond markets actually is about how the ECB will still need to focus on fighting inflation and come forward with some of those rate hikes. That seems to be the very minute-by-minute narrative that is currently dominating. Ericsson is down by some 12%. This after the DOJ said that this company in telecom equipment, of course, in Scandinavia, has not presented enough information about who it did dealings with over in Iraq and what equipment was supplied to whom. And this is BMW's share price, down by just over 1% this morning. Just a nice reminder of the difficulties that the auto sector is now facing here, just coming out of all of those supply chain disruptions, or not even out of the supply chain disruptions attached to the pandemic, and now having to deal with parts shortages that would have been coming through from either Russia or probably more from Ukraine. We saw BMW and VW both talking about having to idle some of their production lines as a result of a shortage of parts, Kaylee.
It's just one thing after another that companies have had to contend with, and one thing after another that central banks have had to contend with as well. And on that front, Fed Chair Jay Powell will be delivering his semi-annual testimony before the House Financial Services Committee later on today. He's expected to stress flexibility in the face of uncertainty posed by the war in Ukraine. Michael McKee, Bloomberg's international economics and policy correspondent, is here with a preview. Mike, what does Chairman Powell say today?
As little as possible that will make news. That would be his goal. I mean, his job was hard enough with COVID. Remember that? And now he's got the war. And what does that mean for the economy? So he's got a couple of tasks. One is talk about how it was the virus that affected the economy, and it's the virus that is pushing up inflation. It's not his fault. It's not the Fed. He'll be defending his organization. And because, of course, this is Capitol Hill, he'll try to stay out of the political aspect of it, with Republicans blaming Joe Biden and the Democrats blaming Donald Trump. He doesn't want any part of that. He's got to outline how far and how fast the Fed is going to go in raising rates, but without offering any concrete details, because he doesn't know, especially with the war. And he's going to explain why the Fed can do this. And here's why the Fed has an issue with this, with the markets, and that's history. The Fed, over the years, has raised rates into recession almost every time. Now, it's not always their fault. Sometimes it's the financial crisis, etc. But rates are going up. And notice this, the Fed rate is always above inflation, except down in this corner right now. How does the Fed deal with that? How high do they go? That's what the markets want to know, and that's what they're going to want to know on Capitol Hill.
Yeah, how high does inflation go in the meantime as well? Mike, thank you very much. Bloomberg's Mike McKee with an update on what we're going to hear from Chair Powell. Joining us now with her perspective, Wei Li, BlackRock Global Chief Investment Strategist. Wei Li, really nice to speak to you. And I see from your notes that you are favouring stocks over credit and tying that in with the inflation narrative. Are you betting on this being an inflationary environment but not a stagflationary environment? Is that why you see opportunities for stocks, or is there a different backstory?
Hi there. Good morning, Anna. Actually, before we talk about market, I just want to stop and acknowledge the human cost in all of this, and our hearts go out to everyone impacted. And as it relates to market, indeed, Anna, we have released a set of asset allocation view changes this week, specifically upgrading developed market equities and funding that from global credit. And the reason for that is really recognizing that as we entered 2022, we lowered risk taking because of the elevated risk of policy confusion and also policy overreaction, central banks slamming on the brakes. And given everything that is happening right now, we believe that actually the risks of central banks slamming the brakes has significantly decreased. In fact, you see the year-to-date hawkish repricing reversing, which is a big part for why we are upgrading developed market at this point, not to mention the robust fundamental picture as it relates to earnings that continue continue to surprise on the upside, both in the US and in Europe, both in sales number and also in earnings beats. And at the same time, the growth picture is quite different from a stagflationary environment. We continue to think that it's going to hold up.
Wei, are you concerned with, we were focused on the possibility of funding stresses in the markets over the past couple of days, but we haven't really seen that kind of volatility. Are you concerned about that?
I have definitely come across some very sensational kind of warning of the risks around funding side of things as we enter this week. But compared to the parallel drawn with the Lehman moment, we actually think that the financial plumbing is more robust, and there's a lot of liquidity and dollars sloshing in the system. So we're less concerned versus the kind of the sentiment out there referring this potentially as a Lehman moment. In fact, yes, indeed, in the near term, we can see safe haven beat kind of supporting the dollar, and we see that coming through. But this is far from it being a Lehman moment, and we're less concerned about the financial plumbing side of things.
Are you also less concerned about aggressive action from central banks, Wei?
The lack of actions from central banks?
Less aggressive action.
Sorry, just
the idea that perhaps the Fed won't move 50 basis points this month.
Well, actually, that has been our expectation in that we actually already thought that the hawkish repricing that we have seen so far this year by developed market central banks, that repricing has been too excessive, especially given the supply-driven nature of inflation. So off the back of that, we were getting ready to upgrade developed market equities, and we put that upgrade on hold because of the elevated geopolitical uncertainty, and now we know what we're dealing with. We then went ahead with the DM equity upgrade. So we definitely do think that the hawkish repricing earlier this year was too excessive. Now, having said that, we also think that in the current environment of economic restart, which is very different from a recovery, we do not need excessive accommodative kind of monetary policy environment. So taking rates from very, very supportive, very, very loose to neutral is warranted, but going from neutral to outright tightening is not. So we think that yes, rate hikes will kick off maybe for the first few meetings, but from there on it will be very data dependent. And earlier in the year, talks of 7 and more rate hikes for this year, I think that's coming under question.
Okay, so from loose to neutral, but maybe no further. We will watch for the data. Wei, thank you very much. BlackRock Global Chief Investment Strategist. Thank you for your time. Coming up, Leslie Vinjamuri, Chatham House Director of the US and Americas Program. We'll get the aftermath of the State of the Union address. We'll also talk about the changing role of China in the war in Ukraine. Plus, with immense growth comes scrutiny. Carlyle co-founder David Rubenstein sits down with the TikTok CEO. Carlyle is an investor in TikTok owner ByteDance. Catch the full interview tonight at 9 p.m. in New York.
We believe that our approach to all the governments and regulators around the world is to be collaborative and to be very transparent, to be available to explain what we do and who we are and answer any questions that they have. That's the approach we have taken, and that approach has been an approach that has been very beneficial for us over the course of the last few years.
what's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. The United Nations estimates that up to 4 million people could leave Ukraine as the Russian invasion intensifies. That represents a 300% increase from earlier EU forecasts. It says nearly 700,000 people have already left Ukraine. Let's cross to Bloomberg's Aggie Cantrell, who is near the Polish-Ukrainian border and can join us now. Aggie, what is the situation on the ground there as the estimates just keep on rising?
Hi, Anna. Yes, I've been here all morning at the Medica border on the Polish side, and we're seeing a lot of people still crossing every hour from Ukraine into Poland. And it's worth also noting that this is clearly an international concern. It isn't just about getting Ukrainian people out. I have spoken to people this morning from delegations from Sudan and from Nepal and from Cote d'Ivoire who are all here to try and get their own citizens out of Ukraine as well. And it is clear as well from the Polish side that their priority is also reducing the waiting times for the people coming over the border when it comes to, for instance, they've been trying to create new border crossings with the Ukrainians so that they can make sure that in these freezing temperatures, people can get over safely and securely.
Yeah, I was going to ask if there's enough aid, Aggie, right now, and what this looks like to you compared to, you witnessed the influx of Syrian refugees into Germany 6 years ago. What does this look like compared to that?
Well, it's notable from the Polish side that, as we know, in 2014, 2015, there was a lot of tension within the EU about taking in new refugees. But right now, it seems that the Polish are very keen to get people into the country who are Ukrainian. And it is important to also note that the European Commission is also looking at ways in which to integrate people into Europe as quickly as possible through, for instance, ways of giving them permanent residencies so that they can enter the labor market and enter education within the EU.
All right, Bloomberg's Aggie Cantrell on the Polish-Ukrainian border. Thank you so much for joining us and your reporting from the ground there. Now let's get more on this crisis and the U.S. response to it. Joining us now is Leslie Vinjamuri, Chatham House head of the U.S. and Americas program, who is actually in New York today, waking up early for us after the State of the Union address, Leslie, in which Biden talked about the action he has thus far taken in retaliation to Russia's aggression, saying he stands ready to do more if necessary, but also saying that he is taking robust action to make sure it hits the Russian economy, not the U.S. economy. If his priority is preserving the domestic economy, keeping price pressures under control here, have we seen him go as far as he realistically will go when it comes to Russia?
I think we have in many dimensions, although, as we know, the United States, President Biden, together with Europe, with the European Union, with European member states, with NATO, is continuing to discuss and push really hard on the sanctions. I mean, we have seen very strong sanctions measures taken beyond, I think, what we had guessed, sanctioning Russia's central bank, a number of banks, Germany's moves. But again, as we see the developments unfold in Ukraine, we can see that no matter how hard and how punishing these sanctions are, they're not actually stopping what Putin is doing on the ground. And that, of course, is the rub. And yes, that going any further seems very unlikely. The measures now, I think, are really intended to punish, to make Putin and Russia feel the consequences of their action, but not actually to change that behavior.
We've heard a lot about, the possibility of these sanctions backfiring, unintended consequences. Everybody from Zoltan Pozsar to Jamie Dimon has been talking about this. Deutsche Bank also putting out a note, George Saravellos, saying that it could be hurtful to Europe as well, as oil prices are going even higher in euro terms right now, and there could be a bit of a negative correlation there. Are you concerned about that?
I think, one of the questions with sanctions is that, why do you use them? You use them because to not sanction would be quite a strong statement in the face of this kind of aggression, in the face of war crimes, in the face of a clear violation of sovereignty. On the other hand, what do they actually achieve? And if one of the goals is to try and weaken not only international support, that's pretty much gone, but to weaken the domestic support that Putin has, to the extent that people begin to really suffer in Russia, will that have the desired effect? I think, and what will Putin's pushback be? But still, it's very difficult to see any alternative other than to take an extremely difficult line in the face of this kind of invasion, this kind of aggression, because of course it could get much worse. The implications for the security order very difficult, but it's not been clearly communicated what Putin would need to do other than the obvious, right, to get those sanctions lifted. So I think sanctions are always a blunt instrument with very difficult, high costs, and yes, absolutely the prospect of a backlash.
The end game here still very unclear, Leslie. Also, the role played by key players, and I'm thinking here of the role of China. What would you expect from the U.S. perspective? What would you make of the fact that we're seeing reports this morning that China has been holding talks with Ukraine, has been warning that it's extremely concerned about the harm to civilians in Ukraine? Can China play a very significant role here in putting pressure on the Russians in a way that other nations can't?
Well, in theory, yes. And I think this is the question we're all watching and trying to understand. From China's point of view, this is not an invasion that it would support. It's playing a very careful line. That partnership, that relationship with Russia is important. That protection of sovereignty that they've jointly articulated, but this is such a clear violation of sovereignty. And I think for China, especially as we're seeing those direct attacks on civilians as war crimes, and likely many more and much more devastation in the days ahead. This is where China, I think, really wants to distance itself. It still wants to be seen to be a legitimate member of the international community, wants to play a strong role at the United Nations. And if it doesn't take a very clear line, distancing itself from Russia, that's going to become very difficult to do. But now, of course, it's also saying, that it will play a role in trying to negotiate some sort of ceasefire, some sort of settlement. The question, of course, is whether Putin is amenable to this or whether he's really just decided that he wants to go in and he wants to take these cities and take more control of Ukraine.
There have been, obviously there are a lot of conspiracy theories flowing around things like this. And there have been concerns that China could use Ukraine as a distraction for its interests in Taiwan, also that it will de-dollarize its economy after it sees what's happened to Moscow here. Do you give any credence to any of that?
I think that certainly President Biden, the U.S. government will be thinking very carefully. This happened in Afghanistan, about what the unintended consequences of these actions are, how China will think about Taiwan. People are asking this all the time. But I think that, no. In the end, I think that China will understand that this is a very different conflict, that any move on Taiwan would be treated very differently, not least by the United States. I think that signal has been sent quite without reservation. The policy of strategic ambiguity is ambiguous, but it's not as ambiguous as one might imagine. And so, yes, there's a question mark about what is the U.S. action, the limits of U.S. action, what signals does it send? But each conflict is very different. And I think China in particular understands how significant the region is, not least from an economic perspective. And so the lessons between the cases, and one doesn't want to overdraw them.
All right, thank you so much for giving us some of your insight today. Leslie Benjamin, Chatham House head of the U.S. and Americas program. We appreciate it. Now, speaking of sanctions, let's talk about the role of cryptocurrencies within that, because Bitcoin proponents have for years touted its virtues as a hedge against conflict and inflation. Earlier on Bloomberg CZ, the CEO of Binance, the world's largest crypto exchange, weighed in on that issue.
Binance follows sanctions rules very strictly. whoever's on the sanction list, they won't be able to use our platform. Whoever's not, they can. So we work very closely with international regulators very closely to apply sanctions. So, but we view that we do not have unilateral decision power on our own to freeze normal people's accounts. I think that would be, that's unethical for us to do.
And according to billionaire Mike Novogratz, Russia's invasion of Ukraine could prompt more people to turn away from the dollar in a potential boost to cryptocurrencies. Sonali Bostic, Bloomberg Wall Street and crypto correspondent, joins us now for more. So, Sonali, it's this idea of the de-dollarization of the world being accelerated. How many people share Mike Novogratz's view?
Quite a lot. This has been a conversation that's been happening for a very long time. I went back to an interview that I did in 2018 with the CEO of Lazard, even, which is a more conservative investment bank than Galaxy, of course, and he said crypto shows that reserve status isn't assured for the dollar. Marty Chavez, the former Goldman executive who moved over to 6th Street, has been voicing this concern for years. And also, this happens at the same time when China's central bank currency has rolled out a lot more quickly than the dollar. Mike Novogratz himself, back in June, when I asked him about this, whether crypto would overtake the dollar, he took a lot more muted of a stance on this. He said people are not buying crypto because they think we're going to become Venezuela. They think about a possibility of a faster paced debasement of the dollar. He used the British pound sterling as an example here. And that's really what's happening here. It's not just about crypto overtaking the dollar. It's this idea about the de-dollarization of the world, he says, and that threat that also China poses when you think about this big global story, and the idea that reserves will be sold as global tensions start to ramp up.
I will point out that investors continue to pile into the Bloomberg Dollar Index. So for right now, that's not happening. But I wonder what the risk of regulation is here, because the idea with Bitcoin is you should be able to own your own money and move it around as freely as you like without interference or censorship, as they call it, from governments. But if they can go in and tell exchanges not to allow big trades to happen, then that's essentially, not working out the way Bitcoin is supposed to.
You know, Matt, this goes back to the heart of a big question that's been happening this week, and are Russian people moving their money out of Russia, and to what extent are sanctioned individuals or to-be sanctioned individuals moving their money out through cryptocurrencies? When we talk to the exchanges right now, what they say is there's not really evidence of that yet, given the ticket sizes that you're seeing from the Russian ruble
Otherwise,
conversion.
it would be $60,000, $70,000, $80,000 rather than 44.
Exactly. But with that said, also, what CZ had said earlier of Binance about this idea of exchanges complying with sanctions around the world is very interesting. I did something for you guys this morning. I went back to the cryptocurrency white paper this morning to see how many times government was listed. It was 0. It's not in the white paper. Centralization, central. The word central comes up only twice in the white paper.
Interesting.
And the idea here really is about not trust, as many people talk about, but the idea of cryptographic proof of payments. This is a real test for this currency.
Of course, that's just in Satoshi's white paper. That's not really what's built up the community.
Exactly. So that's why this is such a pivotal moment for it.
Sonali, thank you very much. Sonali Bashak joining us there on the subject of crypto. More Bloomberg surveillance is ahead. We'll be hearing from Larry Summers, former U.S. Treasury Secretary, among others, weighing in on the market and economic impacts of war in Ukraine. This is Bloomberg.
The U.S. has announced it's moving 8,500 more troops to Eastern Europe. If they're not being deployed to Ukraine specifically, why is that so important, and does that risk further provoking Russia?
Well, there's two things going on. So what the United States recently announced is that we are going to put 8,500 troops that are part of the NATO response force on high alert. That means they'll be ready to deploy on a moment's notice should we need those forces anywhere in Europe to protect NATO territory. In addition, the United States is also looking at possible additional moves that they might make to move U.S. force posture into Central and Eastern Europe. The reason we're looking at that is because a lot of the members in that neighborhood in Central and Eastern Europe feel concerned. And so we are looking at what measures we might take in the name of reassurance and deterrence.
The contagion channels for Russia now are heightened global uncertainty and commodities.
This could just exacerbate inflation, exacerbate supply chain woes.
The inflation here is broad-based and becoming sticky.
I think we're all trying to figure out what's going on now.
This looks like this is going to be a rupture that lasts for years.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
What a move in crude from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance live on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Futures up 0.6%. TK, this move in crude, 109.34 briefly through 110.
The move in crude you see in the commodity complex as well. And these are jump conditions, John. They're all linked in to this moving of hydrocarbons, the moving of commodities. They're immovable when you've got sanctions and real soft sanction restrictions on Russia.
It's the second point that's the important point, Tom. Nobody right now seemingly wants to touch Russian crude. It's a disruption in supply that maybe we weren't expecting from these sanctions.
Yeah, not that we need to do the data check now, John, but these are jump conditions off where we were 24 hours, even 12 hours ago, whether it's oil you look at or ruble getting right to where forwards were yesterday. We've done that in 24 hours with a 110, 111 ruble. That gets my attention.
Lisa, Fed Chair Jay Powell a little bit later set the stage. What a difficult one for him down in D.C.
What does he do with this? We have increasingly the S word being spoken, stagflationary types of trends, more so in Europe than in the U.S. But he's looking at stickier input costs that are rising at the fastest pace in decades. And it's unclear that they could potentially roll over when you have the wheat prices. It's not just the oil prices. I know you've picked up on that as well, John. It's everything in the commodity sector that's getting disrupted as people try to understand the ramifications from this Ukraine invasion.
Lisa, I'm so pleased you went there, Tom. It's something we have to pick up on. The crude story, gas, gets tons of attention. What doesn't get enough attention, these numbers here. Russia and Ukraine supply more than a quarter of world wheat exports, 1/5 of corn sales, and about 80% of sunflower oil cargoes. Tom, that's a massive story for global politics and a global economy.
You can watch any number of indices. I actually looked at South Africa wheat this morning, John. You can see that on the Bloomberg, but you've got a jump condition in Chicago wheat, really on the first print this morning, opening up 5%, well over $10 a bushel. I don't know how bushel translates, John, in the United Kingdom, but the answer is these are jump conditions we're working with, and so much of this, John, within the information quiet we're getting out of Ukraine.
36 litres, isn't it, Tom? 35, 36, a bushel? Okay.
It's a peck.
A peck.
A peck.
Okay. Headlines crossing, Tom. Let's pick up on those headlines.
Yeah, serious headlines.
Yeah, this coming from Ukraine, asking NATO to protect its sky. Tom, we've talked about that a couple of times. You can pick up on that in a moment. They say the time of the next Russia talks is still unknown. But here's the important part, Tom. They're ready for the talks, but not with ultimatums.
Yeah, it's the back and forth. It's extremely fluid. What I would suggest, John, is we're focused on Kyiv. I get that. We're focused on, up by the Russian border. Far more important to me is the encirclement of the entire shoreline of the Black Sea. We're not there yet, but that seems to be the major focus out in the zeitgeist this morning. Mariupol over to Odessa is something unspoken in the Western press.
Lisa, this line, air defense is the top priority.
Well, right now, that's because Russia is very much taking the air approach to Ukraine. You know, I've been reading all of these issues as people watch what's going on with Ukraine, feeling impotent, feeling like they should be doing something. And then other people saying, well, you start doing something, you incur the wrath of World War III, and this sort of perilous feeling that people have as they watch what's transpiring on the ground, John.
Futures look like this morning, Lisa. Let's whip through it. Equity futures up 5 or 0.6% on the NASDAQ, up around 0.7%. Of 1%. What a move we saw yesterday in the bond market, not just in America, in Europe much more so. This morning, yields higher by a single basis point to 174 on 10s. Euro dollar breaking down again. Monday, Tuesday, Wednesday, a break of 111. Lisa, euro dollar 110.97.
Yeah, that is the weakest going back to March 2020. People moving away from the Eurozone because of that stagflation fear. You have, of course, Deutsche Bank coming out this morning from George Saravelos. We are speaking with David Fan. We're speaking with Deutsche Bank's economics team later this morning in order to get a sense of why they say the ECB really has to back this up and support the euro at this place. What I'm watching today, a whole host of issues, including a number of oil-related ones. OPEC Plus meeting to discuss April production plans at 7 a.m. as oil prices surge beyond $110 a barrel on Brent crude and past $107 a barrel on WTI. There's also ExxonMobil Investor Day at 9 a.m. Exxon did move away from their Russia ties, as well as the EIA crude oil inventory report at 10:30 a.m. Key question. Does OPEC Plus have control over this? Who has control over this, since a lot of these sanctions are self-imposed, are unwritten, and are in everything but name? And that is what we are seeing across the board. At 9 a.m., we've got EU finance ministers holding an emergency meeting by video conferencing. And again, my focus is on additional sanctions, including perhaps limiting some of the oil carve-outs at a time when natural gas in Europe has more than doubled in just a couple of trading sessions, surging well past 30% now, at one point more than 60% overnight, John. I mean, these moves are absolutely catastrophic and unreal. And at 10 a.m., responding to all of this, trying to put it all together into Fed policy, Chair Powell is going to be testifying, giving his semi-annual testimony before the House Financial Services Committee. He also goes tomorrow before the Senate. How does he dovetail this at a time when people are ratcheting back expectations for rate hikes? Does he indicate that they are going to move slower than they previously did as people pull down their expectations for rate hikes from as much as 7 just a few weeks ago to now fewer than 5?
A big challenge for Chairman Powell and the whole of the committee coming up through the next several months. Lisa, thank you very much. From New York this morning, good morning to you all. Last night, the President of the United States addressing the nation.
He badly miscalculated. He thought he could roll into Ukraine and the world would roll over. Tonight, I'm announcing that we will join our allies in closing off American airspace to all Russian flights. A Russian dictator invading a foreign country has cost around the world. And I'm taking robust action to make sure the pain of our sanctions is targeted at the Russian economy.
Team coverage starts right now with Bloomberg's Joe Matthew in New York, Maria Tadeo in Brussels. Maria, I want to pick up on the latest headlines, defending the skies of Ukraine. How controversial is that effort at the moment?
Yeah, it is. And Jonathan, there's a reason why the Ukrainian government says we need to shut the skies to Russia. Right now, when you look at the Russian army, the way they attack is from the air down. The Ukrainians say that if NATO and all of the European allies agree to make it a no-go area, that would force the Russians, and we're entering now into the technicalities of war, but that would force the Russians to go from the air to the ground. And on the ground, they do not have the advantage that they have in the air. We know that they would face supply issues when it comes to food, fuel. We know they have a lack of direction on the ground. We also know they would face major opposition from the people of Ukraine, civil unrest, guerrilla-style attacks from people, normal people that are now still defending their country, and of course get into combat with the Ukrainian army that is face-to-face, body against body. So the Ukrainians say the only way we can continue to do this and actually win this war is to shut the skies. As long as Russia is able to bomb from the air to the ground, we are in a very precarious position.
Maria, within your reporting and within the reporting yesterday in Warsaw, is there a belief that any kind of air support can base out of Lviv in western Ukraine? The east to west measurement is huge. Does that give them enough territory to base air attack?
It could, but the concern, especially from the Eastern Europeans, who they want to help Ukraine 100%. These are the most hawkish voices that say we need to go bigger in sanctions, and Vladimir Putin right now is acting like a criminal. But the big concern they have is that this would imply flies and of course, pilots and an operation in the sky that could see if there was an incident, a NATO plane perhaps getting into an incident with a Russia plane. If there's a casualty there, then you're looking at two major armies in direct conflict. This is why they find that the sky is very dangerous, and it could lead to an incident and an escalation that they want to avoid. So this is not an easy decision to make, but you understand where the Ukrainians are coming from. They say as long as Russia continues to bomb, we cannot deal with this. From the air to the ground, the advantage is clearly with the Russians. On the ground, it would change because they don't have fuel, they don't have food, and they would run into major resistance. But if they continue to bomb, there's very little we can do.
Joe Matthew, you've been here basically all night covering what's going on in Washington, D.C. with Joe Biden's State of the Union and the response to it. Can you give us a sense, pushing forward, of the public sentiment and willingness to go further against Ukraine, going further against Russia, rather, for the invasion in Ukraine, and taking a move like shutting the airspace or even taking military action?
You know, I talked to the former Secretary of Defense, William Cohen, about this ahead of the speech last night, and he echoed what we're hearing from the administration, that's just a non-starter because it is a road, a path to potentially having, as Maria indicated, a direct conflict with Russian troops. We know a lot about no-fly zones after our time in Iraq, and we know that things don't always stay contained to borders. What the president said last night in his address was, first, our forces are not engaged and will not be engaged on the ground in Ukraine. He continued that promise and went on to say, however, we've mobilized American forces in case Putin continues to move west. He said, we will defend our NATO allies inch by inch, but no one is going into Ukraine and no one is flying over that airspace, not with an American flag on the jet. To the contrary, though, as we've been reporting, the European Union could be sending some MiG-29s, Russian fighter jets, to Ukraine. Those are the jets that their pilots are already trained to fly, and we could give them a bit of help with that.
Meanwhile, you've got the UK Prime Minister and Zelensky, the Prime Minister of Ukraine, agreeing on the need for further sanctions. Maria, are sanctions working?
Well, we see the pain, and we've seen that, of course, Russian stocks are not trading. We've seen what it's doing to the currency, and we've seen that there is already a conversation about the oligarchs and what can they do next. But when you speak to the Ukrainian people, they tell you that was good for this week, but we have to plan for next week. And at one point, we need to have a conversation about energy. What do we do with those payments that are still flowing to Russia? And this is going to be a conversation today when European finance ministers meet, especially if we see that the attacks from Russia continue to be brutal, indiscriminate, like we saw yesterday. There's going to be a real conversation about how to step it up, particularly if we see Ukrainians fleeing the country, but also images like yesterday where this is completely brutal for the civil population. This has nothing to do with military targets.
Maria, thank you very much. Maria Tadao out of Brussels. Joe Matthew here in New York. Do not miss Joe on Sound On Bloomberg Radio weekdays at 5 p.m. Eastern. Looking forward to that a little bit later. So much to discuss. Tom, this from the central bank, the Russian central bank. Some people aren't going to get paid here. This line at the moment, issuers have the right to make decisions on the payment of dividends and the making of other payments on securities and transfer them to the accounting system. Okay, wait for this line. However, the payments themselves will not be made by depositories and registrars to foreign clients. That's the situation at the moment for local bonds, Tom.
We look at that within the big and larger Bloomberg world, but John, we also have to look at it over the borders. I was taken that refugees have moved from 500,000. I saw one statistic and guess of 667,000. And the major conduit is to go west of Lviv. I think it's 50 miles to Medyka, Poland. And on the border there, it's a different story than a lot of fancy finance and sanctions.
We're going to turn to Aggie Cantrill, Tom, in Poland on the Ukrainian border a little bit later in this program. Looking forward to that, Lisa. It's a tense time for humanity and for the people of Ukraine in a major way.
And what more can be done? And I go to the question, are sanctions working? Are cutting off Russia from the financial system really working when they're basically leaning into it with exactly what you're saying? They're basically not paying coupon payments on their debt. They are removing themselves from financial order at a time of great uncertainty.
Joining us now, I'm pleased to say, is Aggie Cantrill. Aggie, walk us through what you're seeing on the ground.
Hi, John. So yeah, here on the ground in Medyka, we're still seeing a lot of people crossing over the border. We have seen the waiting times for cars drop significantly as cars are trying to pass over the border. We've seen waiting times drop since the last couple of days, but we're also seeing a lot of people coming over on foot. And it's a priority for the Polish and the Ukrainian side to open up new border crossings to also allow for further people to come through and to make sure that in these elements it's below freezing here so that people can get through safely.
Right now, Aggie, as we look at some of the situation on the ground, as we look at the people streaming over the border, what are people hoping for? Are people realizing that the end game without some more intervention is going to be brutal? And are people basically girding for that?
I think people are. It's quite clear that with the fighting that's intensifying, the targeting of civilian targets, people are starting to really realize that this is something that's going to affect the country in the long term. And that's very clear in what the European Commission is thinking about now, where they're looking at potentially having permanent residencies for the next year for people coming over so that they can enter the European labor market and education, so that people can be able to start a new life, even if it is only a temporary measure. This is something that's going to continue a lot longer than they were originally expecting.
Aggie, there were heartbreaking images on Twitter last night, on social media more broadly, of a lot of people in Ukraine trying to get on the last trains out to try to exit, with children, with their pets, with older individuals. How much has transportation been stymied? Does it continue even to this day?
It's very clear that a lot of people are really trying to get over through with their own passenger cars. That's where the waiting times really are, that a lot of people are sort of taking things into their own hands and are driving to the border themselves. And what they're trying to do is try and mitigate these flows of people to make sure that they're all going to different places. This isn't just a question of people entering Poland. They're also going to Hungary, Slovakia, Romania. And this is a cross-European effort to try and get people out in an easy and quick way.
Aggie, how long does this take? I mean, what is the traipse from Kyiv or any other city in eastern Ukraine to where you are? How long does it actually take?
It's good. It takes. The problem is, Tom, is that at the moment it's difficult to say the amount of time that it would take. Usually this drive wouldn't be that significant, but at the moment, with all the concerns around security for people within Ukraine, this can take days at a time. I spoke to a woman from Cameroon earlier whose brother was in Kharkiv when all of this broke out, and he's still trying to cross the border. He's still on the other side, and she's been waiting for him for days now. And that is the case for a lot of people. It's not such a question of the easy ways to get over the border once they're here. It's also a question of crossing Ukraine itself and the safety for people as they're doing so.
Aggie, on the border. Aggie, thank you. What a heartbreaking story at the moment. Aggie Cantrill of Bloomberg. Your equity market looks like this morning, and good morning to you. Futures are positive 0.6% on the S&P, and the Nasdaq up 0.7%. The move in crude gets everybody's attention. 108.26 on WTI, through 110 earlier this morning on Brent. Right now up by 4 or 5 percentage points. Lisa, this story from the team here at Bloomberg, that yesterday Trafigura, oil trading giant, offered to sell a cargo of a grade of Russian crude at a discount of $18.60 a barrel, less than the international benchmark. The deepest discount ever, no bids. The deepest discount ever, no bids.
that says everything you need to know. Would there have been bids 3 days ago, 4 days ago? Maybe. I mean, we saw those gas imports from Russia and Ukraine actually increase in Europe. Now this has become toxic, and you see it not only from the oil majors, but also refiners, also shippers. To your point, nobody wants to touch it, which raises a question. If sanctions are already de facto imposed, how do you then respond on an official basis?
Joining us now on the commodity story of the moment and what it means for global markets, Eric Friedman, Chief Investment Officer at the US Bank Asset Management. Eric, let's just start with a commodity shock. And can we call it that, a commodity shock?
We can, Jonathan. I think for your reporting, it's it's a lagged impact. And what I mean by that is those day rates you're talking about, whether it's letters of credit, whether it's shippers that are willing or not willing to take on crude stocks right now. These are multi-month contracts. These aren't 1 day or 2 day engagements. So if you look at the impact here, and as we think about this for our portfolios, this could go on for some time. I mean, energy, whether you look at natural gas or oil, it's clearly overbought here, but it can remain overbought for weeks. So that's putting a stress not just on obviously prices at the pump, but also on portfolios. So something we're very dialed into right now.
Eric, help our equity listeners and viewers with how they should interpret the spread compression of the last 48 hours, whether it's a vanilla 210 spread coming down to new flatness, or it's a stunning second derivative of the 10-year real yield. Translate that into ownership of equities.
I think, Tom, if you look at, and if for folks that haven't seen it, look at Lisa's tweet from a couple hours ago or an hour ago.
I didn't pay him.
Flattening, exactly, shameless plug there, Lisa. But that flattening has been significant, and it has been very quick. And that's something that both in terms of real yields as well as spreads, the safety trade, the perceived safety trade has been, let's go to value. Of course, a big component of value, I have to be careful about how much I talk about it because I work for a bank, but has been financials. And that trade really does not work particularly well on a global scale when you have that level of flattening as well as the abruptness at which that flattening has occurred. So we do think from an ownership perspective, you have to be even more selective than just saying, I want to own value. So our viewpoint has been utilities, things like consumer staples that are a little lofty in PE terms, but offer some differentiated cash flows. Those are probably more attractive than just owning outright value in this environment.
Eric, you know, we talk about the flattening yield curve and these technicals, but the broader picture really speaks to this oil shock that we started the conversation on, the fear of stagflation, the fear that all of a sudden this is something that the U.S. economy, and even more so the European economy, cannot withstand and maintain momentum. How much are you rethinking your growth ideas? How much are you rethinking your allocations as you think about this, this shock and what the ramifications could be on a broader economic level?
Lisa, I think the biggest factor that we're focused on right now is just the potential for a deeper growth slowdown in Q2 and in Q3 in particular. We had anticipated more of a garden variety, almost a base effect driven slowdown that could become something deeper than that. And some of that is because of oil, but also, and per your reporting earlier in the last couple of days, has been currencies. And in particular with Europe, you look at the sharp depreciation of the euro versus the dollar. That's an added tax. That's an added headwind. So as we think about that, we've been, again, we took profits earlier in the year on an underweight Europe, overweight U.S. opportunity. And so we're rethinking if that is something we want to revisit. But I would say that the bigger factor for us is just this growth trajectory. Does it get even slower in Q2 or Q3 than we had previously forecasted? And what will the central bank response be? Jay Powell's commentary today will be very key and understanding how they're thinking of that framing right now.
Eric, what happens if Jay Powell does speak, talks about tightening, and it does nothing? What happens if the market confirms this fear that perhaps the Fed has lost control of this narrative as they have little control over geopolitical tensions and over oil prices surging?
I would say, Lisa, if there isn't some optionality maintained by the Fed, if the Fed doesn't take more of a let's wait and see, as in, hey, our intention is to continue to tighten, but to do so, keeping in mind some of these factors like oil, some of these factors like currencies. One of the things we'd be concerned about is if Powell and the Fed really are emboldened by the move higher in crude and natural gas and say, hey, this is further evidence we have to tighten. That to us would symbolize more of a dogmatic approach than we think is appropriate in this environment. So again, I think that's the swing factor we have to pay attention to. Words will really matter in terms of the context and nuance of his messaging today.
Eric, when you sit around with the team, and this is the final question from me, and you have those internal conversations, can anyone that you speak to right now see an off-ramp for the Russian president?
I don't think so, Jonathan. It's something where, where we think we have an edge is on synthesizing data, looking at credit trends, looking at economic momentum. Where we, and really no one has an edge, is what the next move might be out of Russia. I would say that the end game appears to be somewhat ring-fenced in based on the sanctions and based on the concerns evoked from the broader global community. But in terms of the off-ramp, it's hard to imagine that there's going to be a happy ending. I do think that there will be a detente that eventually emerges, but the next couple of weeks in particular, I think it's hard to speak with great confidence about what may happen.
So, Eric, this is so important, though. And I know that you don't have an edge there, but that's a question we've all got to try and answer. Because if you can't answer that right now, you have to assume things get worse, not better. This is something I was speaking to Mohammed Al-Erin about with yesterday. And if you assume things get worse, not better, you'd have to assume there's only one place left for sanctions to go. And if you assume that, Eric, this gets messier, doesn't it?
I think it does, Jonathan. I think that in terms of the broad controllables, if you will, one of the things we're paying very, very close attention to, and this does boil down to us in terms of buy and sell decisions on behalf of clients, that we've been really focusing on real assets. We think that's a place that, even though it may be difficult to step into, that's a spot that could be dislocated for some time. I think that's issue number one. Issue number two is in terms of your equity portfolio, making sure that you're not too overexposed to the growth side that we think will be challenged for some time. We don't think this is a short-term dip. We do think that the embedded factors that we're talking about here will play out in terms of the growth story in particular. So those are two areas that are controllable. But to your point, it's hard to war game out exactly what may happen over the next couple of weeks. But we think being a bit more cautious than being emboldened here is the right approach.
It's almost impossible to work it out. Eric, thank you. Thank you for the transparency, the honesty. Eric Friedman there of US Bank Asset Management. Lisa, it's a major dislocation. The ripples of that we're still trying to figure out.
Especially because we had a lot of analysts come on and say, if you do get ongoing sanctions and even the inclusion of oil and gas, you could see $150 a barrel. You could see $200 a barrel. So how do you game out the economic ramifications globally of that type of increase at a time when inflation is already running at the hottest pace since the early 1980s? It is difficult to get your head around this.
Tom, you can speak to the history of this. This headline just crossing from Ukraine, urging the IMF to ban Russia and Belarus from the fund's meetings.
What a difficult decision. You've got the April meetings, but it's much more than that, John. It's much more about their research capability and their financial expertise, and that's going to be a stunning and difficult decision for Georgiev and all to make. John, while we were talking there to Mr. Friedman, the 2-10 spread breached 34 basis points. I'm watching that core spread, and I'm watching the 10-year real yield separate from all that's going on commodities in Ukraine.
And Lisa, I know you're laser focused on that too.
Basically, it's an idea of pulling growth back and basically talking about not stagflation necessarily, but slugflation, as Doug Cass likes to call it, this idea that rate hikes in the near term will not necessarily allow growth to materially increase over the longer term.
What a tough, difficult time for policymakers. Chairman Powell coming up a little bit later today. Full coverage on TV and radio. Futures up, let's call it 26, up 0.6%. Futures up on the Nasdaq, up 0.8%. Yields higher by 3 basis points on 10s to 175.47. Crude 108.36 on WTI. We're having a look at 110 on Brent. From New York, this is Bloomberg.
This chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high. Prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
Here in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
To recap the headlines.
You do not want to miss this story.
How are you thinking about those dynamics?
We've got a ton to figure out in this market. From New York City this morning, good morning. Futures positive, up 0.75% on the S&P. We bounced back on the Nasdaq, up 0.9%. The moves in the bond market yesterday, though. Let's pause. Switch up the board. 2s, 10s on the US curve, 2s, 10s on the German curve. Yesterday, 10s in America, down almost 10 basis points. Big move, right? Try 20 in Germany. Try almost 30 in the UK. As we really price out the potential for a rate hike at the ECB, Tom, your 10-year yield up 5 basis points this morning, bouncing back, but back to negative 70 rather on a 2-year, not a 10.
John, explain the United Kingdom move. That stunned me to see a 30 basis point, 0.3 of a percentage point move. Why did that happen?
Huge dislocation, a market completely caught off guard, Tom. Wrong-sided move, all of the above. Price out rate hikes of the ECB, the Bank of England, the Federal Reserve. That was the move yesterday, Tom. I have no idea if that will be the story in the next several months.
Yeah, fair.
Because, Lisa, you've got to assume that given the inflation data we're going to see in the next few months, things will get uncomfortable for these central banks.
Well, that's the reason why when you were focusing earlier on the front end, the idea of 2-year yields, that's really where to look. Longer term, this feeds into the whole stagflation type of discussion that we're having about Europe, and it's understandable that they think they're going to have to drop it back down. On the front end, it's a lot less certain. 2s
right now in America, 140. Remember last week on Friday, the high of the session north of 160. 175 on 10s. We were at 2% last Friday. So we've seen some major moves here across the curve in America and beyond in Europe and elsewhere. Switch at the board and get to crude. That's your main story, your headline, isn't it? Through 110, through 111, through 112, through 113 briefly on Brent. 110.47 right now at more than 5%. And Lisa, you and I have gone back and forth on this. This market isn't facing sanctions right now, but it's facing sanctions right now because so many people are pulling back.
No one's going to touch this. I mean, you've got the financial channels that are all question marked, but also you've got the social pressure to every company out there, whether it's a refiner, whether it's a shipper or an oil major. Why are you doing business with a nation that's invading Ukraine?
And seemingly Exxon, BP, Shell have made that decision to make a move. Brent, Tom, 110.36, WTI 108.37.
I want to mention ruble as well, up to 122 for a cup of coffee, coming back down, but still significantly elevated over the last 24 hours. 112 rounded up on a Russian ruble as we speak against the dollar. And now on our politics, and particularly the path forward for very much his Democratic Party. Howard Dean is with us. He is a former presidential candidate. Dr. Dean is chair of the Democratic National Committee and has skied every black diamond at Killington, Vermont. We welcome him this morning.
Great introduction.
Yeah, well, I want to go away from the normal political talk, Howard, and I want to ask you a difficult question. You and I grew up with John Stennis. We grew up with Democratic Southern senators. We're in a war. We have a wartime president. How does the Democratic Party get the military back?
I'm not worried. I think we have the military back. I think the vast majority of military people do not believe we should live in a fascist society. And I think the leadership of the military is doing a great job. I thought they did a great job resisting Trump's craziness. So I'm not the least bit worried about the military. I'm worried about the people who are driving around in trucks and clogging up the works and talking about neo-Nazi ideology on the floor of Congress.
How does the Democratic Party, and particularly newer candidates coming on in the quarters, maybe in the coming years, how do they fight off these autocratic tendencies? How do the Democrats coalesce around a middle message?
Well, that's the key question. Look, I think they re-message. I thought Biden, whatever you happen to think about this particular issue, I thought one of the great lines in Biden's speech last night was, we don't want to defund the police. We want to fund the police. And what he means by that is we do need police reform. Absolutely. But Eric Adams is mayor today in New York City because most of the people in the community that voted for him most enthusiastically, which is particularly Black immigrants, do not want to defund the police. So I think Biden hit all the high notes yesterday. We were joking around before the program. I think people have low expectations. I thought it was one of the best State of the Union addresses that I've seen in the last 20 years.
Howard, he hit all the...
Go ahead.
Excuse me. I apologize for interrupting. You were saying he hit all the high points, and he did, of the Democratic Party and what he wants to sort of push forward in his agenda. But right now, there is one conversation that is dominating American families, and it is inflation. It is what they spend when they go to the store. It is only exacerbated by the Russian invasion of Ukraine with gas prices. And yet the message has been, keep going with some of these plans, and eventually it'll work its way out. Do you think that the Democratic Party needs to go further with respect to supporting national domestic oil producers and refiners to try to give them more support to increase the domestic production to isolate Russia?
No, the problem is not domestic production. We actually, as you well know, in this country produce more oil than we use. The problem is it gets sent all over in the world market. We're probably going to have to figure out a way to keep that here. Look, we've been practicing modern monetary theory, whether you like it or not, for the last 15 years. The Republicans, who probably don't know what modern monetary theory is, have been practicing it big time. Run the deficit up as high as you possibly like. Well, when you do that, and what modern monetary theory says is that inflation is the problem, and that is what we're hitting now. We're going to have to raise interest rates, and there's no nice way to say this. But the oil market, this is all short-term stuff. And I think trying to tackle the oil market and bring oil prices down by doing anything other than removing oil from the reserves and putting that in the market is silly. Well, but we're not going to drill our way out of this.
And that seems to be one line that the party seems to be taking. You have other members of the Democratic Party, including Joe Manchin of West Virginia, coming out and saying, actually, this was the way that we need to go. I'm just wondering if there are other concrete steps to take so that some of these shocks, because the price increase that we've seen in oil has been a shock. The price increase that we've seen in wheat is increasingly becoming a shock. These are major issues for the global economy. At what point do you have to say we have to take an immediate reaction to this?
We are taking an immediate reaction. Look, there is a war going on, and the war is being conducted by one of the biggest oil powers in the world against one of the biggest grain producers in the world. What do you expect? The solution to this is the deal with Putin. And I think Biden's doing a great job doing that.
Governor Dean, the junior senator from Vermont is 80. He will enjoy his 81st birthday here in September. The Democrats are about to lose this, that, and something else in Washington. I'll let you and the experts decide what it is. How far has Senator Sanders and the liberals overreached?
Look, I think the biggest problem with the so-called left is not that they're wrong. It's that they can't get their messaging straight. And one of the interesting things is this debate over Medicare for all. We should have Medicare for all, but we should have Medicare for all who want it. This is the most libertarian country in the face of the earth. And that includes left, right, or center. People don't like to be told what to do. They like to be given their own choices. So we often do the right thing. We need a system of universal health care that works, as our healthcare system is absolutely broken in terms of its in terms of the way that we spend money and who has to pay for that and suffer as a result. But the fact is, you cannot message a package that alienates a significant portion of American people. And that's our problem. Our problem is not what we don't know what to do. Our problem is we insist, or at least on the left side, which I count myself on many issues. We insist on messaging it in such a way that we hit people over the head with it. And that conveys the message that we're smarter than you are. And that's one of the reasons that people like Trump, who are completely unqualified to be anything, manage to win, because we alienate people we can't alienate. We can't alienate ordinary Americans. We have to stop doing that.
Well, Howard Dean, don't you need a refresh of the senators then? Because there's a lot of senators that speak that way. Wouldn't you agree?
I'm for term limits. I'm for term limits in the United States Senate. I think it's worked well in the presidency, and I think we ought to limit terms to at maximum 6-year terms in the Senate. We ought to limit terms in the House. Look, the political institutions in a democracy are always far behind where the public is. That's the nature of democracy, is that the public runs the place. But there's no organized way for them to do that other than through the political process. When you have a party that doesn't give a damn what happens to the country as long as they are in power and is willing to cheat on the voting and refuse to confirm the president's most basic appointments, that is a democracy that doesn't work. And the way to do that is to limit people's terms so there's no more incentive to do all this gerrymandering and all this crazy stuff, so that the democracy works again. And I've thrown up my hands. I think we need term limits in the worst way, including term limits on the Supreme Court, which is now nothing but a bunch of partisan hacks, as 3 of them themselves have admitted.
Howard, would you have said that if there was a majority for people with more of your views?
I would have said that if you get a Senate that's completely out of touch with where the rest of America is, and when you're having people who are 90 years old running for re-election in Iowa, which is just ridiculous.
We had an 80-year-old Speaker of the House last night, didn't we?
Yes, we did. And I stick to my guns. Term limits are good for everybody, both Democrats and Republicans, and we need them.
Howard Dean, thank you, sir. Good to catch up.
Thank you.
Tons of market action to catch up with as well. Futures up by 0.75% on the S&P. Brent, Tom, 110.65.
It's fascinating, John. I'm looking at the zeitgeist out on Twitter, and it has changed in 48 hours. I mean, the lack of communication coming out of these war zone areas, and that folds into the market, where, would you agree, John, it's almost a flighty market today. It's moving in a very different way than the normal kind of market that we would see.
I just think maximum confusion.
Yeah.
And no real idea how we resolve some of these situations. What's the solution, Lisa? We saw a 20, 30 basis point move on gilts yesterday. Today, another 15 basis point move on BTPs. The Italian 10-year yield is up by 15 this time. It's hard to keep up.
How many people have come on this show and said the sky's the limit for oil prices, or at least proverbially, if we do get some sort of inclusion in the sanctions? Well, in a de facto way, as we've been talking about, we have. So how do people game out that type of oil shock into an economy that's still trying to recover from the pandemic?
That word is the right one. A shock, a commodity shock again. And it's the second one, Lisa.
I know.
In what, a year, 18 months?
Yeah, and there was another oil shock. Remember when it was negative, when futures were negative?
When was that, 2 years ago?
Yeah, 2 years ago. I mean, it's just amazing how whipsawed it's been.
My brain over the last 2 years, I don't know about yours, but it feels like 5, maybe even a decade, I don't know. Crude, WTI, 108.73, up by more than 5%. From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the First Word, I'm Rosika Gupta. Western military officials warn that Russia's invasion of Ukraine is entering a new phase. They say it will be a more deadly time for the country's civilians and its army. Early signs are that Russian commanders are abandoning the approach of lightning strikes into cities. Meanwhile, Russia says it has captured the port of Kherson on the Black Sea. Ukraine's government didn't confirm that, but had said that Russian forces were advancing in on the city. And some blunt words from the chairman of Fortescue Metals. Andrew Forrest told Bloomberg that CEOs with operations in Russia need to pull out now.
I would say to all my fellow chief executives and chairmen around the world and major shareholders, if you're making $1 from Russia right now, I'd call it blood money.
Forrest said that the rest of the world needs to stop what he calls the breach of mortality. In his State of the Union address, President Biden vowed to confront Russia over the invasion of Ukraine. He warned Vladimir Putin that the war would leave his country weaker and more isolated. The president also said that his top priority would be to fight rising prices. And the world's airlines expect to see passenger numbers exceed pre-pandemic levels by 2024. That's according to the International Air Transport Association. The trade group says that air travel in North America is likely to reach full recovery by next year. And it's a new approach for American movie theaters. AMC Entertainment will charge patrons more to see the new Batman film than for other movies scheduled at that time. For example, an AMC theater in Los Angeles is charging $19.99 for a Thursday night showing of Batman, while tickets for other films are $1.50 cheaper. Global news 24 hours a day, on air and on Bloomberg Quick Take. I'm Ritika Gupta. This is Bloomberg.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management. We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
What do you think is the impact of the Prime Minister on the market?
As Mr. Suzuki, who is the Financial Services Minister, he mentioned at his own press conference, and share buybacks is widely used to return profits to shareholders and improve ROE. And how to share out the profits from growth is, totally the decision of the management of each company after carefully taking, all the stakeholders into consideration. And I believe Mr. Kishida has a quite cautious stance on the uniform regulation of share buybacks. And I think because he is giving a consideration to each company's, individual circumstance and decisions.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
As a company grows, there are more challenges. What do you worry about the most?
The market opportunity for us is enormous, and so our challenge is to continue innovating, driving, and pushing ourselves every single day to go after the most attractive profit pools in this incredible global beauty and wellness market.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology.
This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Tonight, I can announce the United States has worked with 30 other countries to release 60 million barrels of oil from reserves around the world. These steps will help blunt gas prices here at home but I know news about what's happening can seem alarming to all Americans. But I want you to know we're going to be okay.
The President of the United States, if only we had a live price of crude. As he was saying those words, crude yesterday up 4%, crude today up 6%, Brent at 111, WTI close to 110. This was the story from the team here at Bloomberg on Trafigura, oil trading giant, offered to sell a cargo of the Russian grader crude, $18.60 below benchmark prices. Steepest, deepest discount ever. Still drew no bids. That's the story at the moment, Lisa. This headline dropping from Shell as well. I'll bring you the story from our team led by Laura Hurst. Shell is continuing to purchase oil and gas from Russia in the wake of the country's invasion of Ukraine. That's according to a person briefed on the matter. But Lisa, the fact you have to write that story, do that reporting, tells you everything you need to know right now. We're unsure just how much crude supply out of Russia, gas supply out of Russia, commodity supplies out of Russia will be disrupted by what we're seeing play out.
Yeah, and the natural path of the trajectory here is to cut their ties with Russia. I will say, though, the story goes on to say that the company is in discussion with governments and will comply with any changes in regulations. So at what point do you get some sort of formalization of the de facto sanctions that we're seeing put into place?
And that, Lisa, is why people are worried. Tom, will you comply with changes in regulation? Yes. But if you enter a deal to take Russian crude now and then somebody announces something further down the road, you're caught with some sanctioned Russian crude.
And what are you going to do with it? Where are you going to move it? Are you going to move it across the Black Sea right now with Mr. Erdogan holding up the Bosphorus? These are complex things. There's no other way to put it. I'm looking at a gallon of gas in the United States. I don't have a quote on March 1. I don't have a quote on March 2, but I'm at 362, gallon up 70-some% since the election of, 18 months ago, whatever it is. Right now on oil, and she is truly expert on Saudi Arabia, Ellen Wald joins us, senior fellow, Atlantic Council. Ellen, you talk in your book about Saudi as masters of their own commodity. Really quite a statement. How will they respond to Vladimir Putin?
Yeah, this is the big question for OPEC today as they get ready to meet. What exactly are they planning to do with oil prices up near $110 a barrel? This is a very different situation that we're seeing this month from last month, and yet it seems as though they are just continuing with their current assessment of the market, which is that the market isn't all that undersupplied, and that the geopolitical situation is what is pushing prices up. And so it seems unlikely that they're going to alter their strategy, at least for the coming month.
Who is the they of Riyadh? Is it a team of oil experts advising the Crown Prince or the King? Is this run directly off the Crown Prince's desk? I don't understand when a pro like you says they. Who is the they of Riyadh?
So I would say it's definitely the oil ministry, which is run right now, though, by the Crown Prince's half-brother, Abdulaziz bin Salman, and he's really quite knowledgeable about the oil market and has been doing this for practically his entire life. But at the same time, it's definitely a close coordination, and we did see a phone call between MBS and the president of France, where he basically reiterated the same line that Saudi.
I think we lost the line there with Ellen Wald there of Atlantic Council. I mean, I can't hear her. Maybe Lisa can hear her. Maybe Tom can, but I can't.
I hear her out in the ether. No,
we can talk about what's happening in the oil market, though, Lisa. The disruption we're seeing, perhaps unintended consequences of what was announced last weekend. But that's the shock we're facing at the moment. And if you remember the Goldman note from earlier this week, when Jeff Kerry and the team came out after the weekend and said 1 month price target now 115, what's 95? And do you remember that line in the research, a couple of paragraphs down, that the only stabilizing mechanism left for the crude market was demand destruction? Now, Mohamed Al-Erin talked about this yesterday. If we've lost policy flexibility at central banks, is that a good thing? Can you really take comfort in the idea of reducing highly complex issues just down to a question as whether the Fed will hike or not, and take comfort from the idea that they'll hike fewer times this year than you expected? Losing policy flexibility in an environment like this one, Lisa, is not a good thing.
especially because people are so unused to it. And we see the incredible volatility as people deal with this uncertainty, not only on the economic front, but on the idea that all of a sudden the Fed put, the ECB put, doesn't work anymore because it doesn't necessarily affect these inputs. I mean, if you have a situation where you get crude to a level where people stop buying it as much, they start restricting their activity, what does the Fed do with that? You've got a weakening economy.
They can't ease. They can't ease, that's
exactly.
for sure. And that's what we face in Europe, Tom. A situation where growth could decelerate, inflation could pick up, and an ECB stuck between a rock and a hard place.
I think we get back to first principle economics. I mean, we'll hear that from Lawrence Summers and David Folkers-Landau later this morning, John. It's real simple. You get normal microeconomics, income and substitution effects, except there's nothing to substitute to, and that's wrapped in Russia around a dearth of currency, much like you saw with Deutsche Mark a zillion years ago. These are going to be normal, basic sanction and war events, and they lead, just as you've talked about, John, to a supply-demand dynamics that aren't normal.
So there's a big currency story here too, and we'll catch up with David Folkers-Landau of Deutsche Bank. Tom, I know you're excited about that in about 90 minutes' time. Deutsche Bank this morning writing the following on this negative correlation between crude higher and the euro weaker. Listen to this. Euro-dollar depreciation on the back of Ukraine's crisis is now starting to inflict damage on the eurozone. The ECB needs to start thinking about ways to stop this. The more oil and natural gas push higher, the more the euro drops. Lisa, it ends with this line: a vicious inflationary spiral. The call from Deutsche Bank, essentially, this ECB needs to do something about this euro heading down towards 110.
And this is the new idea in currency markets. For so many years, we were talking about the race to the bottom, currency wars, to try to depreciate in order to get some sort of competitive advantage. And now it's the opposite. Now you have regions, particularly Europe, saying, wow, the more that the euro declines, the more inflation will be importing from elsewhere, especially as we try to get away from Russia and move to the U.S. for crude, for wheat, for other resources that some of these regions supplied.
Euro-dollar 110.92, and just getting a headline, Tom, from the Ukrainian president's office. Here's the line for you, TK. Russia talks may happen today. They may happen today, according to the Ukrainian president's office this morning.
They will, and I would emphasize, as I said before, John, that we're in somewhat of a news video gossip blackout from Ukraine. I'm not sure we really know what's going on in the major cities, and particularly down by the Black Sea. There's just a huge dearth of information there. John, on the intervention story, it's real simple. I've got a fancy Bloomberg chart up here that would make Folkers-Landau smile. And this is not the DFL moment of 85 cents of 12 years ago. Maybe it's a 105, a 106 is where you get into euro tension.
We'll catch up with Deutsche Bank a little bit later this morning. That headline from the Ukrainian president's office: Russia talks may happen today. Futures up 0.7% on the S&P from New York on TV and radio. This is Bloomberg.
En nuestro estudio, en nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes, según las modificaciones nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
How difficult was it to go to investors and say, invest, give money, put money into a travel tech company within this environment?
It wasn't that difficult because TravelPerk is doing much better than the rest of the industry. In fact, we are at the moment growing at 4 times revenue of pre-COVID numbers.
The contagion channels for Russia now are heightened global uncertainty and commodities.
This could just exacerbate inflation, exacerbate supply chain woes.
The inflation here is broad-based and becoming sticky.
I think we're all trying to figure out what's going on now.
This looks like this is going to be a rupture that lasts for years.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Big moves in this market from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance live on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Futures up 0.6% this morning. TK, the move in crude through 110 on Brent.
Moving crude and now moving ever higher. Really in the last hour and a half, John, a move from a 109 level. We're going to get up through 112. High for the morning, 113.
The headline from the Ukrainian president's office just moments ago, Tom. The Russia talks may happen today. The objectives of those talks, Tom, something we have to revisit every single time we see those headlines.
We'll have to see within the courage of what we're seeing from Ukraine, and again, the dearth of information on Kharkiv, on Kiev, on Mariupol, and down to Odessa as well. I think we're flying blind here, John. We're flying blinder than we were 3 days ago.
And Chairman Powell also flying blind, arguably, Lisa. How does he control this one? Payrolls on Friday, ADP later today, a CPI print on March 10th, could have an 8 handle. He speaks today. They meet on March 16th. What on earth are they going to do this year?
Yeah, forget have they lost control over the narrative. Have they lost control over the inflationary pressures in the economy? And if they have, what's the ramification for an economy that's been hinged on every Fed Chair Powell word for the past couple of years? How do we then dovetail into a new regime?
Futures this morning up 0.6%. Good morning to you all. Let's whip through it. Your Nasdaq up by 0.7%. The bond market, what a move yesterday. Yields down hard in the US, harder in Germany, and much harder in the UK. We reversed some of that move today, up 3 basis points to 175.47. WTI very close to 110, 109.60, up by 6 percentage points. And euro dollar, Lisa, a break of 111 to the downside.
There's a similarity between central banks in developed markets, the Fed, the ECB, and OPEC+. We've had these cabals controlling or at least helping markets into certain directions at their will. And now there is an issue of have markets gotten away from those definite crews and actually end up dictating themselves based on supply and demand. OPEC Plus is meeting today to discuss April production plans. Right now, actually, they are beginning that meeting. ExxonMobil Investor Day at 9 a.m., EIA crude oil inventory report at 10:30 a.m. How do they deal with exactly what you're talking about, John? 6% overnight increase in WTI to the highest levels, in some cases going back to 2011 at one point overnight. How do we then go to either faster production? Do you talk about that? We don't have official sanctions. Do you count this as just a temporary shock? And then you have, of course, the pandemic, which is moving to an endemic phase with people wanting to go out and actually spend and travel. 9 a.m. EU finance ministers are holding an emergency meeting by video conference. How much is it going to be dominated by how to deal with the ramifications of some of the sanctions so far? It's not just oil. It's not just crude. Natural gas in Europe has gone vertical. It is just shocking to see some of the moves, 60% overnight. You've seen prices more than double in just a couple of sessions. How do they deal with this at a time where it's not clear where they can get other gas supplies other than Russia and Ukraine? And at 10 a.m., Fed Chair Jay Powell delivers that semi-annual testimony before the House Financial Services Committee. People have been pulling back their expectations for rate hikes. You can see that in the 2-year, which has come down dramatically, 1.4% right now in the U.S. You can see this in the rate hike expectations for the year, which have gone from 7 to fewer than 5 this year over just a couple of trading sessions. How does he look at all of this and give a sense of how he thinks Fed policy actually engages with an inflation well beyond the scope of what the Fed can address, John?
Lisa, thank you. Thank you very much. A big story just crossed in the Bloomberg, Tom. Let's sit on this one just for a second. The Ford Motor Company will split its fast-growing electric vehicles operations from its legacy combustion engine business.
Normal corporate news.
Historic reorganization. Tom, I think the story of crude this morning speaks to that effort as well. 110.
And also an affordable electric car. What I hear from so many people is GM and Ford go gung-ho on this, and others, John, enter away from Tesla. I'm going to call them first on the block, is, okay, we got to do this, but we got to make it accessible for the American public, and maybe this gets them more focused.
Ford up in the pre-market by almost 4%. We'll touch on that one a little bit more a little bit later. A story for the president as well. The president of the United States last night addressing the nation.
He badly miscalculated. He thought he could roll into Ukraine and the world would roll over. Tonight, I'm announcing that we will join our allies in closing off American airspace to all Russian flights. A Russian dictator invading a foreign country has cost around the world. And I'm taking robust action to make sure the pain of our sanctions is targeted at the Russian economy.
Team coverage starts right now with Joe Matthew of Bloomberg in New York, Maria Tadeo in Brussels. Joe, the latest sanctions from over the weekend are already starting to bite. Is there more still to come?
That's a great question. It has a lot to do with what happens in Congress. There has been talk of a renewed effort to try to get some legislation to codify existing or maybe add to the sanctions that the Treasury Department has been handling all on its own. And after last night's address, if you watch that speech, the better part of an hour, actually almost an hour to the minute, the first 10 to 15 minutes, the president talking about Russia, Ukraine, both sides of the room up, an uproarious standing ovation as he called Vladimir Putin a dictator and spoke to some of the sanctions already in place. That is giving us the thought there might be a renewed effort here. Maybe they get back to the drawing board in the Senate Foreign Relations Committee. The problem was they could never agree on timing for sanctions, but now that an invasion has begun, that really shouldn't be an issue anymore.
Joe, the issue is also you have sanctions, but then you have to put sanctions in place and make them tough and make them work. Is there any indication that's going to occur?
Well, I guess, look, I think we can only take the administration at its word, and it's fascinating to see as the government does this self-sanctioning by corporate America. We're talking about Apple, Nike, Exxon, some of which are apparently have been in touch with the Biden administration. They're helping to lead this on a corporate level as well as a government level.
Maria Tadeo, how is Europe facing off with natural gas prices that have been surging to such a degree and dealing with the fact that there is a hardened feeling that they need to do something to stop Putin?
Well, there is, and we're going to find out today. That's a reality. We have European finance ministers speaking in this meeting here, and they will have to come up with a plan. So far, what we hear, but again, you have to factor that a lot of this is for the domestic audience. You don't want to have people in panic trying to buy fuel, but what they say is that we can deal with this. This is the end of the winter. The worst is over, and then we can think about how we want to go from here. Of course, you also have the renewable spin, but the reality is we've seen it this winter. Renewable energy, clean energy won't do the job. It's not advanced enough. The other thing that I would point to, of course, is that there will be a very real debate today among finance ministers in terms of where do we go next. And that takes us to the energy conversation. We've seen that that continues to be a big money-making for Russia. There will be a conversation about what do we do next if we see that Russia is able to weather this. And of course, we continue to see pictures from Ukraine where it's now people, where it's houses, it's offices, nothing to do with military targets that continue to get shelled every day.
Maria, there has been a lot of discussion here and elsewhere about how a lot of companies are self-sanctioning, that there's a de facto sanction in place on Russian oil in many places of the world. Does that give the U.S. and, frankly, European allies more freedom to go ahead with sanctions in name as a result of the moves that have already gotten ahead of them in markets?
Well, it depends, and I'm just going to give you one company, Total, yesterday. It was a very muted reaction to what we're seeing in Russia, and then the French finance minister, Bruno Le Maire, came out and said, you guys should think twice about your investments. So there is still pressure from the political side onto the companies. So yeah, a lot of these companies don't want to get involved, or they say they don't want to do future business with Russia because they have very little visibility in terms of where we go from next. But in terms of the contracts that are still happening, for many, it does continue to be in some ways business as usual.
Maria, thank you. Maria Tadao out of Brussels. Joe Matthew here in New York City. Just getting a headline from Prime Minister Boris Johnson in the UK, speaking to Parliament at the moment. There is more to be done on Russia's sanctions, Tom. There's a big feeling, a conclusion for many people. This is not over yet.
And it's off Dan Tannenbaum, and Joe Matthew just addressed this as well, John. I think this is absolutely critical. Just mouthing sanctions doesn't work. There's a lot of evidence of that, and I'm going to be fascinated in the coming days to see the follow-through. And very clearly, John, we'll see that follow-through in price. I'm going to go back to Chicago wheat. John, I don't know if you're aware, but there's a wheat price in Chicago as well.
I've been following it. 2008 high, Tom.
You think? I follow
I'm on top
wheat,
of it too.
I follow wheat off the London Metals Exchange. And John, what I would say is wheat, with the explosion yesterday and the first trade today, shows those linkages in. Will the sanctions work?
The Prime Minister Boris Johnson, Lisa, saying we'll publish a list of people associated with the Russian president. John Ehrlichman put together this list, and I think it's important for everyone to hear just how much we've already seen from corporate America isolating Russia. Apple product sales, Nike online sales, Dow product sales, FedEx, UPS shipments, releases from Hollywood, Disney, Warner, GM shipments, Harley-Davidson shipments, Boeing pilot training. That's important, Lisa, for obvious reasons. Visa network access, MasterCard network access. All of this is building day by day, hour by hour.
Which is the reason why I wonder how much freedom this actually gives to governments in the U.S., in Europe, to actually make the move in name if markets and, frankly, if companies are doing it already and getting ahead of them and basically creating a pathway for them to do it without that much more disruption.
So there's a huge ESG question here, which I think we'll explore more in the coming weeks and months, Tom. You and I are on the same page about ESG. Some of the hypocrisy around that conversation never ceases to amaze me. But clearly, there are many companies who believe they have a moral obligation to step back from doing business with Russia, even if the sanctions don't require them to do so.
John, I look at them as discrete discussions. There's going to be a big ESG debate. I totally take the point. Major shout out to Bank of America, who's done leadership on that. But John, this is a war. We got to remember this. This is a war, and we're in an information vacuum right now. Let's see where we are 3 days from now on the war before we talk about oil and ESG.
Well, you've got oil companies making multi-decade decisions.
Yeah.
Exxon, BP, Shell, leaving Russia behind. Futures up 0.7% from New York. This is Bloomberg.
Keeping you up to date with news from around the world with the First Word, I'm Ritika Gupta. President Biden vowed to confront Russia over the invasion of Ukraine and warned Vladimir Putin that the war would leave his country weaker and more isolated. In his State of the Union address, the president tried to show U.S. solidarity with Ukraine by inviting Congress to stand in support for the country. Democrats and Republicans and Ukraine's ambassadors stood and cheered in a rare show of unity after a year of bitter divisions. The president spent less than 10 minutes discussing Ukraine before turning to the economic hardships of the pandemic. He pledged that his top priority would be to confront rising prices, and in an unexpected move, the president urged people who have been working from home to return to their offices. Meanwhile, Russia says its forces have captured a port city on the Black Sea, Kherson. The Ukrainian government hasn't confirmed that, but said overnight that Russians were moving towards the city. Oil has extended its relentless rally. Prices went over that $100 a barrel in London and New York. Investors will be watching OPEC Plus for a response when the cartel and its allies meet today to discuss April supply. The Iran nuclear talks have narrowly avoided a collapse, but European and U.S. officials warn that time is running out. Diplomats trying to salvage a landmark deal remain stuck over key disagreements. Iran demands that IAEA monitors and ends their investigation into its past atomic activities, but Western diplomats have rejected that. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Is this going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project. Initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the Angstrom era when We're going to 2 nanometers and below into the angstrom era, so it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Russia invades Ukraine.
We have proven our strength.
The nature of this war changed yesterday.
Turn to Bloomberg for up-to-the-minute reporting from around the world.
Ground troops are closing in on the Ukrainian capital.
Swiss abandon neutrality.
And analysis of what it all means to you.
Energy is on the table.
We could see oil prices moving closer to 120.
There is a lot of interest to offload Russian assets.
Look to see more companies announce their exits from Russia.
Keep it tuned to Bloomberg Television and Radio.
Inflation is robbing them of gains they thought otherwise they would be able to feel. I get it. That's why my top priority is getting prices under control. One way to fight inflation is to drive down wages and make Americans poorer. I think I have a better idea to fight inflation. Lower your costs, not your wages.
The President of the United States in an address to the American public last night from New York City this morning. Good morning. Futures bouncing back 0.8% on the S&P, on the Nasdaq 100 up 120, up 0.9%. Big rebound in yields as well. I say big, but relative to the move low we saw yesterday, it's nothing, is it? No. 10-year yields up 4 basis points on 10s right now, 176.50. And if you're just waking up, we had a bit of a rally in crude, I think it's fair to say. On Brent, 110.73. On WTI, Tom, close to 109.
Yeah, the market's moving, and the thing I'd point out right now is ruble on a tear, 109 to 112. Not out to weakness for the day, but that's the one statistic, John, that sits out to me right now. And what do you think of John 210 spread down to 35 beeps with a 34? We had a touch of a 33 basis point for a bit. I mean, the curve flattening is tangible.
I wonder if Chairman Powell builds out the front end again after we hear from him today.
Yep.
And when we hear from the Fed next week, 2 weeks away.
Yep, there's no question about it. 2-year up 7 basis points right now. You wonder where that will be after the chairman's comments. Alberto Gallo, and John, what a joy to have Alberto Gallo in the studios with us, a real symbol of the end of the pandemic. A gentleman of Europe, his public service to Italy and the Navy, and a guy who knows it's price up and yield down. John?
Our friend Alberto back. I didn't even know he was here in New York until I saw him in the commercial break. Alberto, good to see you. Let's just start with the massive dislocation we've seen in this European credit market recently. The extent of destruction you've seen in the market, Alberto, and where you've been taking opportunities, where you've been taking some purchases in.
This is a bear market. It's a high vol environment. We want to be preserving capital, and we want to be in companies that have government support or shareholder support. Now, the good thing is there are regions of the world which are in defense mode, towards state capitalism. Europe has supported companies during COVID and will continue to do so during the next months. So, there are names that in the travel sector, in the industrial sector that go down, but then they have sovereign support. And those are big opportunities, and they yield a lot more than inflation. Think about also the banks. So we are buying in these sectors. We were very cautious at the beginning of the year, and we're buying slowly. The weak spot continues to be emerging markets. And when people see the Fed, doing less, I think that's wrong. The Fed will continue to tackle inflation. That will continue to hurt emerging markets together with political and geopolitical risk.
Alberto, just to pick up on what you were talking about on where you're buying, do you do that throughout the whole of Europe? Is there a bias towards a particular part of Europe? How do you think about that?
We are doing it across. However, there are countries in the world that are more vulnerable to high commodity prices and high energy. So, Southern Europe is more vulnerable, but outside of the Western European countries, you've got Turkey, you've got Egypt. There's a lot of countries that are more vulnerable. And in emerging markets, you could say that there's still a minefield. There's still a lot of countries that are going to be affected by the combination of high energy prices and higher interest rates in the US and a stronger dollar. So we're very, very cautious there. And we are using limited dry powder at this stage. We expect a little bit more volatility later in the year.
Alberto, you were saying that the Fed is still going to hike rates as much as perhaps people had previously thought because inflation is still very much an issue. Is it the same story for the ECB?
ECB is likely to step back, perhaps only do one hike this year. They clearly have a closer issue, but also inflation in Europe is a lot more driven by energy. So half of the 5% inflation in Europe comes from energy. In the US, it's around 1/3 of the 7.5% CPI year on year that comes from energy, at least so far. So European inflation can still be, deemed more transitory. But in the US, there's rents, there is services and wages. So it's a kind of a different problem here.
Does that make you, in general, more bullish, ironically, on European corporate debt, on European rates, simply because you have that ECB benchmark at a time when the Fed is going in the opposite direction? That's exactly right. We're in the context of a bear market for bonds. The place to hide, the least bad place to hide is still Europe. And within that, in the credit market, you can still find companies and sectors that have sovereign support. So you get a less hawkish ECB, and then you get some sovereign support, for example, to French companies or to UK companies. So there are some places to hide in Europe. Where you want to be cautious the most is still in EM, in my opinion, because you have compounded effect of higher commodity prices, which is bad for some EM countries, and then you have a stronger dollar and higher Fed rates.
Alberto, you mentioned the Federal Reserve. You think they still hike. Most people assume that's the case. Where there are doubts about how far they can actually push it. The ECB, is it even part of the conversation for 22 anymore, as far as you're concerned?
It's possible to do one hike in 2022. It really depends on how long this lasts. European countries have around 5 months of gas supply, of gas reserves. So, if the conflict in Russia, Ukraine is a matter of weeks, then, we could still see, positive growth and more fiscal spending. Think about Germany upping the defense spending. So it will become a reflationary environment, which is positive, and the ECB will have to hike. If it lasts months instead of weeks, if the war is not over by the summer, then we're really looking at much lower growth in Europe.
Then we've got a big problem. Gas right now up by more than 30% in Europe. Alberto, it's great to see you. Good to catch up, buddy. Hopefully next time under different circumstances to have a more broader conversation about this market and hopefully with a better outlook for this economy too, Lisa. These headlines coming from Boris Johnson happening right now in the House of Commons. The British Prime Minister saying there's more to be done on Russia sanctions. Goes on to say, Tom, Putin's actions in Ukraine constitute war crimes. Yeah. This is something the Ukrainian president himself is trying to communicate as well, and now we're hearing that echo reverberate around Europe. Boris Johnson, Putin's actions in Ukraine constitute war crimes.
And John, that, I think Americans are really removed from this phrase. I mean, the idea here is, John, is The Hague, right? I mean, there's a whole process to this.
You take the president of Russia to The Hague? I mean, Tom,
yeah.
How far down the road is that conversation? Yeah. We need to get through what's playing out right in front of us.
Another headline, John, as we look at sanctions, and I just think this is absolutely critical. The wonderful Japanese airline ANA to suspend all flights to Europe. Why is that? To get to Stockholm, to get to Milan, to get to Istanbul, you have to fly north and over Russia to get there. You don't go straight east-west. You got to go across Russia. They can't.
Russia, Lisa, increasingly isolated.
And basically saying that they're sticking to their guns, at least Vladimir Putin. And here's the question. At what point do the rank and file and the oligarchs start to say enough is enough?
Coming up, Emily Rowland, the co-chief investment strategist at John Hancock. Looking forward to that chat. With equity futures up 26, up 0.6%, and crude approaching 110 on WTI at 109 and 6 cents. From New York, this is Bloomberg.
U.S. has announced it's moving 8,500 more troops to Eastern Europe. If they're not being deployed to Ukraine specifically, why is that so important, and does that risk further provoking Russia?
Well, there's two things going on. So what the United States recently announced is that we are going to put 8,500 troops that are part of the NATO response force on high alert. That means they'll be ready to deploy on a moment's notice should we need those forces anywhere in Europe to protect NATO territory. In addition, the United States is also looking at possible additional moves that they might make to move U.S. force posture into Central and Eastern Europe. The reason we're looking at that is because a lot of the members in that neighborhood in Central and Eastern Europe feel concerned. And so we are looking at what measures we might take in the name of reassurance and deterrence.
Year to date on the S&P 500 down almost 10 percentage points. Coming into Wednesday on the Nasdaq down 14. Here's the bounce, a small one, up 0.6% on the S&P. On the Nasdaq right now, up 0.6% also. The moves in the bond market, that's where the story's been. The headlines as well. Look at the bond market right now. 2s10s in Germany, 2s10s in the US as well. The moves yesterday down 10 basis points almost on 10-year Treasury yields. On a 10-year bund down 20. We reversed some of that, up 4 right now on a 10-year in America, up on a 10-year in Germany by 7. Getting back to zero just about, but I keep talking about the front end as we price out rate hikes at the ECB. We do fewer here at the Federal Reserve maybe. Do we build that back out when Chairman Powell speaks a little bit later? That's where my focus will be. My focus right now in the commodity market. We talk so much about crude. We need to talk about soft commodities as well, Tom, the ag, so to speak. We all know the stats for Europe. It depends on Russian crude. About a quarter of its crude comes from Russia. For the global economy, Tom, a quarter of the wheat for the global economy comes from 2 places, Russia and Ukraine. Look at that move right there, up 7%, Tom, and taking things back to highs we haven't seen in over a decade.
And it feeds on itself in that to move a tangible like wheat, you need oil. So they're inextricably linked to each other. I think that's underestimated, John.
And Lisa, when you start to think about the consequences of this, the economics, the politics, the instability of those two wrapped together, can get messy quickly.
And how are they going to get those supplies? Where are they going to get them from? And if the euro is depreciating, how much more is it going to cost them elsewhere?
That Deutsche Bank note was fascinating, wasn't it?
It was.
The inverse correlation between crude higher, euro weaker, the vicious cycle of higher inflation, weaker growth, and what on earth does the ECB do with that in the mix?
Especially because a weaker euro means more inflation. They want less right now, and they need to import things from other places that are not denominated in euros.
Deutsche Bank saying it's inflicting damage on the Eurozone economy right now, and the ECB needs to do something about it. We'll catch up with Deutsche Bank in about 60 minutes. That's the cross-asset price section. Your single names this morning. Let's say good morning to Romain. Good morning, Romain.
Hey, good morning, John. Yeah, the moves in commodities, obviously a big player here right now as far as some of the individual names. That war in the Ukraine causing a lot of investors to look at the volatility in the commodity space and wonder if that's going to be beneficial to the bottom line or whether it could be a value trap. But at least for right now, a lot of folks seem to be bidding some of these names up, with aluminum at a record high. You're seeing Alcoa higher here once again on the day, up about 3%. You talk about some of those soft commodities like wheat, safflower oil, corn, big export products coming out of that Eastern European region. Nutrient shares higher by about 2.6%. Big maker of fertilizer here. They talked a little bit yesterday with Bloomberg News about some of the disruptions of a lot of the ammonia, potash, and other nutrients coming out of that Russian region, saying that these disruptions, at least in the short term, will continue to push prices higher. And keep an eye on the oil services stock. There was an interesting note yesterday about Schlumberger, actually the worst performing of the energy stocks over the last couple of weeks, primarily because of its outsized exposure to the Russian economy here. Citi actually said that it had the highest exposure, higher than Halliburton, higher than a couple of the other names. Those shares, though, higher here on the day after some new sell-side notes coming out today saying that this company could also potentially be a beneficiary. And of course, with all the disruptions going on in the energy space, that's putting a renewed focus on renewable energy. Of course, electric cars, EVs, a big component here of the Biden administration's plan. We did get some word here from Ford about the separation of its two businesses. One, the EV business, the new business that's going to basically be the Ford Model E business, and the old legacy business, the Ford Blue business. Now, when I say separation, they're still going to be under the same umbrella. There's not going to be a spinoff that a lot of investors had anticipated, but they will be run as two distinct units here, allowing the company to focus here on that EV rollout. That's going to put a lot of interesting focus back on GM and its cruise business. They did finally name a permanent CEO. Ken Vogt, who actually founded that cruise business, going to be stepping back into the CEO spotlight after some disagreements between the previous CEO, Dan Amon, and Mary Barra over whether that business should be spun out. Those shares higher, Tom, by about 1%. And keep an eye on the retail space. Nordstrom did come out with earnings. They were good, to say the least. Those shares up a whopping 32%.
Saw that from Target yesterday as well. Romaine Bostick, again, the close this afternoon. Emily Rowland with us right now with John Hancock. She's co-chief investment strategist. We get a view from Boston here on conservative money. Emily, it's a gift. Price up, yield down. Do you reallocate out of full faith in credit?
Yeah, Tom, we're continuing to emphasize intermediate term, higher quality bonds in the U.S. It's actually been an area that we've been focused on in our recommendations for quite some time. We want to be there right now. We've seen an economic growth climate which is slowing. Clearly, there's a lot of cross currents going on right now. Stagflation's now in the mix, as we can see with this relentless rise in commodity prices. And we've clearly seen a bid for that part of the market. We are really thinking about risk management right now. That's going to continue to be critical. We're being very careful about the way we're traversing in other areas of the credit market, particularly emerging market debt, where there's going to be a lot of spillover here from sanctioning, self-sanctioning, et cetera.
Okay, that sounds like John Hancock gloom. Let's get down to the math of it, oh wise one. And I know you did this at Boston College. Let's go to the R squared. Do you run conservative money now R squared to the index, or do you have to be more idiosyncratic given war?
We have to be extremely thoughtful here. And this market's been incredibly challenging because it feels as if, the odd safety trade has been energy and cyclicals and deep value, and other parts of the market, like quality stocks, have underperformed. We think that there's an opportunity here to add to those positions. We see, again, an economic growth climate that's slowing, but still positive. We're nowhere near recession right now. PMIs we saw over the course of the last week, still well above 50 here. We see an earnings backdrop, particularly in the U.S., where earnings revisions are positive. In this type of environment, we want to allocate money to quality growth. We want companies with great balance sheets, a lot of cash on their balance sheets, good earnings stability as we continue to see this play out.
Does that count for Europe as well, or is that just a U.S. type of positioning?
We want to be really careful about the way that we're sorting through the European market, in particular areas like non-U.S. value stocks, which do have a lot of that cyclical exposure, particularly around financials. We want to be thoughtful about that. In Europe, we want to really emphasize quality. So again, it's sectors like technology and healthcare, which have really strong secular growth stories and some upside potential here based on better earnings prospects. So being thoughtful in Europe is really going to be key here. Emerging market equities are another area where you want to be thoughtful, but there's an interesting tailwind there, which is that Chinese policymakers are actually stimulating, which is helping their market.
Emily, how much are you actually moving around allocations right now amid the sea of uncertainty?
We aren't, Lisa. It is so hard right now to focus on the intermediate term, and that's exactly what we're trying to do. There are tons of cross currents that are impacting markets. Again, it's about playing a little bit of defense, thinking here a lot about risk management, but also focusing on the intermediate term. We see, again, an economic climate that's solid but slowing. We see an earnings environment that's supportive, but we see a lot of challenges here in terms of the choppiness of a Federal Reserve that's trying to hike rates into a slowing growth environment. That's going to be a big challenge, particularly as we watch the data over the coming months. The Fed's in a position where damned if you do, damned if you don't. If you do, you obviously risk inverting the yield curve. We're under 40 basis points this morning in terms of the 2s, 10s. But if you do, you risk really continuing this inflationary spiral that we're starting to see play out in the market. It's a really difficult, really challenging environment here for the Federal Reserve.
Emily, are we going to see use of cash that is normal? How would you assume corporations adapt to this? And I don't mean use of cash like dividend, share buyback, but I use it even as corporate issuance and the rest. What is going to be the use of cash forward when this crisis ends?
Well, I think corporations are doing a lot of work right now. You all have reported a lot about, ESG and how companies move forward with that. You've talked a lot about, how we think about the huge changes that we're seeing as a result of this geopolitical crisis. So I think there may be a lot of investment in those areas. I think there's going to be a lot of consideration here as we move forward in terms of where those investments take place. Is it moving supply chains back here to the U.S.? That's one element that we're watching really closely. That's going to take big investment. Is it responding to higher wages as inflationary pressures build? I think what we'll see is a war on margins as this year continues, and that cash on the balance sheet is going to start to get deployed in different areas as those margins become harder to defend.
Emily, always wonderful to hear your voice. Emily Roden there of JH Investments. Thank you very much. Some reporting I want to catch up on and get everyone up to speed with. This comes from TASS, a Russian state-owned media operation, saying that Russia, Tom, is worried about the risk of direct conflict with NATO, going on to say they hope that NATO has the good sense to avoid that conflict. The latest headlines out of Russia. In addition to that, on OPEC+, the meeting just started, and according to a delegate, they've already agreed to raise oil output by 400,000 barrels a day in April. Widely expected, won't really make a dent with what we're seeing right now, Tom, at 109.70 on WTI and 3.110 on Brent.
111 on Brent, and I'm watching it on a micro basis here. You can do that on a Bloomberg, and the fact is oil is bid up here. And maybe, John, it's even that delay to April. April seems forever away as well. I would go to the great work, John, of Javier Blas publishing yesterday, detailed dynamics on oil. I know we've got Amrita coming up. And in the bottom line here is this is a lot harder to do to bring on supply than everybody's talking about.
This is really complicated in practice, Tom. You mentioned Amrita Sen of Energy Aspects. I was just reading through her note just there. This is the quote. Most European majors are not touching Russian oil. She goes on to say, spiking freight rates and war insurance premiums are significantly complicating transactions. Lisa, you've picked up on this too. Here's the quote from Energy Aspects. Several ship owners have reportedly been unwilling to make bookings from the Baltic or Black Sea due to the lack of war insurance. The situation's changed and they're struggling to keep up.
Basically, even if you don't necessarily put sanctions on, you have put sanctions on because of the uncertainty and some of the calls from leaders around the world to do more, and thus the uncertainty about the future and what will happen if you have Russian oil and all of a sudden it's sanctioned. How do we move forward in this kind of environment? How do you trade oil when you have no sense of how inclusive Russia will be?
111.50 on Brent coming up. Amrita Sen of Energy Aspects, then later 8:30 Eastern Time. Why Deutsche Bank thinks the ECB might have to think about intervening in this FX market. Euro dollar 111. David Folkers Landau, 50 minutes away. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Western military officials warn that Russia's invasion of Ukraine is entering a new phase. They say it will be more deadly time for the country's civilians and its army. Earlier signs are that Russian commanders are abandoning the approach of lightning strikes into cities. Meanwhile, Russia says it has captured the port of Kherson on the Black Sea. Ukraine's government didn't confirm that, but had said that Russian forces were advancing on the city. In his State of the Union address, President Biden vowed to confront Russia over the invasion of Ukraine. He warned Vladimir Putin that the war would leave his country weaker and more isolated. The president also said that his top priority would be to fight rising prices. And speaking of rising prices, inflation in the Eurozone has risen to an all-time high. Consumer prices jumped 5.8% in February from a year ago. The rate exceeded expectations in the region's four largest economies. A core measure that excludes volatile components also accelerated, reaching 2.7%. And it's a historic reorganization of one of the world's oldest automakers. Ford will split its fast-growing electric vehicle operations from its legacy combustion engine business. Last week, Bloomberg reported that Ford CEO Jim Farley was considering a split. Farley said today that the reorganization will give Ford startup speed and unbridled innovation. And Major League Baseball has cancelled opening day after owners and players failed to agree on a new collective bargaining contract. Commissioner Ron Manfred scrapped the first 2 series for each of the 30 teams. Players are unhappy that payrolls have shrunk 4% since 2015. Global news 24 hours a day on air and on Bloomberg Quick Take. I'm Ritika Gupta. This is Bloomberg.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
The Omicron variant and the latest wave have an impact on not only consumer trends, but your business. And do you expect the booster shots to make a difference?
Yeah, booster shot will be making a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida. And I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that a peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
The capital markets can really help the shift to sustainable and decarbonized global economy. What are you noticing in that as ESG is now the buzzword literally everywhere?
It is definitely the topic of conversation in most meetings I have with company CEOs, with investors, with industry groups. It's amazing.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
What we have seen already
from Vladimir Putin's regime in the use of the munitions that they have already been dropping on innocent civilians, Mr. Speaker, in my view, already fully qualifies as a war crime.
A war crime, the words of Boris Johnson, the British Prime Minister from New York City. Good morning. Futures positive 0.5% on the S&P and the Nasdaq, up 0.5% also. The move in crude, it's a wow move, up 6.5%, 110.16. That is WTI, that is not Brent. Brent, a couple of dollars higher, I believe, Tom, with a 112 handle right now.
Yes.
I'm looking through the contract table, Tom. CT Go on Brent on the Bloomberg terminal. Just looking at some of these prices, TK, you look at where we are right now on the May contract at 112. Then go out to next year, take the June contract in 23.86. They call that, Tom, super backwardation. Just unreal.
That may be backwardation, but it's also an original time and an original crisis. We have done everything we can to bring you informed guests on these many topics of war, and an informed guest on oil, on supply, demand, and indeed on international trade is Amrita Sen, founder of Energy Aspects, out with a spectacular note on the realities of what we're reporting. Amrita Sen, I learned a long, long time ago to have immense respect for the trust of the system, and that trust is the basic idea of letters of credit. Tell me how letters of credit are going to work now, next week, into April, or to the point of backwardation that John Farrow just talked about.
Yeah, it's the best question I've been asked. I'll tell you that much, Tom. Because, the problem is, exactly like you said, there is no letters of credit right now. Nobody is willing to issue refiners, any buyers with letters of credit because of the banking uncertainty. Now, what does it look like in a week's time? It's hard for me to say. However, I will say this, the U.S. in particular, but even some European countries are fearing oil prices, gas prices being so high is going to hurt the economy, so they want to carve out exemptions. They need to be very specific and clear about these exemptions. Once those exemptions are announced, then letters of credit can resume again with those certain banks, and you can see some trade start up. But right now, it's complete paralysis.
Amrita, in the meantime, OPEC Plus agreeing to raise oil output by drumroll 400,000 barrels a day in April, according to a delegate. I mean, that's nothing, Amrita. Javier Blas on Bloomberg Opinion saying the situation calls for emergency measures. What are those emergency measures?
Yes, the 400,000, we all know that in reality is going to be half of that because most of these countries don't have the spare capacity. Well, emergency measures, we saw the IEA releasing 60 million barrels of SPR yesterday night, and prices rallied by $6 on the back of that news. Just tells you, I've been talking to traders, and they're like, well, if you really wanted to make a difference, you needed 200 million barrels. But that's not happening because we don't have that much oil.
What's the pricing mechanism here, Amrita? You've got some people saying this is a completely tight market where people can't get physical delivery, and other people saying there are some oil companies that are taking advantage of this and kicking up pricing. Which is it?
It's the former. I mean, look, yes, it's not that the oil isn't there. The Russian oil is there, but if you don't want to touch it, then you don't have that oil. I think it's very important to understand, particularly for Europe, this is very short-haul barrels. Now, if Europe needs to go and get something to substitute for Russian oil, say, let's say they get U.S. oil or West African oil, the sailing time is a lot longer. So they will be left with the period of no oil coming to Europe, and that's why you're going to get refineries suffering. That's why the ultimate solver mechanism is high prices. Demand has to come down.
Well, but Amrita, the reason why I ask is because people have been arguing for example, the U.S. to support the shale industry, to support the domestic energy industry. And other people have come out and pointed out, you know what, they could actually increase production dramatically. They're just not doing it yet on their own volition. What's your view on that?
Again, I mean, it's a tricky one because, yes, they are not doing it because shareholders are making them return money, right, to them because they've been loss-making for a decade. Yes, absolutely right. But they are also they're trying to send a signal to the Biden administration because the Biden administration ultimately wants to transition to a green energy. And a lot of the measures, more medium-term measures that they are taking doesn't encourage a lot of drilling in the U.S. And that's the conversation they want to have, saying, okay, if we're going to drill right now, get more oil out, but we also want that certainty that we can continue doing that in the medium term.
Amrita, what you just said is so important just moments ago. Essentially what you said is 2020, spring 2020 in reverse. And I remember when Jeff Curry of Goldman came on with Tom and I on radio, and he said, basically, we need to breach storage capacity. And once we've done that, you could see negative prices. And everyone was like, wow, negative, that's ridiculous. And then we had negative prices. That's what's happened. You need to reverse engineer that for me and help me understand, Amrita, if it's spring 2020 in reverse, how high do crude prices need to go to destroy demand? How much more higher from here can they go?
That's exactly it. This is COVID in reverse, 100% accurate. We have never tested this. We went to 147, 148 in 2008. That's not what killed the market. It was the credit crisis. We can easily breach 150. We have genuinely never tested what price do we need to be if the economy is still okay to really curtail global growth. We could be really talking about numbers. We've, 170, 180. You could literally be picking a number right now.
John, can we go nerd here?
I think we're trying right now, Tom.
Amrita said, is oil a Giffen good?
A big chunk of it is. Yes,
we've never tested it.
Yes, we've never tested it.
Yeah.
And it's inelastic, right? You're coming out of COVID. You still want to travel.
John, you like that?
I did like that. I mean, the number there, 170, 180, is what we could be testing here. Amrita, we need to continue this conversation. Come back soon.
Thank you, and let's
carry it
on.
Amrita Sen of Energy Aspects. Tom, spring 2020 in reverse. And when you start to think about that dynamic, you've got to think about the unthinkable, because the unthinkable in spring 20 was negative prices. Amrita's talking up 170. Potentially higher than that. I'm not saying that's where we're going, but if that's what the analyst community is saying, Tom, spring 2020 in reverse, then we could be in for much higher prices.
We got David Fokerts-Landau and Lawrence Summers coming up, and they know their microeconomics, John, and it's real simple. Jeff Curry taught microeconomics at the University of Chicago. That's the place we're in on these supply and demand dynamics, the slopes of these curves changing within war.
Futures up by 0.5% on the S&P. Crude, Lisa, 110.33.
I'm still just discussing this in my head. I'm having a little discussion here about COVID in reverse and just remembering negative prices and just looking at the opposite and thinking, is this a temporary shock? What are the reverberations of that?
It's really difficult to figure out. I think we're all doing this in real time.
You said 170, right?
That's what Amrita suggested.
She said, pick it out of your hat. I mean, honestly, people have been saying that. How do we even begin to understand this? This has never happened before, John.
Amrita essentially said the same thing. We've not tested this before, and perhaps we're about to test it. From New York City this morning, good morning. Tom Keene, Lisa Brambis and Jonathan Ferro. Futures up 0.5% on the S&P, up 0.6% on the NASDAQ. Yields higher by 3 basis points on 10s to 175.65, unwinding the move lower in yesterday's session. Crude up to 110.28, up by 6.6%. Heard on radio, seen on TV. For our audience worldwide, this is Bloomberg.
We know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus Omicron variant still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines will work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
The contagion channels for Russia now are heightened global uncertainty and commodities.
This could just exacerbate inflation, exacerbate supply chain woes.
The inflation here is broad-based and becoming sticky.
I think we're all trying to figure out what's going on now.
This looks like this is going to be a rupture that lasts for years.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. A most interesting day, to say the least, here. The crisis continues, the war continues, and the markets continue to price in the change of the immediate and, John, out to the future as well. Oil leads the way this morning.
The crude unbelievable, and the comments from Energy Aspects moments ago, Tom, fascinating. Amrita Sen, it's spring 2020 in reverse. In spring 2020, demand collapsed and we needed negative prices to stabilize the oil market. This time around, Tom, how much higher do prices need to go to destroy demand and stabilize the market again? Because supply right now, not in the picture.
112 on Brent crude. John, I've got a fancy chart, which is an inflation-adjusted Saudi Arabian called Saudi Light Oil. And there was a spike, I should say, of $161 just for a cup of coffee years ago. And you and Amrita were talking 170 as a test.
Amrita said 170, maybe even higher. We've never tested this before. It's truly original, as you might say, Tom. Russian companies, who wants to deal with them at the moment? This line just came from ING. I think this is so important. They've decided not to do any business with any Russian companies. Tom, that is not just a stance based on sanctions. That is a moral stance as well.
And this is the Dutch conglomerate. It's a huge roll-up, John. For those in America and New York, this is the roll-up of Furman Cells a while back. And what's so important to me here, John, is this is a bank that has had the flag out for frontier economies and global for decades and decades. To hear that announcement.
It's got to be the number one question you ask of leaders right now, the C-suite. We caught up with Jamie Dimon at JP Morgan this week, and he referred to himself as a patriot. He abides by sanctions, and if the US government tells him not to do something, he won't do something. A law-abiding citizen, okay, we understand all of that. The number one question for them is not just about sanctions. It's, do you have a moral obligation to step back from doing business with Russian companies given what's happening in Ukraine? I'm not advocating for the answer to that. I'm simply asking the question. ING have made that call, Tom, decided not to do any business with Russian companies.
Part of the speech last night of the President of the United States, Lisa Bramwitz, and you've lived this. You're in Fargo, Lisa, and you need to go out and get a quart of milk. Sometimes you drive 200 miles. I mean, what is this gallon of gas going to do now in America at $5 a gallon?
Well, let's take what Amrita Sen was talking about, right? We don't understand exactly what price things have to get to for it to actually crimp demand. Well, what does that mean for economic growth, right? I mean, if we're testing that type of strategic analysis, how far do we have to push the idea of U.S. momentum? And frankly, how does Jay Powell today deal with this when how much control does the Fed policy actually have over gas prices?
John, I'm going to go to the data and the havens here right now. Euro Swissy was a 101 handle, truly stunning, strong Swiss franc. We pulled back from that. Ruble, I'm going to round up to a 112 ruble, shocking. And the ratios, John, in America, I think have been underreported. The 10-year real yield of a negative 1.00 just touched for a moment here in recent hours.
A big turnaround in yesterday's session, just a monster rally we saw in the Treasury market, in bonds throughout the whole of Europe, in gilts as well. We've got a turnaround at 4 basis points on 10s right now, 176.33 on crude. The rally of yesterday, we build on that, up by almost 7% now to 110.50. But that headline gets my attention, Tom. It gets yours, it gets Lisa's. I just want to reiterate it again, just to pick out a key word in this too. Decided not to do any new business with any Russian companies. How that actually plays out in practice in the near term, Tom, will be interesting. But they're certainly taking a stance over at ING.
And of course, the write-downs there if they stop doing the old business as well. Right now, on your equity market, Sam Stovall joins us, Chief Investment Strategist, CFRA. Sam, wonderful to have us with us today. Sam, I want to talk very carefully here about how corporations will adapt to war and crisis. What do you believe the American big corporations will do?
Good morning, Tom. Well, I think first off, they will toe the line and do whatever they can to, in a sense, sever ties with Russian countries. But at the same time, I think they're going to do whatever they can in terms of trying to reduce costs of transportation and the direct or indirect effects of higher energy prices. Lisa was mentioning earlier about what kind of a number can we put on the kind of demand destruction. And I remember our economist, David Weiss, from many years ago, telling me that every $10 increase in the price of oil takes off about 20 basis points of real GDP when it's in there for a while. So, that's the kind of pressure that we're likely to be seeing on U.S. GDP growth this year.
Well, Sam, do we have to take down our estimates for corporate earnings? You hear what the analyst community is saying in the commodity market. They're basically saying we need to destroy demand. That's the only way we stabilize this story. What are people saying in the equity market? Do we need to pull down earnings forecasts?
Well, the earnings forecasts have been coming down, just as the numbers have been coming up for 2021, now close to about 48% year-on-year increase. The estimate for 2022 S&P 500 operating earnings is about 6.5%, down from well above 7 at one point. So we continue to see the full year estimate come ratcheting down.
Do you have to assign a lower multiple on top of that as well, Sam? Are you comfortable with this idea the Fed's not going to do as much as people thought they would?
Well, I think you do have to assign a lower multiple. There is a minus 0.5 correlation between the 10-year yield and the PE on the S&P 500. We started this year at about 23 times. Now we're at the upper end of the range of PE ratios from 1.75 to 2.25. So I would tend to say that really the question is, do we stop at the top end or do we go toward an average or even lower? So I think that's the question the markets are fighting with today.
We were speaking earlier this morning with Emily Rowland of JH Investments, and we asked her, are you doing anything right now? Are you actually making any trades? And she said, it's kind of hard to. Not yet. There is so much uncertainty as they rejigger some of their allocations. Are you in a similar place?
Well, in a similar place in terms of trying to decide whether the 4,300 level holds on the S&P 500. If it does not, and if we do enact that reverse, that head and shoulders pattern to the downside, combined with a Fibonacci retracement level, that points to 3,800 on the S&P 500. Yet, if you are an investor, and let's say specifically an income-oriented investor, it's hard not to start licking your lips thinking about the dividend yields that are becoming increasingly attractive. So I'm telling clients right now, look for stocks that have favorable CFRA investment rankings, favorable 4 or 5 stars, that pay a dividend yield of about 3.25 or more, and that have above average quality rankings according to S&P Global. So looking at companies like Amgen, believe it or not, Blackstone, ConAgra, Kraft Heinz would fall into those categories, as well as several others like OneOak, Pfizer, and Whirlpool, believe it or not.
Sam, the biggest story of the moment right now really is what's going on in the oil and gas, the market story, I should say, of the moment. How are you gauging, and we talked about this, how you looked at the increase in gas and the ramifications for the economy. How are you backing into those assumptions right now? What kind of oil price are you putting as possible scenarios?
Well, as your prior guest said, this is COVID in reverse, so maybe we can call it a DIVIC environment, which is COVID spelled backwards. I'm basically saying that, nobody knows for sure how high oil will go. Our estimate is that oil might end up peaking in April of this year once we find that most of the tension related to Ukraine has subsided. And so I would tend to say it's really more of a short-term phenomena that we will have to sort of grin and bear.
Sam Stovall of CFRA. With so much to work through, futures up 0.4%. Sam, thank you, sir. Just to go back to that quote from the Dutch banking giant ING Group, it read as follows in a statement: "We have decided to not do any new business with any Russian companies." They go on to say they'll also, quote, Lisa, waive fees for transactions to Ukraine for personal customers in all our retail markets until further notice, to allow people to send money to loved ones. Yeah, this is moving quickly, and a growing sea of companies around the world are making moves on their own to isolate Russia financially and economically, even without further sanctions. At what point, though, is this in anticipation of some move from nations, including the U.S. and European alliances? How much is that going to have to come for them to persist with some of these self-sanctioning actions? Well, that's the banks. Let's talk about the energy names. BP, Shell, then Exxon in the last 24 hours pulling out of Russia too. The one last big player standing that I can see is Total. Total saying no new investments. What about existing ones? BP has made a major sacrifice with Rosneft before they've been told to. Total is hanging in there. Yeah, although Total has come under a lot of pressure. I mean, how many people have said, what's going on? When do you have the other announcement about what else you're going to do? And so you wonder at what point, when you talk about ESG, at one point the G starts to play into things and shareholders start to make noise. There is a chance, Tom, of course, that this settles down. And to go back to Amrita Sen's note on commodities, Tom, and to highlight the problem at the moment, several ship owners have reportedly been unwilling to make bookings from the Baltic or Black Sea due to the lack of war insurance, the complications around handling Russian crude. We told we get a carve-out over the weekend, Tom. That's what we were told. In practice, in the near term, it's difficult. Can they iron that out in the coming days and weeks, or is this the status quo now, the new normal? I think you bring this up, and we mentioned this, John, at the top of the show. We're getting a dearth of information from Kharkiv, Kiev, and also from Mariupol on the Black Sea. We're in an information blackout on what's going on in Ukraine, and you've got to believe that extends these announcements. Brent Crude, 112, coming up. Greg Valliere of AGF on the President's address to the country. From New York City, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. President Biden vowed to confront Russia over the invasion of Ukraine and warned Vladimir Putin that the war would leave his country weaker and more isolated. In his State of the Union address, the president tried to show U.S. solidarity with Ukraine by inviting Congress to stand in support for the country. Democrats and Republicans and Ukraine's ambassador stood and cheered in a rare show of unity after a year of bitter divisions. And the president spent less than 10 minutes discussing Ukraine before turning to the economic hardships of the pandemic. He pledged that his top priority would be to confront rising prices. And in an unexpected move, the president urged people who have been working from home to return to their offices. Meanwhile, Russia says its forces had captured a port city on the Black Sea. The Ukrainian government hasn't confirmed that, but said overnight that Russians were moving towards the city. Oil has extended its relentless rally. Prices went over $110 a barrel in London and New York. Meanwhile, delegates say that the OPEC Plus coalition has ratified an increase in production of 400,000 barrels a day. That move was, of course, expected. And it's a historic reorganization of one of the world's oldest automakers. Ford will split its fast-growing electric vehicle operations from its legacy combustion engine business. Last week, Bloomberg reported that Ford CEO Jim Farley was considering a split. Farley said that today that the reorganization will give Ford startup speed and unbridled innovation. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon, which is what we need to do.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
month's jobs report caught everyone off guard.
A massive upside surprise.
Just an astounding number.
The most stunning miss I've ever seen.
This Friday, count on Tom, John, Lisa, and Mike to get you the numbers and analysis you need fast.
A labor market that looks increasingly tight.
The economy is shaking off this pandemic.
And that's going to continue to keep the pressure on the Fed.
The February jobs report. Everything you need here on Bloomberg Television and Radio.
The message from Europe is clear. We will stand up. We will not look away when those fighting in the streets for our values face down Putin's massive war machine.
Roberta Metsola there, the European Parliament President from New York. Good morning. Futures up 1/3%. We fade a bit here on the Nasdaq, up 0.2%. Yields higher 5 basis points, 177.53. Look out, crude. Just for a moment there, that was 112 on WTI. Never mind Brent, 111.96. Back through 112, up by more than 8%. Upside surprise on payrolls. The ADP report, to be specific, comes in at 475. The estimate, 375. This ahead of payrolls. Your estimate on Friday, 403. And just before this number dropped, Tom, Citigroup published, and they said this: we strongly disagree with yesterday's pricing out of rate hikes. To the contrary, we expect the most durable U.S. economic implication of geopolitical tensions, what's playing out in Russia and Ukraine right now, to be more inflationary pressure and consequently more aggressive monetary tightening. Andrew Hollenhorst of the team over at Citi, Tom.
I'll go with that. And James Bullard may be alluding to that 10, 20 days ago. But, John, what's so important to me is the x-axis. It's not only the inflationary impulse higher, witnessed Europe this morning, but everybody's length of time is just exploding out to the right.
Does demand get destroyed, Tom, by what's happening on the screen right now? Brent at 113 and WTI at 112.
Well, we will see. Right now, with futures up 14, I don't see, John, do you see much movement in the bond market off ADP?
We've come up a little bit. 178 now on 10s, up 5 basis points, and equities have faded just a little bit as well. Nothing major, but it's there.
Yeah, we're going to have to see. Greg Villiers with us right now with AGF Investments. And Greg and I noticed very quietly an important article, and this is Helene Cooper and Eric Schmidt in the New York Times today. And Greg, to me, it was imagery out of our childhood. And it was dead bodies in snow. It's not a pretty sight. We don't see it much on cable TV, and certainly we haven't seen it there. And James Stavridis is quoted, a good friend as you are of this show. He says something dramatic is happening to the Russians.
Yeah, this is really a staggering development to see accounts of Russian soldiers surrendering, laying down their arms, to see corpses strewn along the sides of roads. The numbers in this New York Times article are astonishing, of fatalities and major injuries on the part of Russian soldiers. So Vladimir Putin not only faces a depression with a D, he faces the prospect of thousands of funerals back in Russia in the next few weeks.
Did the president address this in a manner that was truly bipartisan last night?
Yeah, I really thought it was. I mean, on the extremes, both left and right, I guess there'll always be criticism. But I think that the bipartisanship on Ukraine was sincere, and I think that's a rare plus for Joe Biden.
All right, so he's talking about the issues both internationally and domestically. Do you think that he handled inflation well, given the fact that, yes, there might be some resolution to this invasion, and we hope it's very soon, but clearly the ramifications for oil are causing some pretty widespread ripples?
Yeah, there's not a lot he can do, Lisa. I mean, he can say we're going to get our hands around the gridlocked ports in L.A. and Long Beach. But I thought, frankly, the big development in what he said last night was a clear shift to the center. The left-wing stuff wasn't working. They faced a terrible election in November. So he barely mentioned Build Back Better. He rejected totally the idea of defund the police. And I think he tried to appeal to a more centrist group of voters.
Okay, so he tried to appeal to a centrist group of voters as his approval rating plunges to the lowest in his presidency. Is it enough to change the conversation heading into midterms?
I don't think so. If Ukraine turns out to be a glorious victory and a huge setback from Putin, maybe Biden gets some credit. But I think the big issue still for most voters is the economy in general and inflation in particular. And the inflation story, whether it's energy or grain, which has sort of been overlooked, I think an awful lot of commodities will continue to rise, and that's not a good story for Joe Biden.
Well, how does that story change, Greg, in midterms to Labor Day and into October to the election? All of a sudden, John Farrell, this is the first time I've ever said this, and that we're really looking at a sustained inflation scenario beyond the distance. All of a sudden, we're going to be there, aren't we, Greg?
Yeah, and you raise a good point, Tom. Most studies have shown that attitudes, public attitudes, tend to harden by summer before an election. So even if inflation starts to look a little better in September or October, I think it's too late to help Biden.
Greg Valliere of AGF, thank you, sir. Just working at Bloomberg to take us down to March 10th. March 10th, of course, is when that next CPI print comes. I'll bring you that estimate, Tom. The estimate so far, 7.8%. Not many estimates are in right now. I only have 3 on the screen. Morgan Stanley being one of them at 8%.
John, help me here, because you've been better on Italy, Belgium, and the rest of it. But the basic line is every inflation survey we've seen has come in above the survey.
Particularly in Europe. Still getting upside surprises, Tom. Yeah, I'm with you.
I mean, I think that's where we are. And I'll be honest, John, I see it within, my old amateur view of real estate like everybody else, you. And I'm never below 59th Street, John, so I don't know what real estate's like near you. But, the bottom line is I believe real estate's still going up.
Don't you have to use 58th to enter the building, Tom?
No, I go in through 59. I have a special entrance.
Right. Special entrance. Looking at futures, up a third of 1%. Lisa, I know you've been following this story over at Gazprom. So this is the Russian state-controlled energy giant. There are some coupon payments, some principal payments as well coming due out of Russia in the next few weeks and months that we need to keep an eye on. Already in the process of settling a $1.3 billion debt due on Monday. So this is how it reads at the moment from the team here at Bloomberg. The company wired the cash on February 28th to the settlement bank, which will probably release the funds on March 4th, a person familiar with the matter said. Now, the second piece of that line, Lisa, is the important piece of that line.
Yeah, the idea here probably going to release the funds, because we know that Russia has banned the release of coupon payments to foreign investors. And then you have companies that want to remain part of the system, right? How do you deal with this if you're a company in Russia, and how do we evolve post this crisis to a new regime?
So just to be really specific, what they've banned are coupon payments to foreigners on local government bonds. And this is a dollar payment. So we need to be really careful about this, Tom, in the coming weeks and months, just to be really on top of the detail.
Well, we're on top of the details, but I want to be top of the data. Brent crude, 6 cents. From 114, John.
112 at WTI. There's a lift here. We're up more than 8% on crude now. 111.92. We need to break down some data with Mike McKee. Look ahead to Chairman Powell, who we've barely discussed today, and then catch up with Deutsche Bank in a couple of seconds. David Folkers-Landau, just around the corner from New York. This is Bloomberg.
It's almost the end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, But many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada. Tapi nggak kayak dulu. Kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu. 200 ya. Kalau dulu sih ya nyampe ada 1 juta, 1,5 itu nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
As a company grows, there are more challenges. What do you worry about the most?
The market opportunity for us is enormous, and so our challenge is to continue innovating, driving, and pushing ourselves every single day to go after the most attractive profit pools in this incredible global beauty and wellness market.
$20.11 highs on crude. Futures now at 0.4%. Crude looks like this. WTI 111.30, up by 7.6%. With some breaking headlines on Chairman Powell. Here's Mike McKee.
Good morning, John. We have the prepared text from the Fed chairman, and he basically confirms what everybody on Wall Street is betting on, saying with inflation well above 2% and a strong labor market, we expect it will be appropriate to raise the target range for the federal funds rate at our meeting later this month. He does not say by how much, so you can still guess about that, although investors have priced out the idea of a 50 basis point move at this point. Powell goes on to repeat rates first. Reducing our balance sheet will commence after the process of raising interest rates has begun and will proceed in a predictable manner, primarily through adjustments to reinvestments. And assessing the economy, the chairman notes that the rapid spread of the Omicron variant led to some slowing in economic activity earlier this year, but now cases are declining and the slowdown seems to have been brief. The labor market, extremely tight, employers having difficulty filling openings. An unprecedented number of workers are quitting and wages are rising at their fastest pace in many years, he says. And inflation, as he suggested earlier, increased sharply last year, now running well above the longer-run objective of 2% because demand is strong and bottlenecks and supply constraints are limiting how quickly production can respond. He doesn't say the word transitory, but he gives you the impression that the Fed is still buying that argument. And finally, he brings up the invasion of Ukraine. He actually mentions it in his opening remark and then brings it up later in the context of the U.S. economy, saying the near-term effects on the U.S. economy of the invasion of Ukraine, the ongoing war, the sanctions, and of events to come remain highly uncertain. Making appropriate monetary policy in this environment requires a recognition that the economy evolves in unexpected ways. We will need to be nimble in responding to incoming data and the evolving outlook. Basically, what I had suggested earlier on the early edition of Surveillance, he's going to give us details on what the Fed's going to do without giving details because he doesn't want to get locked into anything with all this uncertainty out there.
Mike McKee, thank you, buddy. As always, Tom, they don't want to make a forecast, but guess what? On March 16th, they have to release some forecasts.
They're going to have data dependency to that point, and of course we see it now with a 10-year yield up 5 basis points this morning. This is a joy. Lawrence Summers scheduled to be with us here, the former Secretary of Treasury. But before that, David Folkerts-Landau joins us to say he's chief economist of Deutsche Bank, barely describes his contribution to economics, and I think of Michael Dooley, David Folkerts-Landau, and Peter Garber and their important research on intervention of 2 decades ago. DFL, you and others at Deutsche Bank are talking very seriously about a need to intervene here. The weak euro intervention of another time and place was 85 cents, 90 cents. Now you're talking intervention at 110. Why is that?
Well, it's a question of how to control inflation without doing too much damage. And the easiest way and the most effective way to do that would be for the European Central Bank to raise rates or to find some way of talking rates up and indicating that that's what they will do. You'll recall that when they went negative in 2014, the dollar appreciated from somewhere around 136 to 110 in a matter of 9 months. And so any move now to increase rates and to signal that they will be going positive would precipitate a very, very quick dollar depreciation, which would, of course, be great for inflation within Europe, which will be one of the main problems they will have given what's in the pipeline now.
Let's go to Rudiger Dornbusch and Ken Rogoff. They would suggest a less coordinated intervention will not be effective. Do you see this as a singular EU effort, or would it be coordinated?
There is not a chance in the world that we will get a coordinated intervention, even in times like this, with a door on Europe's doorstep. Those days are gone. I think not even a direct intervention for the sake of moving the exchange rate is something that I think the ECB would do. It's more a question of indicating concern and changing the tonality around that rather than direct intervention. I think that's just not in the cards right now.
So what would they have to say? I mean, is this basically them coming out and saying there are no rate hikes on the horizon? We're going to continue all of our emergency purchases in full for a prolonged period of time, and we have your back. Is that basically the idea? I mean, that would weaken the currency. It wouldn't necessarily strengthen it. So what could they even say?
No, I think they would have to go back to the narrative of saying that we will raise rates this year because inflation is our top priority and our main objective. And that that'll be reflected, hopefully, in their inflation forecast. And we have inflation in Europe somewhere around 6.5% for this year. And that number just cannot stand without being confronted with the policy. They should admit that, they will undoubtedly, and say that we will now start thinking about moving this year, and rather than pushing it further out.
Well, would that be enough, though, David? And the reason why I ask this is because we've got an increasing number of analysts and economists coming on and saying we're getting to the point where central banks lack the ability to really influence inflation and even growth, given some of the exogenous shocks. Do you think that that will actually make a difference, a sort of tighter verbiage, at least, from the ECB at a time when the economy is getting hammered by some of the pressures from the invasion?
No, there's no doubt. If it went for the exchange rate, that raising rates themselves, it would feed slowly through the economy, of course, to impact on demand, impact on credit availability, and things like that. But the exchange rate impact will be dramatic and it will be fast. So that's why I said at the outset that the best tool for them available is to talk up the exchange rate as best as they can. They will do that by giving the market greater certainty and greater conviction that they will raise rates and that they will think in terms of moving towards a positive depo rate this year or certainly very early next year. That certainty is important. And I think that you would see an immediately beneficial effect for the exchange rate and immediate feed through inflation. It would make it much easier for them to macro manage the economy.
David, ruble to 113, Brent crude to 113 as well. That's just by convenience. And the answer is these are shocks to the system. As they filter through to the balance sheets and to the write-downs to come, is commercial banking in Europe at risk?
No, not at all. I think commercial banking in Europe has improved tremendously in terms of quality of balance sheet, quality of earnings. So I don't think that's an issue. Now, clearly, like any other industry, these shocks will affect the banking system. But in terms of a serious impairment, I don't think that's an issue. But basically, there are two big forces in Europe right now. One of them is the inflationary impact of oil price, energy price increases, and what that will do to aggregate demand, to production, manufacturing, and that's clearly a big shock. But on the other hand, you have to remember, there's also a massive positive demand shock coming from the rearmament in Europe, and particularly in Germany. We're talking about 100 billion, not all in 1 year, obviously, but the amounts of money that are now in play, particularly the early the quick disbursement coming out of the European funds, are such that this is a very serious stimulus. So these are the two forces. On the one hand, you have the deflationary force coming from the energy price increase. On the other hand, you have the stimulative force coming from the fiscal expenditure, which is close to as much as the Americans did, not quite, but it's a very, very significant impulse.
What is the significance of Euro 116? Long ago, far away, and you were directly involved with this, was the pricing of a euro in a much more peaceful, maybe an ancient time as well. If we see intervention, if we balance off against strong dollar, it's not 1978, it's not the financial crisis as well. Here we are at 111. Is 116 the fair value of euro?
No. Ultimately, once the ECB indicates credibly that it'll move positive on the depo rate, and that increases, we would expect the euro to go right through 120 into the 130s. So it'll be a dramatic change, just the way it happened in 2014 on the other way around. And that's something we're quite confident about. So there's nothing special about 116. It is, in fact, a lot higher than that.
Regardless of what the ECB does, your comments on fiscal spending and, frankly, Germany's pledge to actually meet that 2% or more target for military spending is really notable. Do you think that because of some of these fiscal expenditures, that talks of stagflation in Europe are perhaps overblown?
Yes, they're definitely overblown. I think that when I look at the press and I listen to what everybody's saying, the impact of that additional expenditure will be quite dramatic, because it will support manufacturing all across, and it'll be spent very widely. And also the money's coming out of the Recovery and Resilience Fund, the quick disbursements there. For instance, Italy is already on the way to spending 6 billion just for income maintenance to cope with gas price increases. That is income immediately. And so we will see a big fiscal impulse coming from that. So my sense is I do not expect that the Ukraine and the subsequent price increases in oil and gas and commodities, agricultural as well, will have more than 0.5% impact on the European on growth within the Eurozone. Not much more than that.
What would have to happen? What would have to happen, David, for you to rethink that, for you to think that perhaps the impact of higher commodity costs will have a greater effect on the prospects of growth?
There is a 700-pound gorilla in the room, and that is if Nord Stream 1, the gas pipeline, gets disrupted. In other words, if either the Europeans are no longer able to or want to buy the gas and oil from Russia, or Russia cuts them off. Either way, that will be a very, very significant shock. Europe gets 40% of its gas from Russia, Germany more. If that gets cut off, then you will have to see some form of prioritization. Households come first, industry comes last, and you will have a very serious recession in that case. So that, I think, is something that you can sort of see it playing into the market now. Some people, and what might drive this is, surprisingly enough, is social media. This is the first major war that we see all around the world in social media. The Russians attack Kiev, which they will shortly, and other cities. Everything that goes on, you will find per video around the world. That will create enormous pressure to stop buying oil and gas from Russia. And if that gets cut off, then I think we will see a much more significant impact in Europe than we've seen so far.
David, thank you, sir. As always, David Folkers-Landau there of Deutsche Bank. Some really important points on Europe and the risks, the tail risk around the story of the moment. Crude right now, 111.60 on WTI. Tom, 113.44 on Brent.
Yeah, there's a lift to them, and they are discrete and separate. John, can we agree that Chairman Powell really didn't move the markets? I got a little bit of a lift in yields, but that's it, right?
No, for me, he doesn't want to make a forecast, Tom.
Yeah.
They're going to put out a dot plot on March 16th. They've got no choice but to make a forecast. In a couple of weeks.
I'm going to say this, John, in a very, very challenging year, and that I don't have good attribution, but that's what happens in a war zone. But the social media feed, as Dr. Folkers-Landau mentions, the importance of it is remarkably grim off the Sea of Azov at Mariupol. We do not have direct attribution on that, but that's something to pay attention to in the morning.
It is ugly. Just getting some reporting from Sky News, Sky Sports, on the situation with Chelsea Football Club. Roman Abramovich seeking 3 billion sterling, a 3 billion sterling price tag on Chelsea. The bid deadline, Tom, middle of March. This is how quickly these asset sales have got to move.
Oh, we'll talk about that. That's important. That is a huge
Coming
asset.
up on the Open, Katie Kaminsky, Chief Investment Strategist at Alpha Simplex, will do that in about 20 minutes' time. From New York, this is Bloomberg.
What do you think is the impact of the Prime Minister on the market?
As Mr. Suzuki, who is the Financial Services Minister, he mentioned at his own press conference, and share buybacks is widely used to return profits to shareholders and improve ROE. And how to share out the profits from growth is totally the decision of the management of each company after carefully taking all the stakeholders into consideration. And I believe Mr. Kishida has a quite cautious stance on the uniform regulation of share buybacks. And I think because he is giving a consideration to each company's individual circumstance and decisions.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg. Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the House for business's greatest minds.
I'm here at the Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. There's a big celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. there are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
From New York City.
We're in London, in Sydney,
In San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
To recap the headlines.
You do not want to miss this
How
story.
are you thinking about those dynamics?
Clearly, the Ukrainians have done very, very well up to this point, but it's the first inning in a 9-inning ball game. The Russians will just continue to hammer and hammer and hammer away at you in places such as cities. They don't worry about casualties. They don't worry about collateral damage. They don't worry about infrastructure.
The infantry officer and artillery commander of the United States Army, General Kimmett, retired brigadier general there, in a stunning interview yesterday on urban warfare. I really recommend that you take time to listen to good General Kimmett. As we speak to David Folkers-Landau and others about this crisis and how it folds into the American economy now, Lawrence Summers joins us. He is at Harvard University and, of course, a former Secretary Treasury of the United States. Professor Summers, thank you so much for joining this morning. I want to go back to McChesney Martin and Truman. I want to go back to McChesney Martin and Johnson in war. What should a chairman of the Federal Reserve System do in a time of crisis in war? Stay on plan or amend to the politicians?
Let me just first say that I was very proud of our president last night. I thought the way in which he spoke to the stakes of what we're involved in Ukraine, what we're involved in, and what the obligation of the United States is to uphold world order at a moment like this was profoundly important and profoundly inspiring. We're going to talk about economic and financial stuff in just a minute, Tom, and I'm happy to do that. But the real stakes are in freedom, in the maintenance of civilization, in the resistance to naked aggression. And history is going to remember that a lot longer than it's going to remember anything with the Fed funds rate.
Larry, I think a lot of people would agree with you. Oh, I'm sorry, so sorry. But to follow on, to really get to the Fed funds rate, what is the cost the U.S. is willing to bear when you talk about exactly preserving those freedoms and then the Fed's role in trying to tamp down? Have they already missed the boat on that?
I think the Fed's been very late. I think it's been way behind the curve. And I think one of the reasons why it's costly when you're behind the curve is that sometimes you can get shocks that make it harder for you to act. But I don't think the Fed has any alternative now but to mount a strong response to inflation at a time when I think we are